the stock are trading anywhere in the range of 17 times to 22 times if we look at the broader range of generic companies today on a 1 year forward earnings basis or a 2 year forward earnings basis, which I don't think is pretty expensive. And today anyways the stocks have got affected because of the narrative around how the US finally evolves in terms of the policy environment. And I would say that's a good opportunity because what these companies sort of gives you is maybe a slightly better visibility around generating 14-15% kind of growth, decent cash flows, 16-17% ROC, which I don't think many sectors they have the potential to sort of showcase this kind of prospects over a longer term. And so I believe that this would be definitely an opportunity. And as I said, depending upon the time horizons, I would imagine that investors can look at this category, but should have the patience to go through the volatility and hold on to these businesses.
What are the sectors that you're liking best right now, Vineet? Where, if there is an up move and most of the, think about it, your biggest pain points in your results season are behind you, geopolitical tensions off for now, tariff war in abeyance. So all things considered, most of the headwinds have come off. So where do you now come in and buy?
So, see, directionally, I would say that a couple of segments are definitely looking good, but on the valuations front, by and large, I don't see great, attractiveness broadly across the board. Maybe 10-20% of the stocks could look extremely attractive, but otherwise, I don't think broadly the markets are showing that kind of attractiveness. But still, I would say from the cycles when you look at the long cycles and businesses which can actually see turnaround, I am sort of maintaining this view that consumer as a category is likely to see a turnaround coming out of the I think 2-3 years of a slow stretch which they had seen. That's one. And as we are seeing maybe interest rate also sort of coming down, the non-banking financial lending institutions are something which I'm looking at, because I believe for them they have they will have the benefit of the lowered interest rate much more as compared to the banks. So that's one category of focus. The other has been specialty chemicals. While the stocks are not very attractive now, they have recovered from the lows, but still I would say that the business momentum there is sort of picking up, and any kind of let's say policy environment which emerges which makes India as a country is, relatively attractive versus China. So some of the segments where we are competing, I think those will surely see benefit. Maybe it is specialty chemical, textile for that matter. So I think those will see some benefit. And lastly, when I'm going through the results this quarter, some of the mid-cap IT companies are showing a good promise of visibility of earnings, and valuations not particularly very cheap, but I think from the relative outperformance they should do well is the overall thought process.
All right, thank you so much, Vineet, for speaking with us this morning. And it's going to be a good morning, as we can see from the pre-open rates, which have just about hit. Of course, all of those will settle, but about 400 points up on the Nifty is what the pre-open action looks like. Yes Bank there on top of the pops. This was expected, but then you had a finalization coming in post-market hours. I want to just quickly look at what SBI is doing pre-open before we get to our big brokerage call this morning, because good for SBI as well. So 2.5% up. Watch out for the bank Nifty. But time for the big brokerage call this morning. Jefferies has maintained a buy rating on Navin Fluorine. They've hiked their target price to 5,280 rupees. Varsha, of course, numbers look good, but is there more to what has excited Jefferies?
Yeah, so upside potential of 15% is what we are speaking about. Now Jefferies has came out with this report on the back of solid performance that Navin Fluorine has given year on year on the back of CDMO business. Now what they're saying is that new product startup in agrochemical and in CDMO provide strong visibility for the earnings growth when it comes to Navin Fluorine, and they've signed a new contract with Chemros providing interesting upside of optionality. Now this agreement with Chemros, the product addresses addresses the growing demands of advanced data centers and AI hardwares for high performance growth. And the strong growth potential of this product could provide upside to current estimates, what Jefferies is saying. For specialty chemicals, the slower than anticipated, the number there were, the specialty segment only grew 1% on the back of slower than anticipated ramp up of a newly commissioned plant supplying to Corteva was the reason, but management expects this plant to reach 50% capacity utilization by the end of FY26, and Navin Fluorine has successfully secured new contracts in CDMO and HPP despite a challenging demand environment. Now what Jefferies is projecting is 35% EPS CAGR over FY25 to 27 despite the certain demand environment, and the projected strong earnings growth visibility justifies the premium valuation that they have been given to.
Varsha, so is Navin the lone ranger out here which has done very well on CDMO, or are there other stocks which have stood out? Because we remembered in the morning we spoke about Ami Organics as one. Are there others which have had a very good CDMO performance which has been standing out like Navin Fluorine's? Okay, I think she's lost her earpiece, which is why this has happened.
That's a good guess.
I was wondering what's at the end of that sentence. I think she has lost her.
No, it was the earpiece, I guess. But
Yeah.
you know, guys, so it'll be interesting. Kush Bora, maybe you tell us about the charts for some of these, because I know that Ami Organics did well. Navin Fluorine has certainly done well. Fluoros was okay. Divi's probably okay. So what do you think of these stocks, especially Navin and Ami?
So I think Naveen's a very clear
So it's
outperformer.
3.5% up today. आप आज भी लोगे?
नहीं, आज नहीं लेंगे.
आज नहीं लेंगे,
Because
okay,
एक अच्छा momentum चल रहा था. You'd seen some consolidation, some profit booking on Friday, but other than that, the momentum was already on. Now what happens is that most of the run perhaps might see some sideways consolidation. So while the outlook remains positive, you're better off buying it on dips. Let's say closer to the 4600 mark. But on the whole, very strong. If you have it, no reason to sell. Continue to hold with a trailing stop loss. Ami Organics is an interesting one because it's gone sideways for the last 3 to 4 months now, except for some volatility here and there. I think a good move, more sustained move will be above the 1200, 1205 mark, where there is some supply pressure that comes in. So I'd have Ami Organics on the list, but I'll buy once the 1200, 1205 zone is taken out.
Okay. Out of the stocks that are performing on the back of numbers, pull up something like a Birla Corp. It was on my list. It's up about 20% after the pre-open session. I wonder if it'll hold. But the question really, Nirav, is would you buy at these levels, one, based on the fundamentals, which were quite good, or would you prefer certain other cement companies which have already posted numbers?
Well, I think the entire cement pack has posted a very good set of numbers. I think while the realizations have been quite flattish, but I think it's the cost side where most of the cement companies have been concentrating. The raw material prices have been largely benign, but I think it's the power and the fuel cost where the companies have been working on. They've been working on the logistics side, and most of the companies have internally set targets that they want to reduce a certain amount of, for example, Ultratech, they have set a target of reducing their overheads by 300 rupees per ton. And they've already achieved 84 rupees reduction in the overhead cost. So I think these are the things which are working for the companies, for the different companies. We have Ultratech, which has reported an EBITDA of 1,270 rupees per ton, which is quite impressive. And most of the companies have been working in that direction. So despite the fact that the realizations are flat, the profitability has been quite high. The EBITDA margins have been very impressive. So I think this is probably what is working for the cement companies. Hopefully with the revival in the demand, we should see better realizations, which will lead to even better quality earnings going forward.
Okay, you want to come in on some of these names, Kush? In the cement pack, Birla Corp certainly 20% up. I wonder if that will hold. What's the view here?
That's a done deal. If you get that kind of a gap up opening, you're better off booking partially and riding the momentum. Even if it does not hold, it's still perhaps a good move on this one. We're constructive on Orient Cement and ACC. These are two stocks that we've discussed in the past on the show as well. And yes, cement stocks have had a good run. Might see some sideways consolidation because of the seasonality factor and the run that they've had. But yeah, keep your eyes on Orient Cement and ACC in the coming days.
In terms of some of the power players that I'm seeing with a bit of move up there, Suzlon and Inox Wind, Triveni Turbine, any insights over here, Kush, on what you like?
Inox Wind is something that we like. It's had a brief phase of consolidation, now seems to be moving higher. Also, Triveni Turbine coming out of consolidation had a resistance around the 540 mark, breaking above that. So if you don't have a position, perhaps you could consider buying now with a stop loss just under the 540 mark. And on the upside, you're looking at 565, 580 also as higher levels.
Okay. Keep an eye out. Kush likes Inox Wind, and Inox Wind Energy is the stock that you could also look at because there's a swap in the ratio of 10:632 shares, and therefore there might be an arbitrage. Haven't looked at it recently, but there might be an arbitrage in case you want to kind of play that. But 28 seconds to go. Watch out for Birla Corp. Alex had spoken about Navin Fluorine as being the likely stock of the day, but he highlighted Birla Corp, and that is fast turning out to be likely the biggest mover of the morning. Sharp uptick in the pre-open session. Let's see if it continues further. There might be a downtick on Swiggy maybe. We'll try and mark some of those stocks, of course, once the market opens. But per se, watch out for upticks in almost everything else but pharmaceuticals. Here come the first rates on the index. Well, Nifty 50 1.8% higher, so strong move at the start, 435 points. Banks are up 2%. I want to bring up IT and Pharma once. IT is up 2% as well. Pharma, 3%, 2-3% down maybe. That index should come up on your screen. Okay, actually, it's not that bad a reaction, must say. Just about 1.5%. So the rising tide is helping. Mid caps 2.78%. Small caps 3%. Guys, can I say that I brought the good luck for the markets once I came back? Let's pull the heat map up on the screen and let's just see. So Sun Pharma, Cipla. Actually, we're not seeing Dr. Reddy's react negatively at all. This is a big surprise. Yes, the numbers looked okay, the guidance looked okay, but the Trump post came in post all of that. Somehow, Dr. Reddy's is withstanding that, and some of the other pharma stocks also. We'll mark all of them, but Sun Pharma clearly bearing the brunt here of the selling pressure. What's done well? Adani Enterprises, Adani Ports, well, conflict ending, big moves into high beta stocks, both of them starting off very well. Geo Financial Services follows closely. There's Shriram Finance, L&T, Trent. I mean, this list per se is almost everything in the green, but sharp moves out there on the Adani Twins and Geofin on the upside, and Sun Pharma now sulking 6% down. What baffles me is only one thing. Yes, I know Dr. Reddy's came out with a good set of numbers, but if Sun is reacting 6% lower, I'm amazed that Dr. Reddy's is standing out. Maybe, just maybe, some pain to follow. Let's see.
Yeah, but the relative resilience, Neeraj, since you're saying you got back all the good luck when you were in the US, you should have asked Trump why he jumped the gun in announcing the ceasefire as well. All right, Adani Ent and Adani Port right on top. That's also the India proxy play, right? The win over there looking very, very clear on the screen, and 2.5% up on the Nifty. What a beautiful screen this morning. 534 points up and staying up, managing to keep its head above water and continuing to zoom. I just want to pull up the VIX very quickly before we get to the broader markets and all of the other key indices, the sectoral heat map, etc., because this is important. The drop in the VIX, the crash in the VIX is what you should be looking at this morning. Nearly 20% down. The VIX crashing over here. Remember, we closed Friday on a 22 level on the VIX, now about 20% down at 17.25. This is what is going to boost the markets as well and give it that kind of a strength. I want to pull up the sectoral heat map if we can, and we look at what the broader indices are doing as well. First, the sectoral heat map, what's working there. Remember, Nifty Realty had been beaten. That's showing some up move. The Nifty Metal also looking decent over there. The US-China Pact also helps in that sense. Nifty Energy looking good. It's all across the board, actually. You just have to see which is better. Pharma and healthcare there has got a touch of the Trumps this morning, as you can call it. So a bit of a pain point there, but overall the market breadth looking beautiful. Even Nifty Bank holding up well. Let's look at the small cap and the mid cap indices individually if we can. And the mood over there is very, very celebratory, about 3% up on the mid cap and the small cap indices, over 3% up on the small cap indices. Okay, let's look at a few individual stocks, and if we can pull those up and I'll follow through of what we are seeing. First, let's look at the Yes Bank SBI combination, because that was clearly news based, and Yes Bank 4.5% up, not bad at all. State Bank of India as a heavyweight will pull up the index as well, about 2.5% up. Then let's look at a whole host of result impacts, right? Because that's what we were seeing. Swiggy, poor results, about % down. Not too bad actually, considering how the losses have widened to over 1,000 crores. Bank of India, optically looking fine, but other income is what's padding the balance sheet, not massively down, and being saved, I suppose, by the overall euphoric mood. Navin Fluorine, good set of numbers, but no sort of huge celebration, at least in the opening bell. I think pharma stocks is going to be in focus. That's one area of weakness. Sun Pharma, as Neeraj pointed out, bearing the brunt. Lupin as well. Pfizer doing okay. Pfizer now at least in the green. Oro Pharma and Cipla also feeling some pain coming in. So we'll look at what defense stocks are doing this morning. Are they coming off? No signs of that yet. At least Bharat Dynamics, BDL, is about 3% up. HAL also up in the green, and so is Bharat Electronics. Bharat Electronics, one of the favorite movers in what we've been seeing. Look at a Zentech. Zentech, even on Friday, completely boosted. Zentech looking fab today as well. Obviously, we won't know the details of which company made what and where it was used in Operation Sindoor. We should not even ask those details, but clearly the street rewarding it. Hospitality is in focus because remember, as geopolitical tensions, regional tensions rise, hospitality was muted. Indian hotels, despite good numbers, were seeing quite a beat, quite a hit to the stock price. That's reversing sharply, 7% up. Lemon Tree about 6% up. I want to pull up some of the airline stocks as well, because that's the overall theme. Look at an Interglobe, look at a SpiceJet, all between 7 and 8% up this morning. So I would reckon that all of the stocks which were hit with the geopolitical concerns will reverse quite sharply, and it's looking like a fabulous screen. Alex, so much to talk about.
Yeah, I was wondering whether you would talk about the airline companies and, in fact, hospitality. I'm glad that you marked it, because those are really the outperformers in trade today. I find it interesting that ABB is up. I'm wondering if it continues to be up on the back of those numbers, and yeah, it is. So we will get an opinion on this in just a bit. But by the way, the realty pack also looking quite good. This is a pack that got beaten out quite substantially, and pull up something like a DLF. Mahindra Life is up about 6%. Prestige about 5.8% higher. Macrotech is up about 5.5%. Godrej Properties up 5% or thereabouts. Raymond, and there's an interesting development there that we'll speak about, of course, on the corporate front, is also up about 5% or so. Suntech Realty up about 5%. So playing catch up is this entire pack, because last week we pointed out this entire pack lost about 6% at the index level. Kush, I'm just wondering whether you see any opportunities here, because this is a pack that was beaten down, but they've covered quite a bit of that ground already.
Well, some of it, but this remains in a lot of pressure as well, and not just because of the last week's move. If you look at what's happened in these stocks over the last couple of months, they've not been able to break out. While you've had trends within a certain range where some of these stocks have actually moved higher, but somehow at higher levels they meet selling pressure. So I will wait for some of the key resistance levels to be taken out. So for the two stocks that you mentioned, for example, a DLF, I think on the upside you're looking at 690. I think that 690 to 700 band will prove to be a stiff resistance to cross. So unless that is taken out, I don't see very big moves coming on DLF. As far as Prestige goes, that number is 1400. This is one stock that is shaping up rather well, because it's had a good a month and a half of upswing, but beyond the 1400 mark is where you can see further upside. So while I remain cautiously optimistic on these, perhaps a breakout beyond certain these resistance zones will give further impetus. Up until then, they might remain a range play.
Okay. Well, yes, a bounce back. So Nirav, clearly, as Kush pointed out, a lot of stocks, real estate, hotels, etc., all of them have seen a decent bounce. Would you be a seller into any of these?
No, I think we would be buyers. As a matter of fact, we have been buyers into the hotel space. We like this space very much, and we've used this opportunity to add our positions. We continue to hold these positions.
No, sorry, were you referring to real estate or hospitality, Nirav?
Hospitality, hotels.
Hotels. Okay, okay. What about real estate?
Real estate, we continue to hold our old positions. We've not added anything.
Okay. All right. Gentlemen, thanks so much for joining in for the perspective that you gave and all the stocks that we discussed this morning. Pleasure speaking with you as always. Now, joining us right now is Purinju Veliath, the founder and chief executive officer of Equity Intelligence. Purinju, thanks so much for taking the time, and a pleasure speaking with you as always. It's a positive day for the Indian markets. There's cheer on the street. What's your perspective? Were you anticipating that this would happen as quickly as it did?
Good morning, Alex and the team, NDTV Profit. I think it's an amazing day. It's going to be, I think, the market might have started already. Now, more importantly, on a long-term basis, this is a huge victory for India. And many of our challenges are getting addressed in this, in this fight against Islamic terrorism. It's something, we have been clear winner with respect to many aspects of the war or whatever you call it. And most importantly, when it comes to investing and all, it has shown a tremendous success of some of our homegrown indigenous capabilities of Indian defense companies and organizations. This is, it has proven the mettle of these organizations and companies. And we are going to double down on this. There is no doubt about it. Especially, the kind of the precision and the accuracy and the professionalism of the operation Sindoor. It's something the world will be praising India, and our enemies will be scared of India. That's the kind of a situation which is the outcome of this whole exercise. Now, the S-400, what we used, the networking and integrating, a lot of software skills are required. India has done it indigenously, maybe perhaps after US, Russia and China. We have been the fourth country to do that. That's why we could effectively stop all their drones and the missiles. And this is amazing. And this is, when we say any act of terrorism will be considered as an act of war. So that we have established our stand. And this is going to help us in a big way for the future, the stability of the nation.
Yeah. You're making very, very good points, and we want to ask you about some of those more. But I introduced you as Purinju Veliath, and I don't know if I've gotten it right. My parents didn't teach me a lot of Malayalam, so please, you'll have to tell me what the correct pronunciation is.
Yeah, you are perfectly pronouncing it, Purinju Veliath. Yes.
Oh, thank you, sir. Okay, but tell me about the defense stocks that you were just referring to. And it is trial by fire, really, and the true test of the equipment that has been built, and it is a successful test. So would you be going out and buying even at these levels? Because some of these stocks have seen run-ups.
Yeah, there could be some temporary further big movement in this defense stocks, listed companies I am talking about, government and private. But Alex, we have to think beyond that. If you see the way these stocks have moved from the COVID low, it is something, an unimaginable kind of dream journey, dream movement happened in this kind of companies. And of course, there is no doubt we have a very long-term trajectory of growth for Indian defense stocks. Even our railway had, for various other reasons, the kind of development required and the growth required and growth trajectory ahead. But all these companies have gone up too much and beyond justifiable limits some point of time. And perhaps that rally went up to September, October of last year, 2024. Later, we have seen a significant correction in the overheated stocks, I would say, sector specific and some of the fancied sectors. So, but those things could be still valid. And if you see next 5, 10, 20 years, some of these defense stocks could be hugely, they can be very big, comparable to some of their US peers and, kind of positions it could reach. At the same time, it's very difficult to say, you can just go and buy our HL or B. So that kind of, it's not very easy decision. Maybe there could be some stocks which have corrected 50% and more, but they are still worth it. At these levels, they may be, values could be emerging. I was looking at some of smaller companies, but I don't want to tell any names. Like our Midhani or what is that, Apollo Micro. There are a lot of companies there. One has to be very careful, valuation, the quality of the companies. In this big 5-year bull run, the facts and stories about some of these companies, many of these small and mid-cap companies are exaggerated. There are vested interests have been playing behind and operators, and it's market dynamics is like that always. I'm not blaming anything or anybody. So investors are investing at these levels have to be very careful, about the valuations and try to predict the future of this. Now, maybe we are heading for a more peaceful times ahead. At the same time, I'm very confident our indigenous defense production is going to be tremendous. We could be big exporters of defense equipments globally.
Long-term story is there. Puranji, very good morning. Tamanna here, and great to speak with you.
Morning, Tamanna.
Yeah. So, just wondering how you were looking at pharma this morning. And I loved your commentary when we started on how momentous the last, 48 hours has been and with India's achievements. But for pharma stocks this morning, it's been quite a tough one after the announcements that Trump has made. Do you think that this is a space that you'll stay away from right now?
See, it's too early to really, come to a conclusion about Indian pharma companies in general. There could be some winners too. And it was, I think it's very, very, I appreciate Trump's decision or the administration there, they are bringing down the prices of medicines for the citizens. It's very important. They have been keeping it very costly. Some of the global pharma companies have been making extraordinary profits. So it makes sense to overall a policy decision, whichever possible way to bring down the price for the ultimate consumers. So some of the Indian pharma companies also could be, have to bring down the prices. I'm not an expert as it is, but I think we have to wait and watch. I am still bullish on many Indian pharma companies. We have Piramal Pharma is one of our largest holding. We have been buying it at double-digit, two-digit prices. So we are comfortably holding on to that. It's a CDMO contract company and very high quality company, a very big size company. So we continue to hold on to that company. And there may be some companies affected because of this, the cutting down prices in the US. So I have nothing more to talk about it. I'm neither bullish nor bearish because of this today's announcement by the
Are you
US
bullish
government.
on? Puranju, let's hear what you're bullish on right now. This is the time to bet on India. Ceasefire for now. Military superiority has been established. Result season not as bad as expected. Trump is looking like he's in the mood to make trade deals. So if you're setting yourself up for the next leg of a bull run, whatever that time frame may be, what should we buy?
See, not only, a military superpower we are becoming, more importantly, our whole focus, 99% of our focus of the nation, of the regime is to make economic progress. Of course, we have to take care of our safety and our integrity. There's no doubt about it. So in this journey of aiming and executing higher economic growth, our full focus is there. See the kind of the trade treaties we are making. We already did it with the UK, US, EU is under negotiation. We are doing it with Chile, Australia, Japan, many countries. I think around 10, 12 such treaties are being discussed, negotiated, and under progress. So all these things are going to help the so-called economic progress of the nation. And definitely, people buying into stocks, investing in equities, are trying to own a piece of businesses which are part of this process. And the Make in India, when Narendra Modi government took charge and the way they started, it is really working on ground. And without such big themes and systematic effort, very serious effort from the government, India would have been in a bad shape today. With so much of global turbulence, geopolitical issues, crises, we are coming out as winners in everything. And thanks to the fantastic professionalism in the government, our diplomacy, and we have shown to the world our mettle, and it will go much stronger going forward. So I'm not going to talk any individual stocks at this point of time. Today market is in such a volatility. But I would say, in spite of all these big corrections in the last 6 months, there are companies, investors have to be careful. They may not be having much growth. See, the earnings growth challenges are there in many pockets. So similarly, investors have to see that pockets of opportunities where things are in favor for the companies and the industries, not just for a month or a quarter. So look at next 2 years, 5 years, and 10 years. That's the only way we can invest at this kind of valuations in the market. It's a beautiful. India is still a paradise for cherry picking of stocks.
You said it. Purinju, on that note, thanks so much for joining us this morning, and look forward to talking to you again when there's a little more clarity, perhaps. Once another earnings season is done, maybe we'll get some more clarity. Thanks so much for joining us this morning. Pleasure speaking with you.
Thank you, Alex. Handsome boy.
Thank you so much, sir.
Were you blushing?
You can't tell because of my complexion, but
No, I can tell you are blushing.
we'll get to that in just a bit. We have Dr. Reddy's laboratories on the other side of this break. We're speaking to them, and this is an important conversation that you don't want to miss, especially in the context of what was announced by Donald Trump on pharmaceutical pricing in the US. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Hello and welcome to NDTV Profit. You're watching Earnings Edge, and with me today is Mr. M.V. Ramana, who is the CEO of Branded Markets, India and Emerging Markets at Dr. Reddy's Lab. The company came out with earnings with top line growing at 20% and PAT at 1593.9, a jump of 22%. Mr. Ramana, thank you very much for joining us on NDTV Profit. Sir, a jump of 20% in your top line numbers, PAT, profit after tax of nearly 1594 crores. Can you take us through the performance and what led to this jump in numbers for you?
Sure. So if you see what has led to these numbers, largely I would say is a double-digit growth that we have been able to achieve across all of the businesses. Very healthy growth, whether it is in the case of India, whether it is emerging markets, Europe, US, and on top of it, it was also about the NRT acquisition that we had in Europe, coupled with the inorganic opportunity. We have been able to demonstrate the kind of growth, but even without the inorganic piece, we have been able to do well for the year. across all of the businesses.
You have recorded a revenue of nearly 600 odd crores from NRT from the European markets. Is that the peak revenue that we can expect from NRT, or there is still room to grow that portfolio on a quarterly basis or yearly basis?
So obviously, we do think that there is room to grow because this product today, we are receiving it from Helion in a phased manner. We have just taken over the business in UK. It will be followed by Nordics and the rest of the markets. We have put together a team that is competent to take this product and grow it within the existing markets, but there is also opportunity to take this product into the other markets. So we feel good about how this transition is progressing, and we see growth in this product.
Can you take us through the US market? I was seeing your geographical revenues also jumped there. There was street expectation that Revlimid revenues can dip in this quarter or will taper down over the next few quarters. Can you take us through the US market and how Revlimid is doing in this market?
So Revlimid continues to be meaningful for us. Of course, as we get into the current financial year, you would see that the revenues would taper down in the Q3 for the generic Revlimid, which is lenalidomide. But however, as far as the US market is concerned, we have seen strong growth in the volumes, and we continue to launch new products. We have launched a number of new products in the last quarter. Expectation, of course, is to launch more assets in the FY26 as well.
How do you look at the pricing environment? Is it still challenging, competitive for you?
So we have not seen any exceptional price changes in the last quarter. So the usual price erosion that we would see in the business, we have seen it in the last quarter as well.
Give me a sense of the domestic market, sir. You spoke about the fact that you've seen healthy growth in the domestic market as well. What is the kind of growth levels that you're seeing in the domestic market?
So if you see the industry growth is in high single digit. If I have to break that up, it is a small, low single digit volume growth. Then there is a contribution from the new products, and there's a contribution from the price increases. In spite of that, India continues to be an attractive market. We have grown at 16% as compared to the market growth. India continues to be the most important market for us. And when I do look into what are the sources of growth, apart from growing our existing brands, for the last 2 years, we have been focusing a lot to bring innovations for the patients and the consumers in India. We have been able to launch some meaningful innovations last year that is picking good amount of traction. And within this quarter, we are expecting to launch the RSV vaccine that we have partnered with Sanofi. And of course, the product for the house dust mite, which we have just recently launched. So innovative assets along with our existing brands should help us to have a portfolio that would help us to grow in our identified therapeutic areas. Another area, if I can continue, that is also an important area for India is consumer health and the partnership that we have with Nestlé Health Sciences. The integration has been, has gone out well in the last financial year, and we expect that to also contribute. So overall, our aspiration to get into top 5 continues in India, and that is how we look into the Indian market.
So the growth you said was a combination of volumes as well as pricing that happened in the domestic market. Do you expect the similar growth to happen in FY26 as well?
So if I take the Indian market, I think Indian market should continue to perform into the next year, high single digit number. And of course, our aspiration is to grow much more than the market.
What is the kind of revenue potential that you see from the Nestlé partnership?
So we have a set of brands that we have got from Nestlé Health Sciences, and we have added a certain amount of brands to to the portfolio of the joint venture, and it should contribute a couple of 100 crores in FY26.
Okay, give me a sense of semaglutide, because you're one of the players who have filed for this drug in the Canadian markets, where the patent expiry is expected, and at present there are already 2 to 3 players in that market. So by the time you're launching this product, do you expect the number of players to increase there, and there's going to be a pricing pressure which may come in as well?
So as of now, we are having semaglutide regulatory process on in Canada and a few other markets. However, how and when we will launch in the markets would be based on the IP situation that we have on this product. We continue to work to see how we will bring this product to the patients, keeping in mind the IP situation on this product.
Sir, if you look at the entire financial year FY26, what could be the contribution of Revlimid in FY25? And as you said that by Q3 you may see some taper down in revenues from Revlimid. Is there a ballpark figure, or you can give us some idea of how the revenue taper down will happen?
So as I said, I expect the revenue taper down to happen in Q3. Revlimid is an important asset for us. However, we are working on several, I would say, growth levers so that we continue to grow the organization. As it happened in FY25, the base business growth. The second, of course, in terms of some of the critical, I would say, assets that we're working on other than the GLP-1s, the biosimilars in the form of abatacept to begin with. The third, of course, in how we would bring in more innovations to India and emerging markets. The consumer health portfolio that we have today, both in the branded markets as well as in Europe. And of course, we are also looking into opportunities on a constant basis as we are having a healthy balance sheet. So the aspirations continue to grow as we to beyond the generic lenalidomide.
Is it?
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
%11% uptick in revenues, EBITDA up about 10%. You could argue that some of the line items were in line. Net profit marginally lower maybe relative to what was estimated. Thermax is the stock we are focusing on. And before we get the management, let's get in my colleague Anushi to tell us about the highlights for the quarter gone by. Anushi.
Hey, morning Neeraj. So as you mentioned that the major numbers that we are looking, line items such revenue and margins are in line, while it's net profit where we have seen a slight bit of miss in terms of where the estimates were concerned. Now let's talk about the revenue growth of 11.6% that we are seeing, mainly growth led by the industrial infra segment, industrial product segment that we are looking at, along with chemicals that is there. In terms of our order book though, we did see about Q4 orders were down about 8% at 2,119 crore. But if you go back to the Q3 conference call, the the management did say that they expected around 3,000 crore plus of orders. So that is one bit of question that we need to focus on. If you talk about the overall FY25 order inflows, they were up around 11%, while the order balance was up around 6% at the mark of 10,693 crore. Now, if you talk about the margins and how the picture was over here, higher technology intervention cost of rupees 66 crore impacted the industrial infra segment that we are looking at. It's also the chemical segment profitability was lower due to higher input cost along with some change in product mix which we are seeing. Overall revenue growth was led by industrial products segment that we are seeing. Industrial infra was up around 4%, while green solutions and chemicals saw about a revenue growth of 4% and 36% respectively. So this is the overall picture that we are seeing for fourth quarter and FY25 in terms of where the Thermax numbers are concerned.
Thanks, Anushi. Thanks for that. And viewers, the lovely part about talking to Ashish Bhandari is that he calls a spade a spade. He's the Managing Director and CEO of Thermax, joins us right now on the show to talk about the quarter in the year gone by and the outlook ahead. Ashish, great having you. Thanks for joining in at the outset. I hope all is well. Some of the quarter, Ashish, I mean, did it kind of live up to what you were penciling in at the start of the quarter, or were there a few niggles and a few pluses?
So overall, the quarter was full of action. There were some things that lived up to my expectations, where we even did better than my expectations, to be fair. And there were two specific areas where the quarter did not live up to my expectations. I'll start with what did not work well, and I think Surbhi was referred to one of them. When we started the quarter, I talked about I would like to see 3,000 plus crores in revenue, 3,000 plus crores in orders, and 300 crores plus in profitability. On the revenue side, I'll come to that next. On the order side, we were far away from what I had suggested and predicted. And this is largely to do with industrial infra, where we have had a few big opportunities in the mix, and I'd expected some of them to start showing up. There was one particular order, which was 500 crores plus, which was high probability, and we lost that. And there were some others which were in the mix, which got pushed out to Q1. The second thing that did not work well was we have had a couple of new areas of technology intervention, particularly bio-CNG, which has been in the discussion before. That now we have looked to settle our books, come to some sort of baseline understanding of what the downside is of all the interventions that we want to do, and I can go deeper into this if needed. And for all the future interventions that we want to do, we have taken this as a one-time hit on our books. What worked very well was we did get cross 3,000 crores in revenue. And when we do that 3,000 crores in revenue, converting that into profitability and making sure that our backlog is good, we have shown a fantastic ability to do that. And you can see that despite taking this one big time hit, we were able to cross that 10% in profitability. Otherwise, our numbers would have been much, much better. How do I look at 26? I think the order situation is one that I have a close eye on, and especially on larger projects, which we would like to see. The pipeline continues to be good. So I expect a good Q1 and a good Q2 continuing. And even on the international side for projects, we have a decent pipeline as we look at this year. So and then I would like to see, sorry, go ahead.
No, please finish your point.
No, and then I would like to see continued good execution of the kind that we have shown last year, delivering revenues, converting that revenue into profitability.
Got it. Okay. So Ashish, I heard you twice talk about the order flows. One saying that some of them have been pushed forth to quarter one, but that you are keeping an eye out on the larger orders. So is quarter one going to be a series of smaller order win victories, and are there some numbers that you're working with? Or would you reckon you'll close some large orders as well?
There are a couple of large ones in the mix, but there are some medium ones which are 250 to 500 crores in the mix, and there are multiple medium ones. So, and those, I think we've closed one already. There's one more which is imminent. So there we are starting to get The 2s and the 3s, I would say. The 4s and the 6s are also in the mix, but that is towards the later part of the quarter. Yes, towards June and July, and but I'm expecting and taking those in our estimates for the first half of the year for sure.
Ashish, hi, good morning. Tamanna here, and glad to speak with you again. I just want to go back to that 500 crore rupee order that you talked about, which was brought that slide in, because in your Q3 con call, you've talked about a 3,000 crore sort of order book. Where is the, not substitute per se, but where is that gap going to be filled in with? Is there enough in the pipeline that looks like it will fructify?
Yeah, there is enough in the pipeline. Yeah, there is. The entire power sector in India is going through a resurgence. There are multiple projects on the power side, which over the last 2 quarters I've been talking about, and they're getting, many of them are getting closer to finalization. Steel, which is where we had the loss last quarter, but there are multiple other projects in steel which are also in discussion. And on the international side also, our pipeline is decent. So 3 areas where we think, and as we get into the later part of FY26, refining and petrochemical with the Bina refinery and even RIL and Nayara both going through projects, we will see a bit of resurgence there as well. But in the first half, it's power and steel and international.
Okay, in terms of your segments as well, this quarter, what seems to have really fired is chemicals in terms of revenue growth, even green solutions to some extent. Is this the big bet going forward?
So before I talk about those two, actually industrial products has been the biggest growth engine for Thermax. Yeah, every quarter after quarter, consistent growth, consistent profitability. And you can see this quarter as well, the profitability percentages were the best the business has ever seen. Yeah, so best top line, best bottom line, and consistent performance in terms of how it works its backlog. And this has been kind of, distributed across multiple sectors, across multiple industries, working through channel partners and the like, working internationally, all of that mixed in. Chemicals, I would say we did not do as well as I would like to see. Yeah, chemicals we would like to see growing much faster, well above 20%, not below 20%, and delivering that number profitably. We are investing heavily on the chemical side. We have added capacity. We are entering new segments. And we are adding base cost to develop sales teams and marketing and manufacturing capability for those new segments. So I would like to see that place chemicals grow much faster. Green solutions, because the base is small, will continue to grow. And even at the back end, even in areas like hydrogen, which show zero revenue right now, are all areas of major investments for Thermax.
I just want to talk for a second about margins. Not that there's some massive erosion, but there is to some extent, Ashish. Is that a function of higher input prices? Do you see this easing going forward? What is the kind of margins outlook for the financial year?
This is if you're talking about across Thermax. Yes. Actually, I'm very happy with margins. Yeah, we have shown if we take those one-time costs away, especially, I mean, you take last year, we had 150 crores in bio-CNG that were taken away. In our FEPL, our solar wind renewables business also, there were some losses. But the bio-CNG ones, if I just keep them aside, across all our entire portfolio, our profitability is inching up quite nicely, and in industrial products, going up much nicely. So happy with how we have done on profitability. Of course, in the aggregate number, would like to see us doing even better. And which is primarily to me is making sure these one-off, which are very much part of operational expenses, we don't see those hits coming in.
Got it. Okay, Ashish, unfortunately we are out of time, but I would love to maybe between this and the next conversation, talk about this bioenergy thing that you spoke about. Yeah. And maybe that gives us the chance to also talk about how is the capex situation looking like. So we'd love to talk about both of that.
And that's an important discussion as well. Look forward to having it.
Yeah, perfect. Thank you so much for this today. All the best for the quarter and the year, of course. Well, confident Thermax, I must say, on what the order inflow situation would look like for FY26 and maybe even execution, which of course I think stood out well for FY25. We take a break, come back, have an important market voice. Mihir Vora of Trust Mutual Fund Johnson to talk about markets, Trump, economy, and everything else. Stay tuned. We'll be back in a jiffy.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
$4,700 breached. This is Operation Bull Run going on in the markets right now, about 3% up on the Nifty, and with good reason. You know, everyone was wondering whether you're going to see a gap up and then a pullback. This is showing no signs of taking a break right now. The bulls are back, and I just want to pull up the advance decline ratio once before we get to our next guest on the show. Mihir Vora, CI of Trust Mutual Fund, is standing by. That's a beautiful skew over there. Advances to declines. Short sellers are going to be having a tough time today. Mihir Vora, very good morning to you. You know, we've had a very serious couple of days, 2-3 days as Indians. But what has gone through or come out clearly from an equity perspective, because that's what we cover and live and breathe, is the faith in Indian markets. Today, a resounding, thumping, backing of that as well.
Certainly, but this is not new, Tamana, because we saw even after April 22nd, when the incident in Pahalgam happened, we did see not only the locals continue to be buyers, but even FIIs continued the pace of buying, except I think for one day, which was last Friday. Apart from that, for almost 15 consecutive days, we have seen the FIIs come in and buy. So I think the whole faith in the India growth story is back. The reason why we did see selling for 3-4 months or 5-6 months in September, etc., was because of the dollar trade, and I think that's getting unwound. And the fact that India is now being seriously considered as an asset class, with a stable currency, good macro, and now of course we have proven that even geopolitically we are able to handle anything that comes our way. Only re-emphasizes the faith in the Indian markets.
Viewers, I don't know if we can pull it up or no, but if we can, there is a post on X that Mihir Vora put out yesterday. Yeah. And maybe we can pull it up, but I'll read out for sure the opening lines of that post, wherein Mihir Vora is saying that the plan by our enemies and their proxies to discourage global companies from coming to India by painting India as a country with geopolitical risks has backfired spectacularly. Mihir, you firmly believe that this whole India has come out smelling like roses, and rightly so, from all of that's happened in the last 4 or 5 days. What I would love to know is, though, that when you talk either to global companies or global money managers who might be interested in putting money into India, maybe through your AMC or otherwise, are they sounding resolute about all of this? Because India was a low beta market, India was a high growth market, and now India is coming out as a market on which the tape didn't get disturbed in light of a geopolitical situation.
No, absolutely. I mean, I haven't spoken to anybody in the last 4 or 5 days, but the fact is that we have seen FII money coming to the country in a big way in the last 2 3 weeks. The currency was amazingly stable in spite of all this turmoil. In fact, the Indian rupee has been appreciating for the last couple of months. So I think the overall external macroeconomic situation, the internal macroeconomic situation is I think absolutely fine with the RBI and the government going into growth mode. RBI supplying ample liquidity even during times of stress. I think it only shows the confidence that the government and the system and the retail investors have in the country, and that will rub off into FII interest because the foreigners will obviously look at the domestics, sense of faith and confidence, and that has been reassured, I would say, in the last few weeks of development.
Mihir, I'm just wondering, for those who have been sitting on dry powder, sitting on cash, because that was a lot of the conversation last couple of weeks, what is the best place to deploy? Everything today, of course, on an up and up, but you have seen a lot of key stocks and sectors coming off their highs. Where are you finding enthusiasm right now?
See, I think the maximum, correction we saw was in the high beta names, especially the pro-cyclical names in the financials, like the capital market link plays, like some of the smaller NBFCs, etc. Real estate also was in a bit of a correction mode. We saw some of the infra and the cap goods and infra and construction companies taking a beating in the last 4 5 months. So I think the risk of trade impacted those beta and cyclical sectors the most. And if we are seeing now a sustained uptake in the market or a sustained run, then I think these segments are the ones which will again start leading the pack. Only difference is, given the developments in the last few weeks, whether the budget continues to focus on infrastructure or some of it goes to defense is something that we need to see.
Okay. In terms of banking, let's talk a bit about banking. Numbers, a mixed bag for some of the PSU banks, but otherwise private banks doing okay. Bank Nifty, of course, up 3% today. Even this easing of this whole issue with Yes Bank, that has come to a logical conclusion. Do you think that's giving you more confidence in the BFSI space, and especially in private banks?
Absolutely. Not only this, positive development, but in general, we have been discussing, as you would remember, that the only thing missing in the banking and in large NBFC is credit growth. More on the banks, NBFCs were managing in their own niche segments, but the large private sector banks, the only thing missing was credit growth, and that is something that we are hoping that will come in the next few quarters. Otherwise, capital adequacy, the NPA cleaning up, that has all happened very beautifully in the last few years. We are starting with a clean slate, and as I said, the only thing that is missing is the growth thrust. And if the economy will grow at 6.5%, as is the consensus, then I don't see any reason why credit growth should not come back in the next few months.
Mihir, now we are starting to see, albeit a bit delayed, but things starting to move on sectors which were very, very quiet, right, for some time now. I think a lot of people anticipated cement to start performing. We're now starting to see price hikes of a meaningful nature in South India, at least, which is not believed to be the case. Chemical companies selectively, and at least the ones which have a CDMO presence to themselves, Naveen, Ami Organics, etc., starting to perform as well. Where is it that you believe the incremental buck is best placed at? If you were to distribute a rupee amongst sectors, how would you distribute it?
So, there are a couple of things that we must look out, and some of the positives which have come. One is, as I said, clearly credit growth in the financials is something that we need to look at.
Okay.
Because the capital market link plays will do well in any case because, there's, the high beta play in the market and the market sustains. But in the banks, we need credit growth. So that's one area that I'm, finding a good equation of growth versus valuations. Second event that we need to watch out, and which is very close, hopefully, is the deal with the US. Because that can impact a lot of sectors. For example, if you are talking about auto, ancillaries, pharmaceuticals, some of the IPR link plays, then the deal with the US will make a lot of difference. For example, if you are saying that there'll be very low import duties on auto and auto components on both sides, then some of the Indian auto component players, maybe not so much the OEMs, but the auto component players can tend to benefit. The second is, if we are saying that pharmaceuticals will be also part of the deal, then some of our API suppliers, some of the the generic suppliers can tend to benefit. Margins, I'm not sure, but volumes definitely can improve a lot going forward. So I think these are some of the events that we need to look at. The US trade deal is also a big deal. So in general, I would say that auto ancillaries, select pharma plays, the financials, and some of the utilities and the growth stocks in the utilities like renewables, etc. Those have also been beaten down. These are some of the pockets that we can see a lot of action. Chemicals, as you rightly mentioned, is definitely a play because we are seeing almost 2.5 years of margin erosion because of the China factor. And now I think we have bottomed out in terms of margins. And in the meantime, companies have already commissioned, a lot of companies have commissioned a lot of capacities. So we are looking at a situation where margins probably have bottomed out in the chemical space and we will see volume growth. So I think it's a good combination there also.
Okay. Mihir, what's the pushback here? I mean, now we've kind of aced, let's say, some of the key tests in the last few months, weeks and months. What's the litmus test? Is it a global factor which will, a lower tide which will carry down all boats along with it? Or could it be India dedicated? Maybe earnings, maybe slower earnings, maybe something else?
Neeraj, what we are seeing is that the first 2 quarters can be okay. The June quarter, the September quarters, it could be okay because last year's base was low. If you remember, the slowdown started in the June and September quarter because of lack of government spending, etc. So the first 2 quarters probably can carry us through in terms of YOY effect. But then we need the back-ended growth to come through. As I said, if credit growth does not come through, if private sector capex does not follow through, though private sector announcements have been good, so I'm not too bearish on that. I'm quite confident that private sector capex is going to pick up. So while announcements have been good, that needs to translate into actual on the ground, investments by the private sector. So I think credit growth, private sector capex, and discretionary consumption continuing to do well are some of the factors that we need to look at for the second half. So if that does not come through, that can be a cause for a downgrade.
I'm just wondering in terms of sectors, Mihir, how are you looking at IT? And, you mentioned in passing, but I think we should focus on it a little more. The US-China noises that we're hearing, we're still waiting to see what that trade deal looks like. And knowing both sides, they can reverse to a hostile position at any minute. But as of this moment, trade tensions easing, if US and China do come to an agreement, how are you looking at key sectors, including IT? IT on fire today?
IT, I think, is on fire because the US futures are on fire. But in IT, I'm still more positive on the mid-cap companies, which are likely to show at least 15-20% growth. But the large cap companies, even in a bull case, will probably high single digit kind of a growth situation, which, given the context that we are talking about high growth sectors in the domestics, etc., are not that positive. So IT has underperformed for quite some time. So in a day like this, you will see some short covering and stuff like that. But I don't think it's a structural story, especially the large cap IT. We would rather stick to the mid cap IT where we can do stock picking, which have specific business models.
Okay, so mid cap IT, but there is promise there. Maybe what seems to suggest, despite maybe in some cases you could argue that the valuations have become stiff now. I mean, persistent on the day of the results, I think was at 4,300, probably at 55, 56. Some of the others have moved up too. So that's an interesting one. Mihir, one question though, on defense, right? In some sense, this whole 5-6 days has brought out defense capabilities of India. And in a lot of cases, at least as per reports, completely indigenous defense, manufactured defense products used in the last 5 days and coming up trumps, right? So in some sense. So my question to you is, does this enhance the defense story in that a lot of talk was being done about how India will be able to export defense as well because of the size. Now there is proven capability and therefore maybe the export revenue for select defense companies might actually go higher.
Absolutely, that can be the situation. I think the constraint, especially for the PSUs, would probably be manufacturing capacity rather than demand going forward. So I see a lot of action happening there. I mean, you can't have a bigger proof of concept than this, frankly. So to that extent, I think we've been catapulted suddenly into the limelight about our domestic, indigenous technologies and how well we are able to integrate multiple systems, complicated systems, not only the local systems but integrate them with the global systems. So I think it's a huge fillip for the Indian defense sector as far as proof of concept is concerned. And I think the private sector as well as the public sector companies should come into the limelight and should do extremely well as far as getting orders from the global countries is concerned.
Favorites right now, Mihir, in terms of sectors and themes. A few days ago, we were talking about everything domestic focused because, to hedge your bets against external headwinds. Is that view also changing?
No, I think India's relative position has only improved versus the rest of the world.
Yeah.
So we continue to believe that India will grow faster than most of the developed and emerging market countries in the world. So this tag of fastest growing large economy in the world has only gotten stronger, I would say, because of this. And as I said, we just need to focus on our domestic execution, and I think the money will come in a big way for India.
Okay, focus on domestic execution is the key point over there. Thank you so much, Mihir, for speaking with us. Always a pleasure. Mihir Bora there of Trust Mutual Fund. All right, we're speaking with Aarti Industries just in a bit. The chemical company has posted a strong quarter. Net profits have beaten estimates, and it's reflected in the action we're seeing today as well. We will speak to the CEO and Executive Director, Suyog Kotecha, in just a bit. But before that, let me get my colleague Varsha to get us the highlights of the numbers.
Well, thank you for that. So, a company did post good set of numbers. Net profit did beat estimates. The revenue growth that you're seeing was led by higher volume across the segment. So, to speak on the volume numbers, if you see non-energy business volume grew 14% quarter on quarter, while energy business volume were up 21% quarter on quarter. But pricing across the value chain remain under pressure. Demand remains firm across most end user segments, but the agrochemical sector remains soft for the company. They have maintained their FY28 EBITDA guidance of 1800 to 2200 crore. On the JV updates, both their JVs, UPL, the JV with UPL and Aarti Industries is progressing well, and their JV with RE Sustainability, the technology finalization is expected or targeted in Q1 FY26, and the resource recovery capacity when it comes to JV with RE Sustainability, the resource recovery capacity stands at around 500 tons per annum and is targeted by 2030. Just on the con call highlights, they are targeting EBITDA range of 1800 to 2200 in next 3 years. Now the important point would be what they are expecting when it comes to FY26, because that's one year that investor will have focus on. The pricing challenges persist across product chains, especially in agrochemical, and the operating leverage and cost optimization initiative will actually drive EBITDA for the next 3 years, and the capex for FY26 is estimated to around 1000 crores.
Okay. Thank you so much for that. Suyog Kotecha joins us now. He's CEO and Executive Director at Aarti Industries. Mr. Kotecha, thank you so much for your time with us today. Let's just talk about some of the metrics that have looked good and some which haven't. Of course, net profit is a beat on estimates, but you're seeing a downtick there. So is the margins. Is this the agri-chemical business which is putting in pressure?
Well, I think if you look at the numbers from I think two lenses to look at it, quarter on quarter versus year on year. Of course, quarter on quarter, if you look at second to third and third to fourth quarter, has been improvement on all metrics, including net profit, including EBITDA. On a year definitely, the last year, previous financial year, fourth quarter was very, very strong. So compared to that, you will see some amount of downtick, especially when it comes to net profit. From an overall business point of view, demand remains firm. Even in ag, I think we are starting to see very good demand recovery coming across the board. And that trend is expected to continue. But as some of your previous speakers were highlighting, I think the pressure on the margin persists. We've practically bottomed out in terms of margin, so we don't see much downfall from here on the margin front. But the recovery is expected to take time.
What is the outlook on the margin recovery and the time frame that you're thinking of?
right now, I think if you take our next 12-month outlook, I think we are mostly budgeting based on volume-led growth. We have not budgeted yet margin recovery when it comes to next 6 to 12 months kind of time frame. We think given the extent of overcapacity in China and given the uncertainty driven by both geopolitics as well as some of the tariff-related issues, we are thinking that the margin recovery is potentially a few quarters away.
Suyog, hi. Good morning, Neeraj here. The last time that we spoke, I believe you had mentioned that it was difficult to predict what will happen in the next 12 months. Does the situation still stay as fluid?
Well, I think trends have started to emerge, but we don't
Positive?
know how the global positive so far, right? I think in the first quarter, for example, based on the US tariffs, there are certain value chains we have starting to see sort of decent amount of pickup on volumes from India to US. Similarly, demand across end markets, we see stabilization and at the same time growth as well, right? I think the only one trend, which is the margins at this point in time, still remains potentially at sort of kind of bottoming out kind of levels. And the recovery there is not visible in the immediate time frame. And as the US tariff situation is expected to also get further clearer in the next 3 to 4 months time frame, that will also give us much better visibility from this year's performance point of view.
Very interesting. But so if margins don't go down further from here, let's say there could be a recovery, maybe 6 quarters, maybe 4 quarters, let's say. But if they don't come off from this 13.5 number, do you reckon FY26 could be a year of revenue growth with maybe stable or improving margins, as the case may be, and therefore maybe better bottom line and top line growth at the very least?
Yes, I think so. FY26, the way we are looking at it is sort of volume-led growth.
Yeah, exactly. Volume-led growth.
And volume-led growth at a consistent margins compared to what we saw in the last 6 to 9 months kind of time frame. That's how we are planning for the year. And of course, we remain in the market. If there's opportunity to capture the margin uptrend, then we will do that. But right now, your characterization is right. We are looking at it from a volume-led growth year point of view.
But is it difficult to, let's say, give out a bare minimum volume growth number that you could do? Is the situation that fluid that you maybe can't?
No, I think right now we are budgeting for a double-digit volume growth.
But that's from 10 to 99, Suyog. So
of course, mid-teens is what we delivered last year, right? And this will be somewhere closer to that is our sense at this point in time. And if you look at our capacity utilization number across value chains, in most value chains we do have surplus capacity available. So that gives us confidence that if we are aggressive in the market, we can not only retain but grow our market share in many of these value chains. And that's what sort of gives us confidence to give volume guidance of double-digit kind of growth.
Let's take a look at what the outlook is on revenue and EBITDA as well. Where do you think that that kind of volume is going to come in from? You spoke about the overcapacity in China. Do those pressures continue in this financial year?
I think that pressure continues, and especially now with US tariffs announced, chemical is an industry where there are multiple steps within the value chain. As the import points in US get pressurized from a final product point of view, I think Chinese will be also forced to reroute not only finished product, but also intermediates. And which is where, industry has been highlighting to government, potential concerns of dumping of intermediates from China to India. So I would say that the overcapacity situation in China is not getting resolved. That pressure will continue, but we have also learned to operate in that environment now for almost last 12 to 18 months kind of time frame. So we know how to handle that situation at this point in time. If you look at, earlier part of your question was, growth for this and sort of next 3 years. I think we have been very clear in terms of where we want to go in a 3 years time frame. And broadly, there are 3 buckets of it, right? The cost optimization expected to deliver 150 to 200 odd crores, the volume and margin ramp up somewhere in the range of 350 to 550 crores, and the capex-led growth around 350 to 500 odd crores. And all of those initiatives are on track.
Is there, so that was the 3-year outlook which you mentioned in the call as well. Is there anything more specific you can give us for this year? Is there enough visibility there?
No, so I think we're not giving yearly guidance at this point in time. We're giving 3-yearly guidance, but what we are giving clarity on is which of these initiatives are getting completed and how are they progressing, right? So most of the cost-led initiatives will get completed during this year. And the impact of that partially should be visible within this year, as well as the full impact should be visible in the next financial year. And I think that should give us enough clarity in terms of how the journey from 1,000 odd crores to the 3-year guidance will happen.
Yeah. So, now I would urge you, my final question, and just maybe remove the hat of the CEO and ED of Aarti to somebody who's looking at the industry and a lot of moving parts. You yourself having a lot of products, plus there is China, plus European demand, so on and so forth, etc. What is the most predictable, to your mind, what is the most predictable trend in any set of products that you can forecast right now? You may well go wrong, Stuyo, because it's a very difficult thing. But your best guess currently for the next 12 months, 18 months, 24 months?
So I think there are a few trends which are very clear. I think wherever we have end-to-end value chains in the country and we are able to go to sort of N-1, closer to finished products or closer to products which are consumed by certain end application segment, I think we should see positive trend of India exporting to Western markets. I think that much we can say with the confidence, given whatever has happened in the last few quarters. I think people do want, the people keep talking about China +1, but I think that's something which is visible at this point in time. I think the second thing that is also increasingly becoming clear is that the wave of capacity expansion that we saw in the China over the last 3-4 years, that has got moderated quite significantly, right? So we don't see the same extent of capex happening in China over the last 12 months, and that will get further moderated in next 2-3 years kind of time frame point of view. So as the global demand picks up, at some point in time, this capacity, overcapacity situation will get balanced out. And in that context, the margin profile should start looking much better compared to where it is today. And third is that even most of the Indian players, right, I think did invest quite a bit over the course of last 3-4 years. And they are also now in this capex realization kind of mode. So from a financial metric standpoint, especially from a balance sheet standpoint, I think we should see improving trend over the course of next 2 to 3 years.
So, Suyog, just one final question. Where the first part of your answer that you gave, closer to the end product, etc., what are those? What are those products? I mean, could you just tell us, because it's a difficult sector to understand otherwise.
See, for example, if you take ag, right? I think if you take ag, then export of technicals should see positive momentum from India to US, right? Because that's where US imports are happening as of now. Or if you take example of polymers, right? So wherever you are doing N-1 polymer intermediate or even polymer in some context, there you should see increasing exports happening from India to the Western markets.
Yeah, well, cross fingers for all of that. But wishing you all the best for the 3-year journey and also for maybe a positive surprise in FY26 itself. Suyog Kotecha, thank you so much for speaking to us today.
Thank you. Thank you for having me.
That's Aarti Industries, 2.5% up today. After the results, but the market itself has done so well. But one of the surprise to me, as we said at the start of the trading day as well, is and maybe a positive surprise, maybe the market tailwind is happening, is what's happening to Pharma.
Yeah.
There are no large cracks. Sun Pharma is down 4, so it's recovered from the opening lows. And some of the others, Nifty Pharma is in fact in the green.
This could also be a reflection of easier said than done.
Clearly that. Because
Donald Trump coming and saying, and actually the intent is noble and it's good. High retail prices of drugs in the United States is a core issue. But not everything can be solved with a magic wand and an executive order. So you say today that no matter what, this is how much we're going to charge, and then the rest of the world will see higher prices. How do those supply chains really matter? Maybe that is something that is being kept into mind. And then, which is why you're seeing very specific ones like a Sun Pharma, which are cracking. Even a Divi's, Glenmark, Biocon. It's not that there is no crack, but you're absolutely right, Neeraj, in relative
Reddy's,
terms.
4% higher, Tamanna.
But the numbers were good. We gave it a thumbs up this morning. That was our call. Numbers, was a beat on all levels, and they seem well poised for the rev limit, post-rev limit area as well. Perhaps why? But yeah, I can see the smile on Neeraj's face.
That's good to see.
That's what I think most of the market is feeling
today.
Well. Yeah. But what do? We give you the specific inputs after this. Stay tuned as we wrap up India Market Open. From Neeraj, me and the team that put the show together, thank you so much for watching. Stay tuned. We're right back with Ask Profit next.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and this is Ask Profit, the show that gets you answers to all of your stock-related questions. And I'm sure that you've got quite a few of those questions that are lined up for us, not least of which what you should do if you booked your profits or you took money off the table at the end of last week and you're wondering whether to deploy at the current juncture because the markets are looking particularly good at the start today because of the cessation, and you can call it that at this juncture. Of course, it's been clarified that Operation Sindoor is still live and we will wait for clarification about when that does end. But as things stand right now, the equity markets are celebrating the semblance of return to normalcy, and you have the Nifty 50 that's very close to the high point of the day, up about 3% or so, and 24,700 has been hit on the charts. I was looking at when 25,000 was last hit, and that was in October of last year. And remember, the kind of drawdowns that you saw over the course of several months for the benchmark Nifty 50 started at the end of September and went on for 5 months straight. So it's looking good at this juncture. Broader markets are actually looking good as well. You have the mid-cap index that's up about 3.2% or so, and you have the small-cap index that's up about 3.7% or thereabouts. And it goes without saying, the market breadth very firmly tilted in favor of the advances. But there are a few stocks that you should watch out for. Let's first take a look at the contribution on the Nifty 50, and you have just about a couple of stocks in the red. Sun Pharmaceuticals on the back of the update from the US, the possibility of implication for pricing of generics in that market. That is having a bearing on Sun Pharma at this point, and it's losing quite a bit of ground. But it's not really moving the needle too much for the benchmark Nifty 50. ICICI Bank, which was down about 3% in trade on Friday and proved to be a little bit of a drag for the benchmark, is up there in terms of the contributors. HDFC Bank as well, Reliance Industries. So the big heavyweights are moving the needle quite substantially for the benchmark Nifty 50, which is up, as you can say, about 700 points or thereabouts at this juncture right now. But let's talk about a few stocks in the news. And you have Birla Corp, which arguably is the stock of the day. A very strong set of numbers for this company, and it's at upper circuit right now because you have a strong performance on the EBITDA front, and if anything, the PAT number was a little affected by a rise in the interest cost, and that's certainly something to watch out for. Navin Fluorine is just about flat at this point. It was up about 3% or 4% earlier on in the session, but it is given up those gains. Another strong set of numbers for this company. But I find interesting that ABB is up and about today, despite the fact that some might argue Q4 was not the best quarter for them. It's up about 4% or so. You have Dr. Reddy's Laboratories that is bucking the trend in the pharmaceutical space, and it's up about 3.8% or so. But the pharma pack as a whole is under pressure. Let's pull up, in fact, the constituents on the pharma index just to give you some perspective on what is doing what. It's changed quite dramatically from the start today, and quite a few stocks are moving higher, but the likes of Sun Pharma, Glenmark, Divi's, Lupin, losing a little bit of ground at this point. We're joined by Saurabh Jain, who's Equity Head Research at SMC Global Securities, as well as Brijesh Ayal, who's a Head of Technical and Derivatives Retail Research at IDBI Cap. Thanks so much, gentlemen, for taking the time. Pleasure having you, as always. I believe we've also got our first caller for the day. Okay, so let's first take WhatsApp while we get our callers in. And we've got Jagdish, who's writing in, Jagdish Madishetty, who's asking about Shipping Corporation of India, I believe, and he's bought at levels of 331, so elevated levels. The stock is up about 5%, as is, I think, quite a raft of shares, but he's got 514 shares, and he's wondering what to do at this point. Should he book? I will come to you, Saurabh, on the fundamentals. What would you say about Shipping Corporation of India?
Hi, good morning. Thank you, Alex, for having me on the show. See, if you talk about the Shipping Corporation, the numbers in the last quarter was good. I mean, on the valuation side, it is quite comforting. I would put this stock into the value basket. I don't see further downside for the stocks, but if you hold for the long term, I think you may get your price. So my take would be a hold.
Okay, so hold is the view coming in on Shipping Corporation of India. Our next counter that we're talking about is Balaji Mines. Rajiv Jitendra from Qatar is writing in. He's bought 200 odd shares at 2304 a piece, sitting on a loss of around 2 lakh odd rupees right now. Wants to know as to what should be the next course of action for him. Should he sell, hold, or downward average? Brijesh, very good morning to you. I'll come to you on this one. What's the view like on charts for Balaji Mines?
Yeah, morning. So basically, the long-term charts are not that great. The stock has been correcting and it is making a lower low. So more or less, I believe this can slide a little bit further. Maybe the demands on what I can see right now is somewhere to the 1,000 mark. So if this person can hold this position, then it is advisable to hold. And sooner or later, whenever it comes close to 1,000, I would suggest to do some averaging and then review the trend, because on an immediate basis, it looks weak and there can be a further downside in this counter.
Okay, so that's the view on Balaji Mines. Watch out for those levels that have been pointed out by Brijesh. But we've got our first caller of the day. We've got Ishwar calling us, I believe. Morning, Ishwar. Where are you calling from and how can we help you today?
Yeah, I am calling from Andhra Pradesh.
Okay, good morning.
Yeah, good morning, good morning.
Please go ahead.
I am holding Jyoti Lab shares of 3,000 shares at 370 rupees.
Okay.
So yeah, there are two results of these Jyoti Labs limited today. So what I need to do is that any negative results, if there is any negative results from Jyoti Labs limited from today.
Okay. So you want to know based on the fundamentals whether to hold on to Jyoti Labs or not, right?
Exactly, yeah.
Okay. All right. You bought at 370. When did you buy this, Ishwar?
Yeah, I recently bought yesterday, Friday or Thursday. Like
okay. All right. Saurabh. Okay. Saurabh, if you're watching Jyoti Labs and you're watching for the results, what would you look for and would you hold based on the fundamentals?
think he should certainly wait for the result. It's a very good company. This time around, we have already have announcement of a good monsoon, and good monsoon generally boosts agrarian economy and the purchasing power. And these companies are surely to benefit. Among all the FMCG players, it is not that on the valuation side, it's not that pricier. I'm quoting it 7 times to book value. The point is that market is unhappy because in the last quarter, the earnings were not that great. I mean, there was some kind of a degrowth both quarter on quarter and year on year. I think he should wait for the management commentary. The results are likely to be announced today only. I think wait for the management commentary and then take a call. As of now, it's a hold.
Hold is the view coming on Jyothy Labs. And sir, you rightly mentioned the earnings are today, so we will wait and watch as to how the commentary comes out in terms of how rural and urban is panning out for Jyothy Labs as well, because they're more concentrated towards the rural markets. All right, the next question is from Pratap, who's writing in from Delhi. His question is on Birla Corporation. He's bought 4,000 odd shares at 890 a piece. The stock is locked in upper circuit today. He wants a fundamental view on this one. Saurabh, I'll come to you. Overall, great set of numbers in terms of earnings. It was a beat across segments in terms of what the street was expecting. Revenue was up 6%, EBITDA up 13%, net profit up 32%. Margins also have significantly improved. What's the view like? And fundamentally, from a longer period perspective, should the person continue to hold?
Long term, from the fundamental perspective, I think that, we have a constructive view on the infrastructure as far as cement sector. The numbers announced by the company was certainly surprised the street because there was a 7% kind of a growth in the cement realization, and 1,000 per ton EBITDA was recorded by the company. Since the stock was saw some good selling in the recent months, that is why we are seeing good amount of buying because of the surprise in the earnings. From the long-term perspective, I think after the monsoon season, things will be great from the infrastructure activity in the second half, and thus we have call of hold on the Birla Corp.
Interesting. What was the name of the previous view? Vivek Pratap. Vivek, congratulations, because you're making 8 lakhs on your holding today itself, and 200 rupees of gains per share at 4,000 is your, and 4,000 is the number of shares. So 8 lakhs is what you're making today. Congratulations on your purchase. And we've got a next question from Ayush, who's writing in from New Delhi, and he's asking about Titagarh wagons, which he's bought at levels of 1,200, and he's got a 6-month time frame. The stock is up and about in trade today. Very elevated levels, and some of these stocks, Brijesh, have taken a bit of a knock. It is making a comeback today. What would be the advice that you give here?
From the long-term perspective, we are bullish on this counter, and maybe somewhere close to 1,000 is what we are looking at. But the time frame may be from a year's perspective. The stock is looking good. It is making some kind of buying, and the buying structures can be seen. Volumes are picking up. It will take a little bit longer time, but then from the directional point of view, I think 1,000 is what we should be taking a target. So if we can hold for the 1,000, definitely yes. And if you want to add more at this level also, I think that should be, that view can be taken.
All right, so that's the view with regards to where charts are concerned for Titagarh. Our next caller, Sandeep, is calling in. Sandeep, a very good morning to you. How can we help you?
Good morning to you and all the panelists. I have got Subex. I got 5,000 shares of Subex at the rate of 28 rupees.
Okay.
So I just wanted to know, should I hold or should I average it out?
Okay. Just wanted to understand, Sandeep, why Subex exactly? Did you research the company or you saw the charts?
I did a bit of both, and somehow the other it didn't materialize what I had thought, unfortunately.
Okay, interesting. Just to give a perspective to the viewers, it's a software product company which works in the space of digital trust. Brijesh, I'll quickly come to you on this particular counter, Subex. What are the charts indicating?
See, he's already taken a position. The stock is at 12.40, and what we can see is like there is some kind of base formation which is happening in this Subex. So I would advise him to hold. Let him take a stop loss at 10. So by any chance, if the stock slips below 10, then he needs to worry. So as long as the stock is trading about 10 level, there is always an opportunity, and he can bet for that 14, 15 levels on the immediate upside. Volumes are picking up, so I think he may get some positive move in this stock. Hold with the stop loss of 10.
With the stop loss of 10, and it's a very small company, as Mahima has pointed out, market capitalization of less than 1,000 crore. Best to do your research very carefully when you're entering stocks like this, because they can see volatility, not least of which generally the float is not very significant. So positive developments or negative developments can lead to very sharp moves on either side. We've got Babu who's asking a question, writing in from Mysuru and asking about Jindal Worldwide. He's got 400 shares of the company at a price of 73.8. And he's wondering whether to hold or sell at this point. He's not really specified his time frame. But Saurabh, on the fundamentals, do you have coverage? Textile companies in focus?
Won't be able to give one.
Okay. Do you have enough information, Brijesh, to give us a view on the charts?
Yeah, so this Jindal Worldwide, recently there has been some buying, so it looks okay, like not too much of bullish, but then I think that positive momentum can be there. So maybe another close to 10 points, or from the level of 70 we can see 80. So that is a resistance zone. So as of now, I think 80, 82 can be seen on chart. So that opportunity is there.
That's the view with regards to Jindal Worldwide with respect to where charts are concerned. And around 7% of their overall revenue comes from the international business. So might probably go ahead and benefit from the UK FTA that has recently taken place. All right, the next question is from Bikram, who's writing in from Kolkata. He's holding Lakshmi Dental, 400 odd quantity, bought at 410 levels. And he's a long-term investor. Saurabh, I'll come to you on this one. A fairly recently listed company. What's the view like?
Won't be able to give any comment.
Okay, Brijesh, I'm not sure if you have enough data on the charts. If you have enough data on the charts, what are the charts indicating?
So, as you rightly said, there is a very less data. So, whatever the positions are there, I think the recent low of 313, that was a low which I can see. So, that should be the stop loss, and then keep a watch on it.
Okay. Let me ask a slightly different question. And Saurabh, if you are to play, and I know that dental is not really the first option that you consider when you look at healthcare and you look at hospitals and you look at some of the new listings as well in the space. But fundamentally, if you were to talk about the broader healthcare space, beyond pharmaceuticals, beyond API, all of these, what would you buy in the hospital space?
Maybe I think Rainbow Hospital or the Metro, or maybe in the diagnostic space, Thyrocare or Dr. Lal would be a better opportunity.
Got it. All right. Hopefully that gives you some perspective if you're looking to play the healthcare space. Of course, it has been watched very closely, and understandably, healthcare inflation is going up quite substantially in India. HDFC Bank has been in focus, and it's a stock that has gained quite considerably. It is up and about in trade today as much as 3.4%. If we can pull up the slightly longer term charts, in fact, let's look at the year-to-date performance of HDFC Bank, and it's been pretty good. If I remember correctly, there you go. So it's up as much as 10% this year, and from the bottom that it hit in, I think, end of Jan this year, it has moved up quite substantially. The question is from Ankit, who's writing in from Ahmedabad, and is wondering whether to enter this counter for a period of at least 2 years. So therefore, because it's a long enough time frame, Saurabh, I will ask you, and you've seen quite a few earnings come through from the banking space. HDFC Bank, would that be your pick?
I mean, surely it is a bellwether and should be in your portfolio. And for the next 2 years, I would say, rather than the next 5-10 years, it should be a good. It should do work good in your portfolio. Considering the fact that the problems with the merger are behind us, and this time also in the earnings, the banks has positively surprised the street. I feel that 14-15% kind of a CAGR return you can expect from investment in this bank.
Okay, so that's the view with regards to where HDFC Bank stands. Our next question is from Kiran, who's writing in from Hyderabad. So the question is that monsoon is coming, and is this a good time to enter something like a Rashtriya fertilizer and chemical stock? It's a PSU stock. Brijesh, I'll come to you on this one. What are the charts indicating right now for the counter, and is this the right time to enter, or should the person wait?
Yeah, I believe this can be one of the opportunity and looks good on chart. Maybe we can talk of 20-25 points move in this counter. So 163 is the level where again the 200-day moving average is there, and recently there has been a good amount of buying which we can see in this stock. So definitely yes, 128 is a stop loss, and we'll talk of 160, 165 on the higher side.
Okay, Kiran rightly points out that it was conferred with the Navratna status. That was in August of 2023. Kudos to you for doing your research, Kiran. And I'm glad that you're looking at all of the updates here. We've got our next question on Galaxy Surfactants. Not a stock that we look at every day. And I'm glad actually that people are going broader with the purchases that they're doing. Siddharth has already bought at levels of 1,900 and he's in the green. He's saying that he's a long-term investor, but he's wondering whether he should book some profits at this point. Saurabh, on the fundamentals, what are the prospects?
I think if you look at the financials, I think there was a meager growth in the operation metrics. On the valuation front, it is quoting around 3 times to book value, which gives a bit comfort. Basically, it produces detergent and the raw material cost, in my opinion, has come down because of the slide in the crude and the chemical prices. I feel he should wait for the quarterly numbers to come and management guidance. Till then, it is a hold.
Okay, so that's the view with regards to where Galaxy Surfactant stands. The next question is from Meenu, who's writing in from Kerala. Is this a right time to invest into Thyrocare is her question, and she's looking from a longer term perspective. Saurabh, any view on this one?
Yeah, I mean, we have a constructive view on the Thyrocare. I think the competition in this segment has abated, and in the last few quarters, we have seen a good amount of growth coming in for the players in the industry. Thyrocare is expanding smoothly in different geographies, and the margins are also improving. In my opinion, it is a hold.
Okay, all right. As an interesting question, and this is quite the question. Prakash from Chennai has recently bought BSE at a price of 3,800. Let's pull up the chart and see where it's trading right now. He's wondering whether he should book profits now and pay STCG, which is short-term capital gains tax, or should he hold for the long term and pay LTCG? Is it worth holding with an eye on that tax gain? Honestly, you shouldn't be making your purchases and booking profits based on how much tax you're paying. That isn't really the right approach. But I will go across to Brijesh on the technicals just to give you some perspective on the key levels to watch out for. Brijesh, on the charts, BSE.
So basically, this has been one of the outperformers, and recently we saw a very strong move in this counter from the level of 6,000 in the recent trade, almost 1,000 points up. So the structure is positive, and he's already making a profit. So in a situation like this, it is always advisable to take some profit and protect its capital. So I would suggest to book some partial profit booking should be done, and the momentum should be right on. So on the way up, I think 7,500, 7,800. That's the monthly outlook view. So I think that can be seen in BSE. But having said this, partial profit booking is also advisable.
Okay, partial profit booking is advisable on BSE where charts are concerned, is the view coming in from Brijesh. The next question is on JP Power, that is your Jayaprakash Power. Vikram is holding around 12,400 odd shares, bought an average price of 14.8. He wants to have a technical view on this particular counter. Brijesh, he's sitting on a loss of around 8,000 odd rupees right now. What's the view like where charts are concerned? Because it's a significant quantity that he's invested in.
He can bet for more 2 rupees on the higher side because nearer 16 and 16 and a half, there is a good amount of supply is there, which is also supported by the 200 moving average. So I think the level of 16, 16 and a half will see some good amount of selling pressure. So I think even if it makes one point in that particular stock after its cost, I think he should take the profits and stay away.
Okay. All right. So that's the view on JP. Let's take a question on Okay, we've got, which share is, Hariom is not specified which share. Hariom, you should tell us which share you bought at levels of 533. There are several shares that are around that price. So you'll have to tell us which stock you're talking about. And Lata has got a question. It's a pretty open-ended question, but it's an interesting one. She points out, she's writing first of all from Kolkata, and she's asking Saurabh that she's a beginner and she wants to buy a few stocks right now. And I think that if you have a long enough time frame, it's a great idea to buy a handful of stocks, but probably not just one. So if you were to talk about 4 or 5 stocks that you can start your portfolio with, and of course, if you're just about starting out, maybe you should consider investing in the index, just to give you a sense of how the equity markets function. And the Nifty 50, Nifty Next 50 is a great start for you to do. But Saurabh, if you were to buy 5 stocks, which would those be right now?
He can anyway invest in bank Bs or Nifty Bs, but if he wants to invest in 4 or 5 stocks, I'll give a diversified portfolio. Maybe in the hotel space, he can invest in the Lemon Tree Hotel. In the banking space, he can invest in the ICICI Bank. In the capital goods space, he can invest in the companies like KEC or maybe Kalpataru. In the fertilizer space, she can maybe invest into the company like Chambal Fertilizer or Paradeep Phosphates. And maybe she can also venture into the textile space like Wortman Textile.
Okay. Our next question is from Aarti, who's writing in from Chennai. He's bought 150 odd shares of Ramakrishna Forging at 691 a week ago, and the intention to continue to hold, and with an intention to continue to hold it from a longer term perspective. Should I hold or sell now to minimize my losses? Is his question. Will the stock recover? Saurabh, what are the fundamentals indicating?
I think it is a very good company. I think there is also some kind of a disappointment in the last earnings season. Normally, these companies generally, surprises this week. But overall, the sector from the long-term perspective, the sector in the company looks good to me. I won't advise to book losses. I would rather suggest to hold.
Would suggest to hold, and this was RK Ramakrishna Forgings. Okay, got it. We've got Satyan who's asking a question on Zaggle Prepaid. If I'm not mistaken, the stock is going to, or the company is going to post its results today. I'm not sure. I think I'll pull that out. There's quite a list of companies that are going to post their numbers today. Stock is up about 9% or thereabouts, and he's looking for a view on the charts, I believe, whether it should be bought right now. The stock is up and about in trade today, 9% or thereabouts. Brijesh, on the charts, would you venture out and buy this right now?
Yeah, no, not exactly. I would not be taking any buy trade, but since if it's taken a position, the level of 370 is a resistance zone. If that level is taken out, then he can play for another 30-40 points. But then taking a fresh positions, I will not be very keen on. It's a downtrend kind of a stock. Sideways consolidation is what going on. I'm not very confident whether this consolidation breakout will follow. Results are there. 370 is the resistance zone. If by any chance, if that level is taken out, then he can play till 400. So, but no advice on taking any fresh longs. If somebody is having a position, just hold on.
So that's the view with regards to where Zaggle stands, and as Alex rightly mentioned, Zaggle is expected to post its earnings today, so we'll wait and watch as to how the earnings fare for the counter. All right, the next question is from Vivek Jain, who's writing in from Kolhapur. He's holding 2,219 shares of Mishtan Foods at a price of 23 odd rupees. And wants a view on this particular counter. Brijesh, I'll come to you on this one. It's a fairly small company, 500 crore market cap company. But in terms of the charts, what do you think the charts are indicating? Should he continue to hold? He's been holding this since past 2 years now.
We are talking about Manali Petro, right?
No, Mishtan Foods.
I think he's also asking about Manali Petro.
Yeah, but
we can take a view on Manali Petro then,
yeah,
if he's not got a view. Yeah. Brijesh, on Manali Petro, what's the view?
Yeah, so specifically on Manali Petro, I think the view is pretty strong. The stock is forming a base formation. So sooner or later, there can be a breakout. The trigger will come once the 60 level is taken out. But I'm confident that it may take a little longer time, but 60 will be taken out and gradually it should approach 70. So it's a hold, and somebody wants to add fresh longs can also take that call. So view is positive.
Okay, and any quick view on Mishtan Foods? The stock is locked in upper circuit today.
Okay. Not exactly. I think this will see some resistance. If somebody is having a position, I think profit booking is advisable.
It's a penny stock at this point, so may not be able to give you a view on that one. Guys, be very, very careful when you're buying stocks that are this value. Of course, you can make outsized gains, as some of you have done with stocks like Suzlon. This is something that has been a turnaround story, but understand that they're not as common as you would think, and you can get it wrong more often than not. Saurabh, Brijesh, do stay with us. We've got to take a very quick break. Viewers, will be back on the other side to take more of your questions, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, welcome back. You're watching Ask Profit, and it is time to invite or introduce Ajit Mishra, who's Senior Vice President Research at Reddy Broking. Brijesh has left us, and thank you, Brijesh, as always, for taking the time. Ajit, good morning to you. I'll come to you in just a bit. First, we've got a long-term question that's coming through from Ronak, who's writing in from Mumbai. Okay, so he's listed out a few stocks, but I'm going to pick one out of the three, and I'm picking at random. Guys, I'm going to have to restrict to one stock per viewer, or we won't be able to address as many questions as we can. Newland Laboratories is the name of the stock that I'm asking about, and he's already bought, I believe, at prices of 1,200. Saurabh, these CDMO players have of late caught the attention of a lot of investors. Would you suggest adding more to your position or holding on at this point? What's the view on the fundamentals?
If you look on the valuation side, it seems quite expensive, 11 times to book value. And if you look at the numbers, there was no growth or a bit degrowth was witnessed in the quarterly earnings. In my opinion, I think it is a bit expensive. I think wait for dips.
If you were to deploy in a CDMO player at this point, and you were positive on this pocket of pharmaceutical companies, which would it be?
As of now, nothing is coming to my mind.
Okay, all right. I do want to point out, of course, that you had Navin Fluorine that set out today with gains of about 3% or thereabouts, but it has since then given up those gains, and rightly so. Some would argue that these stocks already have reflected in their pricing the improvement that was anticipated in the fourth quarter, and that has actually played out as well.
Absolutely. Absolutely. The next counter also that we're talking about is on the back of its earnings, right? It's Thermax. Pradeep Kumar from Hyderabad wants to invest around 2 lakh rupees in Thermax from a 3 to 5 year perspective, but he wants to know if this is the right time to make an entry or not. Ajit, I'll come to you on this one. In terms of earnings, overall revenue and margins were largely in line, but net profit was a miss in terms of its estimates. Revenue growth was led by the industrial products and chemical segments. The stock is not doing much in trade today. Do you think this is the right time to make an entry in Thermax or wait?
Yeah, good morning, Mahima. So, Mahima, yes, it seems like a good price because it's almost like 45-50% retracement from the record highs. The stock has been strongly maintaining above its major averages on the weekly charts around 3,000 levels for almost 2-3 months now. Volumes have dried up, so that indicates that sellers are also exhausted. So, yes, he can consider accumulating in this range, 3,000, 3,200, with a view of 2 to 3 years.
All right. So we've got a question from Abhineet, who's writing in from Bengaluru, and he's got 300 shares of Varun Beverages Limited, which he's bought at levels of 544, he says. He's incurring a bit of a loss, so the stock is bouncing back just a tad bit, up about 3% at this point. And he's wondering what to do. He's not really specified a time frame, so Ajit, I'll come back to you on this one. Varun Beverages, would you hold, and what are the key levels to watch out for, both on the downside as well as on the upside?
So, Alex, if you would see that the stock has been witnessing volatile swing for almost 2-3 months now, means from 580 to 420 and then again to the previous swing highs. As of now, it's trading below all its key averages. It's not a good sign, but yes, at the same time, due to the oversold position, we are seeing recovery. His buying price, coincides with the long-term averages around 540, 545 area. So if the view is short-term, I would recommend him maintaining a stop at 490 and use any recovery towards the long-term averages around 540 area, the buying price. He should review his position again.
So that's the view with regards to where Varun Beverages stand. Our next question is from Venkatesh, who's writing in from Chennai. He's holding Sonata Software, 53 odd shares, bought at 436 at an average price. He wants a long-term view on this particular counter from 2 to 3 years perspective. Should he accumulate or hold is his view? Saurabh, I'll come to you on this one. In terms of overall earnings for Sonata Software, there was a client ramp down which was seen, and there were delay in terms of the overall implementation of projects as well. What's the view like? Should he continue to hold or even accumulate more at this point of time?
In fact, even for the bigger companies, the same thing is happening. Discretionary spending is nowhere, and there has been a delay in terms of implementing the projects. So it's a relatively smaller company. Our view is a bit negative on the IT sector. We feel that even the bigger companies will grow at a slower pace, and the high growth IT companies will also see the similar will see the similar things. In my opinion, I think it is better to get out closer to your buy price.
Question on Bajaj Finance. It's an interesting one. I'm going to ask Mahima to try and pull up the X date if it's come through. But if I remember correctly, Saurabh, it is along with the split and the bonus, if you account for both of them, you will end up with 10 shares for every share held. That is at the maths that I remember. Maybe you will have a better recollection of it. But we've got Mahalakshmi, who's writing in from Hyderabad, who's bought in an average price of 8,219. And she's got 9 shares. She's wondering whether to exit right now or wait for the corporate action to take place. And what's your view on the fundamentals as well?
I think the corporate action generally favors in terms of 2-3 percentage points, because the stock price will get reduced and there will be more active trading activity. From the fundamental perspective, I think the company is putting up a good show. The numbers were improving in the last quarter earnings season. Also, the company surprised it positively. So, from the fundamental perspective, it is good to hold. But if your view seems to be a bit tactical, so in that sense, she can wait for the corporate action to pan out.
So the one thing that was not liked by the street though, Saurabh, with regard to Bajaj Finance Q4 is the outlook going forward. Seemingly the trajectory of growth that this company was used to will not take place anymore, but you're talking about a higher base. You're comfortable with that trajectory of growth that they've announced?
See, the management is quite good. I mean, the investors do have a good faith in the management. When the management is guided, I mean, then I think from the stock price perspective, it is quite evident that the street is happy with it.
Okay, so that's the overall view with regards to where Bajaj Finance stands. And as Alex rightly mentioned, the ratio will be 1:10, considering both the split as well as the bonus. All right, our next caller, Kalyan, is calling in from Chennai. Kalyan, a very good morning to you. How can we help you?
Yeah, I hold 13,000 shares of ONGC, which I bought at 154.
Okay.
I'm making quite a money, but should I hold it on, or what is the short for ONGC?
Okay, just wanted to understand, when did you buy these shares, because it's quite a significant quantity and you're sitting on a significant profit of 11 lakh rupees, and what was the purpose behind buying ONGC?
No, at that time I bought because it was a good share.
Okay.
But now I want to decide whether there are better opportunities.
Okay, so you want to exit the counter, is it?
I'm not. I want to evaluate, do I have a better exit option?
Okay, better exit options. All right. I'll quickly come to you, Saurabh, on this one. What's the view like on ONGC? Should he continue to hold at this point of time, or should he wait for further upside and then book his profits? He's sitting on a profit of 11 lakh rupees, by the way.
Yeah, in my opinion, he should book profits because the crude is anyway has come down and the outlook is not that great for the crude prices. And since the company is a producer of the crude, the company's profitability will be surely impacted. So my view is better to take money off the table.
Where would you deploy? So if you are taking money off the table and if you're taking it out of explorers or a crude sensitive stock upstream like ONGC, then where would you deploy it?
I think industrials, banking and hotels make sense. For example, Lemon Tree, L&T or ICICI banks make sense.
Okay, all right. So those three stocks you should watch out for, Kalyan. And I wish you luck, or I wish you good fortune, considering the kind of gains that you've made with ONGC and the patience that you've had with this stock. 13,000 shares being held through pretty tough times, actually, and you've made your money. All right, John's got the next question. Biocon is the name of the counter that he's holding. He's bought 200 shares at 390 rupees and he's looking for advice for the long term. 390 is the buy price, 328. The stock has posted its numbers already. What did you make of the Q4 numbers, Saurabh, and would you hold for the long term?
In the long term, if you see in the last 10, 12 years, the stock has done nothing. So in my opinion, I think there is no point in chipping with the company. As far as pharma sector is concerned, I think the recent statement by the US government also weighs on the sentiments. So my take it is better to take money off the table. I'll suggest move money to the banking or industrials.
Okay, all right. So that's the view on Biocon. Take money off the table. Ashish is calling us, and we've already taken a view on HDFC Bank, but I'm still going to take this question. Ashish, what would you like to know? Morning.
Good morning, sir. एक्चुअली HDFC बैंक में मैंने 335 क्वांटिटी ऑफ शेयर खरीदा है जी, जो 1962.30 एवरेज प्राइस है। हाँ। तो मेरा जो टारगेट है वो है 1978.90। ओके। तो मेरा जो क्वेश्चन है, एक्चुअली मैं बहुत दिन से ये होल्ड कर रहा हूँ। मैं पिछली बार भी फोन किया था इसके रिगार्डिंग। हाँ। तो ये जो टारगेट किया इस वीक में ये अचीव हो पाएगा?
ओके। और आपने ये शेयर कब खरीदा था?
पिछले मंथ शायद।
ओके, ऑलराइट। और ये 1978 का जो टारगेट आपने रखा है इस पे, आपने क्या देख के आपने टारगेट लगाया था?
एक्चुअली मैं इंट्राडे ले रहा था। हाँ। तो उधर पे थोड़ा मेरा मिस्टेक हो गया इंट्राडे में ट्रेड लेने के लिए। हाँ। तो मार्केट डाउन हो गया, मैंने ऊपर का ऑर्डर ब्लॉक से बाई कर लिया। अंडरस्टूड। जो मुझे सेल करना था।
अंडरस्टूड। ओके, तो आपको पता करना है कि इस हफ्ते में आपका 1978 हिट हो सकता है क्या? ठीक है, ओके। सो अजीत, यू हर्ड द क्वेश्चन, 3.5% today itself, and it's not too far away actually. So is that possible?
Yeah, Alex. So in fact, I can recall that he called us earlier also during the show, and the same target. Basically, the previous swing high, the record high, is something that he's eyeing as a target area. It's been almost 2 weeks now that he has been holding this position, but I would recommend always that when you are trading, if you're sure about your targets, like you are very particular about your targets, you should be clear about your stop losses as well. Means if you are eyeing, let's say 2-3% kind of a gains, then 1.5% should be your stop loss as well. Fortunately, the stock has come back strongly because the banking as a sector has been doing well. Now, at least he should maintain a stop loss at 1940 basis his upside potential. If he wants to exit, exactly at the price that he have mentioned. Otherwise, he can review his position because the overall banking as a space looks upbeat to us. After Friday's decline, we are seeing noticeable recovery across the board. So, in fact, he can review his level and keep on trading his stop losses on every rise. As of now, 1940 should be a stop loss and he can hold his position.
Okay. Continue to hold is the view coming in on chats. And Ajit, I must say you have a strong memory. All right, our next question is from Dilip, who's calling in from Hyderabad. Dilip, a very good morning to you. How can we help you?
Yeah, good morning. So I have a question regarding Gravita India.
Okay.
So I got 400 shares at the price of 1895 rupees.
Okay.
I'm looking for 6 months view on this.
Okay, so you want a technical view on this particular counter. Ajit, I'll take this up with you. In terms of the fundamentals, it was a steady quarter, in terms of Q4 FY25, but what are the charts indicating for the next 6 months? Should he continue to hold?
Yes, so in fact, Mahima has been a very steady performer. If you will see, on the multiple time frame, it's just that for almost 5-6 months now, it's been trading in a corrective phase. But the pace of decline has been gradual and it has rebounded very strongly once it tested the major supports around 1400 mark. I believe that the stock is set for the next leg of the move once we cross this barrier around 2000 mark. So since its view is 6 months, I would recommend maintaining a stop at 1600 now and 2600, 2800 as a positional target in next 3 to 6 months.
Right, I'm coming back to you, Ajit, on this next one. And Revati from Madanapalli in Andhra Pradesh is asking about IRFC. IRFC is the name of the stock that she's bought. She's bought at levels of 28 and she's wondering whether to book profits at this point because she's holding quite a substantial chunk. 1,970 is the number of shares that she has and she's wondering whether to take money off the table. What's the view?
So, Alex, we all know the kind of euphoric move that we saw in the railway stock in the past, and it's been almost 8-9 months now that we are seeing corrective pace. The good part is that at least the pace of decline has subsided. The stock has been hovering in a tight band. So, at least she should book partial profit because his buying price was very low, and she can think about expanding her portfolio also to the other sectors. So as of now, yes, partially profit can be booked. And once, let's say, we cross this 135, 140 barrier, we might again see a momentum towards 160 area.
Okay, so that's it with regards to RFC. Our next question is from Ramesh, who's writing from Hyderabad. And he wants to know whether this is the right time to enter into Sona BLW. Your quick view, Ajit, on this?
Sona, so I feel that we are at the immediate resistance. 520, 525 area is a very strong resistance for Sona Comstar. So at least wait for a decisive close for a day or two once we cross this barrier of 520. Then you can definitely consider because 500 in that case would be a stop loss and 560 would be your immediate target.
Much for that. It's time to shift focus back to earnings, and we've been getting you management commentary. This is on an auto-ancillary company that is in focus. Motherson is the name of the company we're talking about. Puneet joining in to speak to the management, also give you some perspective on the numbers. Puneet, how did they look?
Well, numbers were largely in line, Alex. Revenues grown by about 12%, coming at 2,509 crores, and this also included some cost from the greenfield as well, so revenue impact was there. And we saw, EBITDA was down 7% and net profit was down 14%. That's largely because of the 3 new greenfield plants. And we've spoken to the management, about it and what led to these costs and what's the outlook for these 3 plants as well. So let's go across to the management. We have Mahendra Chhabra who's joining in, the current MD of Motherson Wiring. Mr. Chhabra, a very good morning to you, sir. Just I wanted to start off first essentially with the question on margins because that's been hit because of the greenfield facilities. In the presentation you mentioned that one of the facilities has come on stream. Is that the Pune plant? And I just wanted to understand, is this the first full quarter for the Pune plant or was there any partial operations in this particular quarter from the same?
In the Pune plant, there are two projects. One has been implemented in Q2 of last year, and another one is in the Q4 of last year. So in the Q4 also, it has been partially. The full impact will come in this Q1, but the ramp up has happened in the Q4.
So I also want to understand, like in the similar quarter, in the previous quarter as well, we've seen a hit on margins because of this aspect as well. Could you just talk us through what's the hit on because of the startup cost in this particular quarter? What's the exact hit because of that in this particular quarter? Because is it from all the three plants that we've seen, or we've seen because the Pune plant has started to give revenue as well, that it's only the Pune plant and the costs associated with that?
When the greenfield starts, it happens in the phases. If you can see that in these three greenfield, you have to start, once the greenfield start, you have to do a lot of pilot runs also, and you have to hire the manpower upfront to start training them so that they can, when the SOP starts happening, at that time they can give the full productivity. You have to put all your machines, infrastructure, everything in advance so that when the SOP hits, you have all the infrastructure in place. So for the Pune plant, that has been started in Q1, which was earlier of the FY for 24-25. For the other two plants, it has been already started in Q4, Q3, Q4, and even in the Q1 also, because there is SOP is going to happen of one plant in Q1, another one in Q2 of FY26. So this is not something which happens only in a stipulated period of time. It happens over a spread of time when you are doing a lot of advance investment into these plants to when the productivity hits or when the SOP hits, at that time you can give it with the full productivity.
So you also mentioned about the revenue potential in the previous quarter. Could you just quantify it? You had mentioned 2,000 crores from these three plants. How much could be the revenue potential from these in FY26? Because the 2,000 was, of course, a cumulative time frame.
As I explained that these two plants, one is going to happen in Q1 of FY26, another one in Q2 of FY26. So you can see that 2,000 odd crores on annualized basis start giving the revenue in H2 onwards, backed by whatever the volumes customer has suggested if they're going to produce those numbers.
Mr. Gaylord, let me just take a step back and look at FY25, because you had roughly 60% of your overall revenues come from passenger vehicles, roughly 13% from two-wheelers, 10% from commercial vehicles and trucks. So just want to understand, since you are one of the largest players in wiring harnesses for PVs, what would be your current market share essentially in this particular market, both for passenger vehicles as well as for two-wheelers, if you can quantify?
As a company, we don't work on the market share. Our belief is that we'll not lose any of the business because of the capability. We are backed by two of our parents. One is the Sumitomo Japan, and another side is Samil. Sumitomo is the world largest wiring harness manufacturer. Other side is Samil. So on the technology front, we are capable enough to handle any of the product which is going to happen. And other side, Samil, which is giving us backed by all the components, the wires, and the help on the white collars as well. So we don't follow only onto the share of business. Our focus remains on to work very closely with the customer. Don't lose any business because of the capability or any other issues. And if you see that focus only makes us that we are 60% our revenue goal comes from the passenger vehicle. And obviously passenger vehicle volumes are also in line to that the ratio comes as 60% of our revenue there.
Well, the question on market share was essentially because you mentioned in the presentation as well that you're already supplying to 9 out of the 10 companies that operate in India, which is the largest one in PVs. So revenue growth essentially will come only from volume growth as well as the industry growth, and that has been hampered in FY25 rather than any kind of new customer addition in passenger cars. So specifically, how should we see revenue growth for you in FY26?
See, if you compare of FY24-25 with the previous year, the passenger vehicle has grown by 5% around. And also, as a company, we are very much, ready to work on the customer volumes. Customer has suggested that we don't doubt their volumes at all. So we see whatever they are suggesting for FY26, we are completely ready for that. And that's what in line to that only our expansion has taken place in last financial year. So we are a future ready organization who is ready for the whatever the volume customer will suggest, we will take care for that.
And one last question, Mr. Gehlot, was on two-wheelers. That's 13% of your revenues for FY25. Now, we've seen that market outgrow and outpace the growth versus passenger cars in FY25. But the domestic share has been falling slightly for motorcycles. So just wanted to understand, since you mentioned that you don't give market share data, how should we look at that revenue growth? Is it expected to be faster compared to your traditional passenger vehicle wire and harness market?
See, there are two types of customers in two-wheeler. One is the established customer, which are there from last many decades in the country. And on the EV front, there are new customers which are coming up. So first I'll talk about the established customer. We are working with them from last 4 decades. And we are very happy to tell you that we are proud also to be part of their journey. And we are closely working with them, all the new models also. As you rightly said, that the growth has was very good in FY24-25, and so our revenues were also. For the EV, where the new generation customer is also coming up in the two-wheeler, we are working very closely with them. Few of them we are already metallized the product, and we are a part of their mass supplies also. And for few more, we are working on their proto, and I think in the future we'll be part of their journey as well.
Well, Mr. Gehlot, thanks so much for joining in, giving us a whole host of views for Motherson wiring in Q4 as well as FY26. But, Alex, largely the stock not reacting that much today, but that's largely because the growth has essentially just gone into funding and getting impacted by the newer plants. But, very interesting one nonetheless.
Especially because they're catering to forward-looking automotive businesses as well, which is an interesting one to track. Thanks so much, Puneet, for joining in. Keep that on your radar. An interesting chat, of course, with the management. Let's take our next question, and this is from Harsha, who points out that he's writing in from Virar, and he's clarifying that Virar is in Maharashtra. Harsha, we're aware. We're Mumbai folks, so we're quite aware of where Virar is. But you've got 250 shares of 600 at 670 of SGS, and you're wondering whether to buy for the long term or to hold at this juncture. Saurabh, view on SGS?
Won't be able to give.
Okay. Ajit, on the charts, SGS end up about 4.5% at 1,076. So he's in the green comfortably. So should he book or should he hold?
Alex, he should hold because this is the recent recovery. It's been among the stocks which recovered very strongly with volumes. All the major averages it has reclaimed in no time, and now we are seeing the fresh base formation as well. So probably it can retest its previous swing highs close to around 1200, 1250 area. So still we have around decent room of 9 to 10% from the current levels. So with stop at 1000, if the view is short term, definitely he can hold for 1250 as a potential target.
Okay, all right, it's time to hit the rapid fire round, and this is where we throw as many questions as possible at our expert. Saurabh, Ajit, hope you're ready. The first question should be an easy one to answer. State Bank of India, Venkat wants to know, should he buy more at the current juncture? He's bought at levels of 785. Should he sell or buy more? Ajit, on the charts?
He should add more and maintain a stop at 780.
Okay, the next question is from Tamil Selvan, who's writing in from France. His question is whether to invest in Voltas or Blue Star. And 3 months is his perspective. Ajit, your view?
Voltas would be the bet because Blue Star we have already seen move 1150 closing stop loss.
Okay, Paradeep Phosphate is the name of the counter we're looking at next, and Niranjan wants to know, he's bought at levels of 80 rupees. Should he book profits or hold for another year? Ajit on the charts.
Hold, maintain a trailing stop at 130.
Okay, the next query is on Yes Bank. The person is holding 3,000 odd shares, bought at 31 a piece. Ajit, should he continue to hold?
Hold, now at least maintain stop at 18.
Okay, I'll give Ajit a break. Shriram Piston is the name of the counter. Shakuntala from Surat wants to know, she's bought at levels of 1,100. Should she add more at the current level of 2261? Saurabh on the fundamentals?
Hold, don't add.
Okay, Abhishek from Hyderabad has bought Mazagon Dock at IPO price and part stock split as well. 150 shares is his holding and 94 is his average price. Should he book profit? Saurabh, your view?
Hold.
Ami Organic or Aarti Industries, which is the better pick for the long term? Avdesh wants to know. I'm going to ask you again, Saurabh, but I think you said neither, right?
Aarti Industry.
Okay.
Okay, the next counter that we're talking about is Wellspun Living. Subramaniam from Chennai has bought 70 shares at an average price of 93. Should he accumulate more or sell now? Saurabh, your view?
Hold.
CESC, profit of 28%. Would you book at this juncture and switch to something else? Subramaniam wants to know. Ajit, on the charts?
Hold, maintain a stop at 150 for position target of 185.
Okay. All right. Unfortunately, we've run out of time on this leg of Ask Profit. Thanks so much, Saurabh, as well as Ajit, for joining us and for answering all the questions you did. Viewers, we've tried to get all of your questions answered. Of course, that is practically impossible because there are so many of them. But hopefully, the stocks that we've discussed today have benefited you in some way. There is, of course, Know Your Company lined up next. And Mahima will be back along with Harsh to take you through a company that you know quite well and you use very often. That is Swiggy. Do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to this show, Know Your Company. What we're going to try to get to today is Swiggy. The numbers of Q4 were out, but more than anything, believe that a deep down analysis of this company is much warranted. November 2024, the company listed at 390 rupees per share being the IPO price. I have Mahima with me, by the way. So Mahima Vachajani who will be helping us with this. But point being, 390 being the price at which the IPO price was for Swiggy, listed at around a 5% premium to that. Thereafter, the stock is down and currently sitting at 320 rupees a piece, despite it up being 2% today itself. Now, whether it's on the back of numbers or whether it's on the back of positivity, which in any case is reflecting in markets, is the question. But more than that, it's about understanding what Swiggy is about. Let me first start off by raising the questions which I want answered. Is competition the key risk to cash flow where Swiggy is concerned? Is this the one key piece? The second one is with regard to cash burn. How long and how much? This is the other key piece, because there is very little visibility or clarity with regard to how much of the cash burn will happen and for how long it will happen. And thereafter begs the question that if cash burn were to continue, would further fundraising actually be required? Is it worth investing in some of the new age tech companies is one of the other parameters that I'd want to understand. And competition definitely has better cash balances than a Swiggy has. And therefore, if cash is the only piece that's going to move the needle with regard to where Swiggy's business model is concerned, there is a risk. There is a larger risk compared to how competition is placed. It's also a fast evolving business environment. As the business environment changes nearly every other quarter, you are seeing Swiggy also adapt or change its business model. When you do that, there's just very little predictability as to what will come next. Forget about FY26. We are not sure about how maybe the next quarter or two will go. And if I were to value therefore Swiggy on the basis of some numbers put out in FY27 or FY28, how am I supposed to do that? Because there is just lack of visibility on what's going to play out in FY26 itself. And I'm not blaming Swiggy for that. I'm just breaking it up and trying to say that if the competition has the ability to pivot its business models quickly and has the cash, then Swiggy will also have to do so. And if Swiggy has to do so, then is there a risk where Swiggy is concerned? I'm not too concerned with regard to how competition is going to survive. I'm more concerned with how Swiggy is going to play everything that's panning out in this space. And therefore, if a further fundraise is required, whether they'll prefer debt, because right now they've just eliminated all debt from their balance sheet, and two, if a further fundraise is required, are they going to further dilute equity? In which case, if you're a shareholder, likely EPS will just get pushed in terms of both growth as well as visibility. So try and understand all of these. And before that, let's try and understand what Swiggy actually does and some background with regard to Swiggy. It's obviously one of the new age tech companies. I don't think it requires much introduction, but there will be some nuances which may be new. So let's try and get straight to it. Now, when I'm talking about just about the company purely, it was founded in 2014. It listed on exchanges in November of 2024. It's pioneered on-demand convenience platform. That's what it currently plays at, but it started off as a food delivery app, or rather it was one of the competitors or one of the first players within food delivery. Zomato actually entered after it with regard to food delivery. So what you want to see is that Swiggy does have the ability to be the first mover in terms of disruptive business models. There's no doubt about that. They did that with quick commerce as well. They did that with food delivery as well. But what about sustainability? Because on both of those, they were the number one player, and now they've slid to number 3 in quick commerce and number 2 in food delivery. And it's a duopoly. They continue to give up some amount of market share in food delivery as well. I mean, different reports will quantify it differently, but Zomato does have the lead in food delivery, and that's the bottom line with regard to market share. So something to know, and along with it, some concerns that I am voicing if you're an investor, shareholder, or a possible prospective investor. So something to look at. The other thing is they're going into events and services. Now they started off saying that we're going to build this comprehensive app, which is Swiggy. But what they've started to do is now they've started to also look at building out platforms from Swiggy. So they're not only sticking to that one single app agenda, which they started off saying that they will do. They are also pivoting from what they were saying maybe 2-3 quarters ago, which is why there could be uncertainty, but that's the other piece which they've started doing, events and services. Now everyone's going into events. Zomato has picked up Paytm's events business. They're trying to drive events through that. Other services also has plenty of competition. So in each of its businesses, there's a lot of individual and bunched up competition. Individual competition may be in delivery, where you have a Zomato alone, but bunched up competition in things like events, in things like quick commerce. There's just too much competition on all the fronts that they are competing in. So something again to keep in mind. The other piece is there's some bit of inefficiency. There's higher operating costs where Instamart is concerned. This increases losses, gives a drag to cash flow as well. Company is expecting contribution margin break even at Q1 FY27. Earlier, the goal was Q3 FY26. There's an aggressive dark store expansion drive. This could well keep a lid with regard to how cash flows is concerned. And they've added around 1,021 odd dark stores in FY25. They continue to do this dark store expansion at a fairly healthy clip. What they're now planning to do is around 60 dark stores per quarter is what they're targeting, which roughly translates to around 250 odd dark stores every year. That's broadly the guidance that's coming through. And that's with regard to, again, quick commerce. Now, in terms of Swiggy versus Zomato, look at quick commerce in terms of the growth. This is Q4 growth that you are seeing. This is purely Q4. Kind of gives you a summary that neither are taking a very large lead in either of these. You're seeing Zomato slightly behind in food delivery on the YOY basis number, but nothing material. Even on quick commerce, they're largely even Steven. They're largely there. This is again Q4. We'll look at the larger numbers as well, try and break those down, but this is how it's playing out. Mahima, you want to kind of take over and try to give us a breakdown of how Swiggy is playing out.
Right, so in terms of cash burn also, like you rightly mentioned, the Swiggy discount has gone up to almost 24% this quarter, which is in fact even higher as compared to something like a DMart, which has been a disruptor in terms of giving a higher discount when it comes to sales of your FMCG products. In terms of the overall discount last quarter, that stood at around 20% versus that of around 22% for DMart. And this has almost doubled YOY basis, because Q4 FY24 the discount stood at around 12%, which has now gone to 24%. So the previous question as to how cash burn has been already taking place, right now Swiggy is sitting on a cash flow of around 3,300 odd basis. Will they be able to sustain going forward, considering the kind of competition that is already hitting them, and will they able to roll back the kind of discounts that they've already been giving and then be able to retain the customers or not, is the likely question. In terms of the overall income statement, the overall Mahima, revenues also...
Apologies, before we go to income statement, I want to quickly highlight some
key competitors.
Key competitors in every space, because that's important. Let's look at firstly the food delivery space. 43% market share Swiggy, around 57 odd % market share Zomato. Then you have Magic Pay, Eatshop. Those are some of the smaller names, but broadly it's a duopoly where food delivery, core food delivery is concerned, and that's their core business. Let's now talk about Instamart. That is where competition is quite high. And let's pull out the competitors on that one. It's the quick commerce platform, operates currently in 120 cities. Those are just some of the competitors that are there. There is a Myntra now, which is starting to come through. A JioMart is coming in. Big Basket is coming in. Blinkit already has a substantial presence and a strong backing and a strong parentage with a strong backing. So all of those Blinkit has. Zepto is unlisted and therefore no pressure from public shareholders. And there's Flipkart Minutes. It's a highly competitive environment where competition, at least in the quick commerce segment, is concerned. Last off, let's talk about events. And there, events as well as other services, there you have something like an, so that's the ticket booking app. And there too, they have competition where ticket booking is concerned from a district, from a Book My Show, and from a Paytm Insider. All of those compete for the same share and the same pie. And last off, then there are other services which also Swiggy is doing at this point. So there you go through Swiggy Ping, which does professional services. Now in the professional services space, you have an urban company, which is again large, and it only does this, and therefore it can afford to sustain some amount of burn more than others. Then you have Swiggy Snack. Swiggy Snack is the 10-minute food delivery, competes with Zepto Cafe and Bistro. So all of these have a decently large-sized competition, some of them overlapping, but nonetheless, they do have quite a bit of competition. Let's list down the parameters we look at before I go to Mahima. Income statement will be the first parameter, balance sheet, cash flow, shareholding. We'll thereafter look at street cred, street coverage. We look at valuations. It's an interesting one. And last off, we look at outlook as well, what to expect. And for that, we're looking at the business strategy at this point. What in terms of business strategy can we expect going forward, and what has played out as of now? Going forward is going to be tough to do. So more so, what has played out till now is what we'll focus on. But Mahima, start off with the income statement.
Right. So in terms of the income statement, the overall trajectory in terms of the all four metrics that we see, that is revenue, your EBITDA, your margins, as well as your profit or loss, the overall trend has been a little disappointing. Revenue, of course, on an increasing trend from around 2,400 odd crores, it's gone to 15,200 odd crores. But at the same time, when we see, when we look at the overall EBITDA metric, the overall losses in terms of EBITDA that has gone up from around 1,300 odd crores to almost 2,700 odd crores in FY25. Now, in terms of the management guidance, they did say earlier that they will achieve contribution EBITDA level break-even by December 2025, but that guidance has now been pushed to Q1 FY27. And in fact, a lot of brokerages and analysts have come out and said that they do not expect Swiggy to come in and give a break-even in terms of contribution at EBITDA levels by FY28. So that's with regards to where EBITDA stands. In terms of the overall net loss, they've widened significantly from FY21 around 1,600 odd crores to 3,100 odd crores in FY25. This is on account of the higher losses is also on account of higher dark store addition that they've given this particular quarter. Even in terms of the overall discounting because the competition is rising has gone significantly up, which is overall impacting the losses of the company. Even in terms of the overall margins, the margins have slightly come down from 50% to 34%, but it's still far away from turning into a positive EBITDA margin. So that's with regards to where the overall income statement stands, Harsh.
Okay, so that's where the income statement stands. Let's look at the balance sheet as well. And you want to start to see improvement where the income statement is concerned. You want to see improvement where margins is concerned. But the margin improvement hasn't been solid, especially on the food delivery side. I want to quickly highlight that the margin number came in at just 2.9%, which is lower than what Zomato has done at peak, obviously. But also, you want to wait and watch as to how much this can go up by, and it's gone up by just about 40 bips on a sequential basis. You want to wait and watch how quickly can this go up. Well, currently we're not seeing a very strong inch up, so you want to wait and watch. They're continuing to incur costs on customer acquisition, which is the other key issue at this point. That's how the balance sheet stacks up. The debt is near zero and at this point, and therefore fairly okay from that perspective. But what you again want to see is how much of the cash bank balance in the balance sheet can cushion the business. That will hold the key. If cash reserves start to dry up or start to come under pressure, they will have to do a fundraise, whether they do it through a debt raise, whether they do it through an equity raise, and again, dilute equity will again start to be a problem. But Mahima, so we've done balance sheet, we've done income statement, cash flow.
Right. So in terms of cash flow from operations, it's still time where Swiggy will convert that into a positive metric. Overall, the cash flow from operations stands at a negative 2,100 odd crores as FY25 stands. The overall net cash flow is a positive number, which stands at around 360 odd crores. But the interesting part in terms of cash flow is that their working capital days overall has gone up quite significantly. It's gone up to almost 15 days versus that of negative 20 odd days in FY24. Again, this is because they have increased their dark store addition quite significantly, and for them, the overall inventory also goes up along with dark store additions. So that is kind of having an overall impact when it comes to cash flow from operations in terms of Swiggy. But the management has said that going forward in Q1 FY26, they will reduce the kind of aggression that they have taken in terms of dark store addition. So overall, in terms of cash flow improvement from Q1 FY26, if these dark stores, the overall average per store per order goes up, the overall cash flow from operations will also go up, considering that they will be going lesser in terms of dark store addition. So that's with regards to where the overall cash flow metric stands. How does the shareholding look, Harsh?
Yeah, that's again another big concern. On the 13th of May, you'll have 80% of Swiggy's shareholding lock-in, which is currently under lock-in expire. So you'll see some amount, I'm not saying too much, but you'll see some amount of more liquidity flow through in terms of stock. Some supply get released, which could keep the stock under pressure. Mind you, it's already been under quite a bit of pressure, but you want to see as to how that plays out on the stock price, and you'll start seeing it maybe in a day or two. So FIIs currently hold around 4.9 odd percent, just shy of 5. From the 7.8%, the DI holding is up to 9.3%. Kotak Emerging Opportunities Fund is one of those which holds and which has some stake where the DIs are concerned. And then you have around 86% public holding, but some of that is also chunky. So within that public shareholding, you have some amount of chunky holdings. I'll quickly try and elaborate. You have SVF LI, which is SoftBank, which holds around 7.5 odd percent. So you have some big investors also holding chunky quantums, which is sitting in the public shareholding. Something to keep your eye out on. But let's quickly look at street cred as well. And let me try and cover that, Mahima. In terms of how this has played out, stock is down around 25 odd percent since listing. It's down 50% from its all-time high of 617. And it's around 20 odd percent lower from its 390 rupees IPO price as well. So not looking good from an investor standpoint. Of course, that doesn't always mean it's bad, because from the listing price, while there was not much money seemingly left on the table, it was still at a sharp discount to Zomato's valuation, already listed valuation as well. I'm not talking about the IPO valuation. I'm talking about at that point what was Zomato's valuation, and therefore we've given this a bit of a neutral, because while street cred in the near term has been extremely volatile, you still currently are sitting on just about a 20% odd of a loss if you are an IPO investor. Mahima.
Right. So in terms of the overall outlook also, there has been, an indecisive business strategy that Swiggy has overall adopted. In terms of the business diversification also right now, we're seeing that they're trying to sail into too many boats. They're and these are costly but ambitious targets that they're aiming at. In terms of over diversification in different businesses, we're seeing that they're entering into Swiggy scenes. They have also bought in Ping, which is a professional services app. Snack is a 10-minute food delivery app. And of course, they're also moving in from their overall integrated app strategy to now building different apps for different businesses. So this is something to keep an eye on. In terms of valuations, as Harsh rightly mentioned, of course, because we are EBITDA negative right now, we have the price to sales to compare both of these counters. Slightly cheaper than where Zomato stands, of course, but Zomato right now overall on a net basis is EBITDA positive. Last quarter it did see losses, but overall slightly better in terms of where Swiggy is performing. And lastly, in terms of the overall analyst recommendations also, there are around 13 odd buys, 3 odd holds and 4 odd sells. So this is with respect to where valuations and what the analysts are expecting stands.
And why we're giving it a thumbs up also, Mahima, is that there is a 29% upside to the current market price of Swiggy. So when you're looking at what the average analyst is saying in terms of target price, the 12-month target price average as per Bloomberg estimates is 414 rupees per share. So you have some amount of upside from here is what analysts seem to be building in. But let's quickly move on. Listen in to a conversation we had with an analyst earlier. We had Shobhit Singhal, who's the research analyst at Anand Rathi Institutional Equities, who tracks Swiggy closely. And we spoke about some of the risks, especially the mounting losses, and what exactly investors should do with the counter at this point and how he's looking at valuations. Listen in to that conversation.
If you see the results, so it's so FD business remains stable, but if you see the execution gap is widening between the two QC platform, right? So Instamart continues to lag Blinkit in terms of growth and incremental unit economics. So if you see the current Q4 quarter numbers as well for Blinkit, so Blinkit reported around minus 1.9% kind of adjusted EBITDA margin. Even they have expanded around 300 dark stores in this quarter, similar to what Instamart did. But if you see the adjusted EBITDA margin of Instamart, it has widened from 14% last quarter to minus 18% now. And company has also now saying that the contribution break even for QC segment will be next 3 to 5 quarters. So we are factoring in our numbers from FY28 only, not from 27, the profitability of QC segment. So there is a risk remains in this QC segment because the competition intensity is also high.
Point taken. So you are saying that likely you're being conservative and you've pushed maybe, or you've given an additional year to Swiggy to actually deliver on that number. Is that understanding correct?
All right.
Okay. And is there a high level of uncertainty of Swiggy achieving that as well, just because of how quickly the business model is evolving? I want to close this point, and that's why I try to reiterate this.
We don't believe that there is a risk remains on that front because it's already it's been now. So they are also a third player in QC segment, right? And there, if you see their monthly transacting users and everything, even in their dark store, so they have now reached around 1,000. So we believe that they will be a number 3 player in this segment, and they can easily achieve profitability in this segment from second half of FY27 or from FY28 onwards.
Got it. Shobhit,
So
sorry, go ahead with your point.
Yeah, so that downside risk remains low.
Okay. Shobhit, just wanted to drive home this entire point because a couple of things that the management has said in their shareholders letter as well. They've said that now they will be burning less of cash. Their dark store guidance also, they've said that they'll be doing lesser dark stores Q1 FY26 onwards. All this pointing towards, a more margin accretive model. But right now, competition is hitting hard. Zepto is burning cash. Zomato as well is burning cash, and both of them are sitting on higher cash as compared to where Swiggy is sitting in. Just wanted to understand that considering the guidance that the management has given, do you think that market share loss will take place Q1 FY26 onwards?
So if you see on the competitive intensity front, so Zepto was very aggressive till last quarter, but from Q4 onwards, they have also reduced their cash burn. So earlier they used to do around 15 crores of cash burn per quarter, but that has been reduced to around 1,000 to 1,200 because even they are they are also coming out with an IPO in next 6 to 8 months. So they need to show some improvement in their operating metrics as well before IPO. For Instamart, so Q4 was the peak of their investment in terms of dark stores, etc. But from Q1 onwards, we believe that the losses should taper down because what they are doing is that now they will concentrate on their existing cities because they have reached around 100 plus cities. And unlike food delivery, in which they are present in 700, 800 cities, in QC, they are not planning to enter beyond 100 currently. So they will go deep down into their existing markets.
But just to understand, just to understand, because overall, even in terms of monthly transacting users, they've not been able to cross that Blinkit mark. So do you think that this market share loss will continue for Swiggy Instamart?
So we are not saying that in QC they will gain any market share, but we are saying that they will continue to be the number 3 players. So first one obviously will be the Blinkit, second Zepto, and then Instamart, and then fifth player can be Flipkart Minutes or Amazon or Reliance Retail, etc. But the company will continue to be the number 3 player in the QC segment.
Okay, so that was a slice of the conversation we had with regard to Swiggy, and Shobit's views coming through on that one. Let's look at how our KYC ratings stack up where Swiggy is concerned. The income statement, while growth is there, what you're not seeing is the consequence of that on profitability. Balance sheet, while it's okay, if cash burn were to continue, that's the key risk on the cash flow side as well. For the moment, we're not seeing an improving trajectory as substantial as the top line growth in the income statement. We're not seeing that on cash flow. Shareholding is a neutral because, of course, there's some amount of risk from the lock-in expiry that's about to come through, but you have some chunky shareholders as well within the company. Street cred is a neutral, largely on the back of the fact that your listing gains haven't come through, of course, but the stock has been extremely volatile, and therefore it's difficult to determine as to how that move has spooked the street. Street coverage is a thumbs up because there's very, very strong coverage, and the target price upside average is around 30%. Valuations are a neutral given that Zomato is definitely trading at a premium to Swiggy, and the business strategy at this point is just difficult to determine because everything is moving on a quarter-on-quarter basis in terms of how the business is evolving. So lots of uncertainty. That's the best we've been able to do with regard to Swiggy, 3.5 on 5. But with that, completely out of time on this edition of KYC. Stay tuned. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of
those strikes across those 9 terror hubs left more than 100 terrorists killed, including high-value targets such as Yusuf Azhar, Abdul Malik Rauf and Mudassir Ahmed that were involved in the hijack of IC-814 and the Pulwama blast.
The difference here was that we had targeted the terrorists. The adversary now has targeted our civilians and the military infrastructure. So it had to be responded to.
Some of the airfields and dumps saw repeated attacks in waves from the air. All were thwarted.
Our aim was not to inflict casualties, but in case there have been, it is for them to count. Our job is to hit the target, not to count the body bags.
To my counterpart, highlighting these violations of the understanding between the DGMOs on the 10th of May and our firm and clear intent to respond to these fiercely and punitively.
This time, if Pakistan dare take any action, and Pakistan knows it, what we are going to do.
In a dramatic display of power and precision, India has struck a decisive blow to Pakistan through what is being hailed as perhaps one of the most expansive military operations undertaken by India against Pakistan in recent times. Codenamed Operation Sindoor, the tri-service mission was launched in response to the brutal Pahalgam terror attack on April 22nd, which claimed the lives of 26 tourists and a local. Over a span of 4 days, starting May 7th, the Indian Army forces executed precision strikes targeting terror camps in both Pakistan and Pakistan-occupied Kashmir. These operations resulted in the elimination of over 100 militants, including key figures involved in the IC-814 hijacking and the Pulwama attack. when Pakistan did not learn its lesson and retaliated by attacking Indian military bases and civilian areas, which, as we all know, were successfully intercepted by India, India too responded by attacking 11 of Pakistan's air bases. Needless to say, India has inflicted significant damage on Pakistan, which finally prompted them to reach out for a ceasefire. Pakistan is believed to have reached out to the United States for urgent intervention after its military bases and strategic assets were pounded by India. US officials were already in contact with both sides in anticipation of escalating tensions and directed the Pakistan DGMO to activate its direct line to the Indian Army and avoid any delay. On May 10th afternoon at 3:35 p.m., the DGMOs of both sides had spoken and a ceasefire was put in place by 5 p.m. the same evening. Initially, there were reports of violation, but subsequently it was a night of calm in the border areas. Remember, India has repeatedly emphasized Operation Sindoor was never about revenge. It's about redrawing the lines of tolerance which Pakistan has continued to violate through the years. For example, the Indus Water Treaty has now been linked to terror, and it has been conveyed by the government that the treaty would remain abolished despite the ceasefire. The government has also conveyed a firm message that this is going to be the new normal post-Pahalgam, and there will be no business as usual. India has also exposed Pakistan as a terrorist hub globally and said that any future act of terror on Indian soil will be treated as an act of war. Now, while the military superiority has been established, war is more than just what military action entails. It's about psyops, it's about communication, it's about positioning. How has India fared there? To speak on this, I'm joined first in this special program by Harshvardhan Shringla, former Foreign Secretary. Ambassador Shringla, thank you so much for speaking with us on this very important topic, even as the fog of war and misinformation continues, because we live in an era of social media. And this is where India has to put its stance forth very, very clearly.
Absolutely. I think, we have made our position very clear in the wake of the attacks in Pahalgam on 22nd of April. Our very targeted, calibrated strikes on terrorist camps, I think, made a very telling point. What is very important is that our strikes were at the headquarters of the organizations that were directly responsible, not only for Pulwama, not only for Pahalgam, but also for Pulwama in 2019. And also, of course, if you go back, it is linked to the IC-814 incident. From that perspective, I think that the terrorists who have been involved with, cross-border attacks into not just Jammu and Kashmir, but other parts of India as well, have faced very just retribution in the form of our strikes under Op Sindoor. And if you see the sort of high-value terrorists who were casualties of that strike, I think we have proved that we can go to the heart of Pakistan-occupied Kashmir to strike at terrorist targets at will. And so whether it is the headquarters of the Lashkar-e-Toiba or the Jaish-e-Mohammed or other terrorist groups, I think we have been able to pinpoint them, target them, and effectively neutralize them. So that is the first objective and the first message, that terrorists, wherever they are, will face just retribution. That is what Prime Minister Modi had assured the people of India when he spoke to them in Patna, in a public rally in Patna. And I think we have fulfilled that assurance that we will get those terrorists and those responsible for those attacks, at Pahalgam. But subsequently also, and as part of that effort, there has not only been a response to Pakistani, I would say, attempts at targeting both our military infrastructure and civilian, targets in many parts of our country, right from the northern to the western borders of Pakistan. Our response has been very, very firm in that regard.
Yes.
We have demonstrated that we can hit targets deep inside Pakistan, in Khyber Pakhtunkhwa, in all parts of Pakistan with amazing accuracy. I think the sort of weaponry that we displayed on the 10th of May, when we hit 8 of their air bases and some radar sites, demonstrated that we had technology, we had the capabilities to penetrate Pakistani air defenses and hit them in different parts of their country with pinpointed accuracy. I think that is what really got them to intercede for a ceasefire. More importantly is the diplomatic and economic pressures that we have applied in Pakistan, including holding the Indus Water Treaty in abeyance. I think all of these are part of an effort designed not only to deter terrorism, but also to preempt future terrorist acts in India. And I think that message has gone across very clearly to Pakistan.
Has that message been evenly put across the globe as well, Ambassador Shringal? Let me come back to that point about social media, about Western media narratives. And, we saw a lot of Indian diplomatic seniors come out and speak to international channels. The Pakistanis did the same. How important does that narrative also become?
Well, your narrative is very critical in today's day and age where it's a completely interlinked world. Whether it is business, whether it is economies, whether it's people-to-people contacts, or even governments, the influence of public opinion and perception, not only within your country, but on a global basis is very important. And we need to get our communications and, our messaging across very clearly. And that is part of the effort. I think a number of our senior diplomats have gone, on various television channels and spoken out. I recall I'd done the same in 2019 in the wake of the Pulwama attack. And of course, I think it's important not only for, official representatives to be conveying the message, but essentially at all levels, at academic, intellectual levels, to be able to get this message across about our point of view and what exactly is our sort of policy framework under which we are operating. And I think this is critical when it comes to, conflict of this nature where everything moves very fast. You need to be very, very proactive, and you need to be out there, conveying the big picture to audiences across the world. And I was fortunate because I did at least 3 or 4 interviews on BBC, Al Jazeera, and a number of international channels. And so did a lot of other people. But more of this is needed, I think, and we need to get our messaging across very quickly and very effectively.
Let's talk about the big T question. The announcement of the ceasefire coming from US President Trump, and then the whole, fog of war and parallel narratives about who called who has the upper hand, etc. How does India respond to all of this confusion and chaotic narrative that is being planned with clarity and determination?
No, I think a lot of information is now, coming across, and things are clearer than what they were on that particular day, on the 10th. It's clear that, the US had been engaged at various levels. I mean, you saw that Vice President J.D. Vance at one stage said that this is really an issue that has to be dealt with bilaterally. There's not much we can do. These countries have to resolve their issues between themselves. I did interpret that as having given us the right to self-defense and right to do what we needed to do vis-a-vis Pakistan. But later, I think, obviously, with our sort of, let us say, responding very firmly to Pakistan's escalation, we have to keep in mind that we have always said that our objective has always been a counterterrorism effort, right from the beginning. And even on the 7th, the night of 7th May, when we had the precision strikes on terrorist targets, after that, I'm told a message was sent to Pakistan through the DGMO channel to say that, look, we have hit at the terrorist infrastructure. We don't want to escalate it further. But from what we see, Pakistan, escalated it hugely, both on the night of 8th and the night of 9th May, by using high-speed missiles, drones, loitering munitions, fixed-wing aircraft against targets across India. On the 9th night, there were 26 locations that they attacked in this manner, but unsuccessfully because our air defense is very effective. But our message has always been, and if you saw the press conference on the 9th evening, the Foreign Secretary also said we are committed to peace. The onus on de-escalating lies with Pakistan. After all, they had escalated it severely to target not only civilians, but religious sites, schools, health centers, etc.
Yes.
And their escalation has been, completely disproportionate. So they needed to make the effort to de-escalate. And I believe after our, let's say, response on the 10th of May, on the morning of the 10th of May, when we were able to bomb 8 of their airfields and inflict severe damage, I think they realized that the game was up, and they went across and requested, a meeting of the DGMOs, and the rest is all known to us. And I think in that sense, it was a very strong message. I would say a combination of messaging, which involves both, psychological messaging, but also effectiveness on the battlefield, effectiveness of our armed forces to, I think, get our message across very, very clearly to Pakistan, that brought them to the table and got them to intercede for a cessation of fire.
So, I'm just going to come back on this again, because you see the chatter and the questions in people's mind. Military superiority, no question mark. At the end of the day, is it such a big deal that, Porters came out and tweeted it or put it on Truth Social first, and then the Indian establishment, the Indian army, and of course, came out and said that, yes, there is a ceasefire. Why are people harping on this? Does it matter that much is what I'm trying to understand.
Well, let's look at it this way. The United States is a friend of ours. They've been helpful to us. And we've been in touch with them throughout at senior levels during this entire incident, right from the terrorist attack at Pahalgam to the current stage. Obviously, there were some at a later stage some efforts at bringing our two sides together. President Trump himself is quite prolific when it comes to Twitter and when it comes to messaging on the social media. And there hasn't been too much on the Ukrainian front or, on the Middle East front to talk about. But I think from his point of view, he basically perhaps jumped the gun, because they've spoken to the Pakistanis clearly, asking them also, and they would have got a sense from the Pakistani side that there has to be a move towards a ceasefire. And his announcement was made. I think there is no doubt that the US's role was a helpful role. But the fact of the matter is, this is a bilateral issue. It has to be dealt with by India and Pakistan. And this is not a matter that involves mediation or involves third-party involvement beyond some basic facts. As has been conveyed, one of the things we hear is that the US side was very clearly told at very senior levels that the only issue really now is the question of Pakistan-occupied Kashmir or the return of terrorists, to India. And there is no other issue that we need to discuss with Pakistan at this point of time. So there is obviously a fairly, from our side, a fairly correct and firm stance in the light of continued acts of terrorism, including the most heinous attack in Pahalgam.
Yeah.
And I think this is something that we will continue with, that firm stance with Pakistan, in dealing with Pakistan.
Yeah, no, absolutely. And we need to talk about the new red line we've drawn, but I'm told you have to go. So thank you so much, Ambassador Shringla, for speaking with us today. But I'm welcoming on Dilip Sinha, author and former ambassador, and of course, Dr. Tara Karta, former Director, National Security Council Secretariat, also joining me now on this conversation. Welcome to both of you, and thank you so much. Mr. Sinha, let me start with that point to you specifically. The clarity that has now come and a new red line drawn, that acts of terror will be seen as an act of war. The importance of this change, perhaps not percolating down yet. Explain to us and contextualize why this is key.
Yes, it's very important to understand this. India has maintained that it has the right to strike inside Pakistan, not merely in the occupied territories, that's the occupied Jammu and Kashmir, but in any part of Pakistan. There were times when we felt that we could cross the line of control, but not the international border. In the case of the Kargil war, we didn't even want to cross the line of control. But that hesitation that we had all these years that has been completely set aside. And the other point that Pakistan has been maintaining, that its nuclear deterrent is what keeps India from crossing the international border. That bluff has been called, and India has established that it will strike regardless of the Pakistani threat of using its nuclear deterrence in case India attacks. So that these two principles have been established in this very brief 4-day war that we have had with Pakistan.
Dr. Tara Karta, that same point to you. So what happens hence on? How are those terms of engagement being redrawn if there is another terror attack? We're not waiting for this whole, dog and pony show. No, we didn't do it. We don't take responsibility, etc. We're going to look at it as an act of war and act accordingly.
Yeah, I think that's a good question. It's also a difficult one to implement because, as we've seen, Pakistan is not going to lay off. In fact, I think you can expect another terrorist strike pretty soon because there's a bunch of people who are furious as hell. So the question is, can we, meanwhile, also bring out the fact that call for sanctions on Pakistan? I mean, the whole US position seems to de-recognize the fact that there are terrorist camps which are mentioned clearly in UN documents. In the designated list, it's all there in black and white. Street names, what is the gully name, everything is there. And that is what we've hit. So there's no two questions that this is a terrorist scam that we've hit. But for whatever reason, the terrorism aspect has moved out of the international dialogue. And now it's all about Ukraine, it's all about war and Gaza and these major wars while we are made to bleed on terrorism. So, I think the message sent is pretty clear that we are not going to take this. And remember also that we had a sort of a civil defense exercise to back up that conviction that, listen, if you want to go to war, we are ready. Our people are ready. We are ready for anything you throw at us, but we don't want war. And that, I think, is what came out in the briefing which the DGMOs gave, that each step was taken with great deliberation.
Yeah.
In
terms of just that one point, Dr. Karta, on the international conversation becoming about the big conflicts and not so much about terror, even this sense of false equivalence, right? We don't be hyphenated. It's not India, Pakistan. It's Pakistan's rogue state, India defending herself and setting the record straight. How do we make sure that this is not what comes out of it?
I think what the ambassador said earlier, I think is you had this whole thing of giving your version to the media outside, which we are not really doing as of now, because much of this stuff which is coming from US academia seems to reflect the Pakistan position. We had somebody, I think on your own channel, who was saying, there was this reporter who said, they don't seem to understand that these camps have existed for years. I mean, look at the recent DG ISPR, his conversation with the press. He says, jihad is what we live by. Can you imagine an army saying that? So where is this? It is not enough to outrage. We have to put this out into universities, into media abroad, and everywhere to make sure that this message with pictures, with data, and even your, the much quoted, the folders that you have shared, that's not good enough. We have to get this into a research in terms of, because this is a unique war. Remember, this is absolutely unique that you hit under the nuclear threshold, you got your objective.
Yeah.
Let's study this war.
That's the thing, that we got our objective under the nuclear threshold. Ambassador Sinha, I'm going to come to you on that part because, in common parlance, the question, so what did we get out of this? We hit the air bases, destroyed terror camps, and ensured that a message was sent. Is there something else that we need to show?
Well, the struggle continues. The struggle against terrorism is not going to be an easy one, partly because it's very difficult to control terror through military action. We have seen other countries try to do it. They have failed. So we have to understand that military action alone cannot control terrorism. And especially now, as Dr. Karta pointed out, the world's eye has been taken off terrorism and onto issues like Gaza and Ukraine and then the trade issues. So there is a bit of a problem internationally that we face. So we have to look at a longer term strategy, apart from the action that we took just now to ensure that we sent a message across to Pakistan and that it cannot sit back and feel that India will not react to a terror attack inside India, and that whatever red lines Pakistan draws, we will respect those red lines. But having said that, we have to understand that there's a longer battle ahead of us, and that is how to deal with Pakistani terrorism. And here we have to look at a much larger issue of Pakistan's policies, Pakistan's own support of terrorism, and its own the manner in which it has fallen victim to its own terrorism, especially by the terror organizations that it spawned. They have started biting Pakistan. Now we have to exploit Pakistan's internal fault lines and tell the world that the terror organizations that Pakistan claims are terror organizations like the BLA and the TTP are no better or worse than the ones, for example, the ones that Pakistan says are freedom fighters, like the LET and the JEM. So if LET and JEM are jihadis and freedom fighters, so are the BLA and the TTP. And that is the message that we need to put across to the world, that the view of Pakistan in the world has to change. People have to understand what are the forces that created Pakistan.
Just Ambassador Sinha, your take on why America is so indulgent of Pakistan, because Donald Trump has not minced his words in the past. And, even the kind of funding that they're getting, using it to fuel terror, why the indulgence?
Well, that's an old story. That's an old story because you go back to the 1950s when Pakistan offered its territory for strategic purposes, and Pakistan has been using that all through. In the 1970s, when America wanted to reach out to China, Pakistan offered itself as a bridge between the US and China. The Pakistani army has proved very useful for the US in many ways. And there is also a view inside the US that in order to keep India in a certain degree of restraint, Pakistan is a very useful country to have. Then there's also the negative fear that Pakistan keeps touting to America, that if America does not help Pakistan, Pakistan will turn towards China. So America has the other problem that if they do not help Pakistan, then Pakistan will go completely into China's camp. So Pakistan takes full advantage of its geographical.
We saw that in the weaponry. We saw that in the weaponry used. I mean, this is a story that's unfolding, and we've perhaps seen the first episode of it. But make no mistake that in that information warfare, which is following the military operations, you have to be very, very clear of what India has achieved. Thank you so much to all of you for joining us on this show as we break down what's happening. And of course, to all of our viewers, thank you for tuning in. Stay tuned. A lot more coming up on the other side on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're watching Top Trades. You're watching Profit Buzzers, and I am Hiral Datia. With me is Varsha. Varsha, good afternoon. An interesting day of trade that you're watching out for, because the kind of roar that the markets have come back with is absolutely interesting. Let's quickly pull up Nifty 50 on your screens and see what that is doing in trade as we speak, because clearly that uptick is seeing a good amount of confidence. 3.5% up move coming in terms of Nifty 50 or trading at the day's highest levels. Let's quickly pull up Bank Nifty on the screens as well and see what Bank Nifty is doing in trade, because good support from there. 3.2% higher, 55,283 is what you're tracking on that front. If we can just quickly pull up all the contributors in terms of Nifty 50 and then the heat map, that will tell you more. HDFC Bank, ICICI Bank, Reliance Industries, Infosys, these are the ones which are contributing to this up move. It's mainly Sun Pharma and Indocin that's taking a beating, and Sun Pharma for obvious reasons with regards to where the pharma sector goes. Varsha will be talking in detail about the same as well. Apart from that, let's quickly look at what's happening in terms of the sectoral picture, and then we'll go to the broader markets. In terms of the sectors, you have the metal pack, which is seeing some good amount of strength today, followed by real estate, IT and energy. Pharma again was in the negative, has turned into the positive as well, which is seeing gains of nearly 0.1%. So that's with regards to what's happening on the back of the border tensions, which have eased. Markets are taking an absolute breather and are coming back in a very positive way, Varsha. Broader markets are going to be interesting, because that's where you did see a good amount of moves, maybe on the upside or the downside on the back of the tensions.
Exactly.
But today is also very interesting.
Yes. So,
Okay, Varsha, just stay. Let's just quickly first address the breaking news that we are picking up on the ticker. US to cut tariffs on Chinese goods to 30% from 145%. And this is with regards to the number of days is what we need to watch out for. But US will suspend some tariffs for 90 days. US Treasury Secretary Bessent says neither US nor China want to decouple. That's what is breaking. Let's quickly look at the tariff numbers. 10% from 125% for 90 days. That's what we are picking up from Bloomberg right now. And this is going to be interesting, because this was a deal that was in the offing. Now, how it will impact the Indian companies is what we need to wait and watch and see. But clearly, the rates on Chinese goods will be reduced to 30% from 145%, and this is for 90 days. How does this 90 days, criteria play out is going to be interesting, because what happens after 90 days is going to be crucial. And they're removing the ad valorem rates as well. This will be effective April 8th and 9th. I think that's the data that we've got so far. But moving on, let's look at all the defense companies as well that have been buzzing in trade. Strong gains have continued on this aspect. Anushi is standing by to tell us more. Anushi, this is a sector which is heightened investor interest. The key concern is whether they should be making their investment bets into defense or not. Firstly, if you could help us understand the companies, their products, their order book, and what happened in the past during a war. How has the government spending changed?
Right. So if you look at the Indian defense space in general, a lot of focus has been in this particular sector, especially in the last 1 week or so, considering the India-Pakistan escalation that we've seen in the tensions between the two countries. Now, this is after the Pahalgam attack, of course. Now, what has happened with the India defense pack, it's up over 15% in this last 1 month period itself. If you do see the last couple of trading sessions, a lot of moves of this are on the basis of sentimental uplift that we are looking at in terms of what it could mean for defense ordering going forward. If you talk about the year-to-date return, now that's up over 9%. But let's also talk about what is fueling this defense rally that we are looking at. First is the geopolitical risk that is impacting the defense spending that we are seeing. We've seen the boost coming from European countries also, wherein they've stepped up their spending. So that is another factor that we should be watching out for. Robust order book from some of these companies is also another factor that we are looking at. So that is something that we should be keeping an eye out for. Valuations, if we see now, they have risen to 50 times. If you talk of the PE ratio as compared to a 5-year average of 37 times that we are looking at. But let's quickly see what these defense companies exactly do. Firstly, if you talk about IdeaForge, let's talk about that. Now they are into producing Switch UAVs. UAVs is unmanned aerial vehicles, Netra V series, and something like a Ninja UAV that we are looking at. Now this Switch UAVs that we are seeing are used for long range surveillance and security mapping, military mapping that we are seeing. So very important in terms of where only they are one of those manufacturers of drones that we are looking at. So if you look at the order book of this company, that is in the range of 13.6 crore that we are looking at. So key role for IdeaForge to play over here. Now let's talk about something like a Bharat Dynamics. They're involved in guided missiles and allied defense equipment that we are seeing. In fact, if you see, they're also involved in the fields of unmanned aerial vehicles and launching precision guided missiles that we are seeing. Just to give context on some of the missiles that they have been involved in terms of where manufacturing is concerned, surface to air missiles, which includes the Akash weapon system, along with air to air missile system, which includes the Astra weapon system. So Bharat Dynamics, another key player in terms of where the missiles is concerned. So that's Bharat Dynamics for you. Now the only Indian manufacturer of aerospace is what we are seeing is something like a Hindustan Aeronautics. Now this...
I'm going to just interrupt over here because you have the US-China joint statement which has just started. We'll just cut into it as well.
Action. Both countries represented their national interests very well. We concluded that we have shared interest, and we both have an interest in balanced trade. The U.S. will continue moving towards that. I will let Ambassador Jameson talk about the President's initiatives that began on a historic announcement, trade announcement on January 20th, which no other president has ever done, following to April 2nd, when we implemented the reciprocal tariffs.
Thank you, Secretary, and I will echo your thanks to the Swiss government and Swiss officials for hosting us this weekend. The atmosphere was very conducive to discussions, and thanks to them we were able to have very constructive and positive conversations with our Chinese counterparts who clearly came to deal this week. The rapid nature that we were able to conduct and conclude these discussions is a testament to mutual understanding and mutual respect between the Chinese and U.S. sides. With respect to the U.S. trade position, our interactions with China and the agreement today, please keep in mind that the United States trade deficit has ballooned over the past several years, ending up at $1.2 trillion deficit in goods as of the end of last year, which was an approximately 42% increase over a few years prior, when there was an $850 billion trade deficit at the beginning of the Biden administration. So that is a rapid and expansive increase in the trade deficit. And our view is that this is driven in large part by non-reciprocal trade, among other things, and the result has been offshoring of manufacturing and other negative impacts on the U.S. economy. And so on January 20th, when the president was inaugurated, he released the America First trade policy, which was comprehensive and flagged that he, and actually directed agencies, including U.S. Trade Representative and others, to research this issue and to provide options, which we did, and the president elected to impose reciprocal tariffs on April 2 to address this national emergency of the trade deficit. There was a global baseline tariff accompanied by higher reciprocal tariffs for each country depending on the level and intensity of their trade surplus with the United States. In all of this, China was assigned a reciprocal tariff rate of 34%. China was the only country that chose to implement retaliation against the United States for this reciprocal tariff. All other countries, withheld and decided that they wanted to negotiate with the United States or simply not retaliate. And so we've been in detailed discussions with other countries for several weeks at this point. China, as you know, retaliated not only with tariffs but with disproportionate and asymmetrical non-tariff measures in order to maintain the effectiveness of the reciprocal tariff measures. The president increased our tariff rates to offset Chinese retaliation. And as you know, this escalated to a point where both sides had added 125% tariffs, and with the Chinese side, additional non-tariff measures amounting to an embargo in some senses on trade, an effective embargo, which of course was not a sustainable practice for either side. And so today, with this agreement, we come to agreement that our reciprocal tariff rate will go down to 10% on the United States side, so it goes down 115%. We enter into a 90-day pause period for negotiations, which both the Chinese and the United States are very committed to, and the Chinese on their side also go down 115% to 10%, and they remove the countermeasures that they have in place. To be very clear, other measures that the United States has put in place in the past, whether it's tariff measures from 2018 or since, tariffs under other statutory authorities, tariffs related to fentanyl, those remain unchanged for now to the side. I'll just make one point, is that both the Chinese and the United States agreed to work constructively together on fentanyl, and there's a positive path forward there as well.
Okay, great. So let's start with some questions.
Well, just if I may make a few final remarks to give you framing and context. I think throughout the trade process, we have had a plan, we have a process in place, and now with the Chinese, after this weekend, we have a mechanism for continued talks. So process, plan, and mechanism. I would say one of the big takeaways from this weekend, the United States will continue a strategic rebalancing in many areas that were exposed as supply chain weaknesses during COVID, whether it's medicines, whether it's semiconductors, steel, we've identified 5 or 6 strategic industries and supply chain vulnerabilities, and we will continue moving toward U.S. independence or reliable supplies from allies on those. But the consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods. We expect that as the negotiations proceed, that there will also be a possibility of purchase agreements to pull what is our largest bilateral trade deficit into balance that has gotten out of balance. And much of this has happened through neglect over the past 4 years, as the previous administration did not engage on this issue. That was put forward to us by the Chinese, in fact, and we can see it in what happened to the Phase 1 agreement. We are only looking forward, and we look forward to very good discussions now that we have the mechanism created in Geneva this weekend for talks.
Great. And with that, let's kick off questions. I'll start in the front row. Jenny, Leonard, Bloomberg.
Thank you so much. Going into these talks, the president posted on Truth Social that he believes an 80% tariff on China seems right. It obviously went down substantially more. How did you end up going to 30%? Was that the president pushing you, or the Chinese not budging before you went down? And then secondly, you have a 90-day pause now, as you have with other countries. What specifically do you want to see in those 90 days? What kind of progress do you want to see in those 90 days and have agreed to by then to not ratchet up the tariffs? Because it is just a pause, right?
Yes, so
the tariffs then snap back, basically, if you don't have something agreed upon that is substantive.
So the Chinese April 2nd number was 34, continues to be 34%. I'll let Ambassador Greer answer the first question. And just like with all our other trading partners, as long as there is good faith effort, engagement, and constructive dialogue, then we will keep moving forward.
I would just say, Jenny, with respect to the president's message and ultimate rates, I mean, everything is a negotiation, right? And the president, he gives the Secretary of the Treasury and I and other members of the cabinet direction and advice on how to proceed. And we ended up at a result that is very good for the United States, very good for China as well. We retain our 10% global baseline tariff, which we have on other countries. We have, in addition to that, previous measures that we've retained, which have been, frankly, effective in reducing the U.S. bilateral trade deficit with China over the past few years. So that leaves us in a very good position, all in, with respect to measures on Chinese imports, but more importantly, leaves us in a constructive path forward to have a positive conversation with the Chinese on how to rebalance and have more constructive trade.
Great. In the back, Associated Press.
Associated Press. Hi, I'm Jamie from Associated Press. We just heard our colleague talk about 30% tariffs. I'm just trying to understand these numbers here because they're all over the place. We were at 145 before, apparently, and 125, I believe, from the Chinese side. So can you say clearly now that, I think the question was, right now for the 90-day period, the U.S. tariffs on Chinese goods will be down to 30%? Is that correct for the 30? Could you speak to
So again, this agreement is really about the reciprocal tariff, which was imposed by the United States on April 2nd, and the escalatory steps which followed. Those on each side, the Chinese side and U.S. side, ended up at 125% on each other. The Chinese had additional non-tariff countermeasures. That has all come down by 115% to 10% each. The United States earlier this year imposed 20% related to fentanyl. That still exists. So if you're looking at Trump Term 2, tariffs on China, right now effective, it's 30%. There are prior measures which change by product, by sector, by level, et cetera. You can't really give a specific number on that right now. What matters for the agreement today is that we each agreed to come down on the reciprocal tariff and related retaliation to 10%. So a reduction of 115% down to 10%. Fentanyl is on its own track, but on a very positive track where we're having very constructive conversations with our Chinese counterparts.
And I would add a couple of things. This does not include any sector-specific tariffs that have been put across all of our trading partners. And as the ambassador said, I think he would agree with me that the upside surprise for me from this weekend was the level of Chinese engagement on the fentanyl crisis in the United States. They brought the Deputy Minister for Security.
Public safety.
For Public Safety, who is not traditionally part of the trade team or the negotiating team, and he had a very robust and highly detailed discussion with someone from the U.S. National Security Team.
Great. Next, John Huddy with Newsnet.
Mr. Secretary, will there be any immediate impact that U.S. consumers will see from this? And what was the toughest part of the talks? The Chinese are, notorious for being very difficult negotiators. Was there any moment that you felt the talks could break down? And as far as the fentanyl, I'm sorry, I know there's 3 questions here, but what are the Chinese willing to do in terms of the fentanyl crisis? Did they make any promises or any agreements to combat fentanyl?
Okay. Well, there's a lot to unpack there. So let me recap that. So you're asking U.S. consumers, the last one was fentanyl, and what was the second question?
The toughest part of the negotiation.
Well, I'll start there first. Both sides represented their national interest well, but we also concluded that we had shared interest and that neither side was interested in a decoupling. And again, a lot of back and forth on various differences in views on fair trade. We informed them, I had a discussion that trade deficits are a result of 3 things. 1, terms of trade, 2, currency, and then 3, the United States fiscal position. We informed them that Trump administration is working very hard on containing this out-of-control fiscal deficit that we inherited from the previous administration. 2, there was no discussion on currency. And 1, it was on terms of trade. And on fentanyl, again, for the first time, there was engagement between 2 teams with detailed knowledge. And I think for the first time, the Chinese understood the magnitude of what is happening in the U.S. in 2018 in Buenos Aires. They did a good job of banning the actual fentanyl, but what we have seen is substantial interaction between bad Chinese actors and many North American drug dealers, especially Mexican cartels. Treasury has designated several of the Mexican cartels as foreign terrorist organizations. We made that clear to the Chinese. They were very receptive. As you may or may not know, the Chinese have very draconian measures for the sale of illicit narcotics in China, and we have asked them to be equally as draconian with the people who are poisoning Americans.
And let me make a point. Your question about what was the toughest part of the negotiation, I would submit it was actually, in the lead up to the negotiation, trying to repair channels of communication that had atrophied under the last administration, where, our office, for example, the Office of the United States Trade Representative, had almost no substantive discussions with the Chinese side on trade. And although we have significant differences with the Chinese on trade and economics, and we have major complaints, you have to discuss these complaints. You have to have a channel for discussions, and overcoming that was a substantial challenge. And a lot of work went into that over the past several weeks, so that by the time we got here, we were able to be very pragmatic with each other. And to be sure, there were tough things to deal with on the level of removal, the timing for implementation, managing each side's domestic politics, et cetera. And I won't go into too much detail. But I would say the toughest part was simply getting to a position where we could, in good faith, both sides work with each other. And once we did, we were able to do this in a couple of days. This is not the first time I've done trade negotiations with the Chinese, and sometimes it can take a very, very long time to overcome misunderstandings. We were able to do that effectively over the past few weeks, which enabled us to be very pragmatic and effective this weekend.
And I think we leave with a very good mechanism to avoid the unfortunate escalations as we saw after April 2nd from happening again. What had been very unusual about the relationship was that President Trump, Party Chairman Xi, they have a good relationship, but that the nature of what has happened since April 2nd could have been avoided if we had had this kind of mechanism in place, and I believe it is in place now. I think we leave today with a process that will move forward, and again, great mutual respect for our Chinese counterparts. I believe they showed us the same.
And the impact on U.S. consumers? Will U.S. consumers see any result
I mean, Mr. You're the Treasury Secretary, so you're better suited. But I would say on the front end, there's been a lot of talk about impact on consumers that just never really translates to the numbers. Consumption remained high, et cetera. And so I think what we're going to see is that we're going to have our economy continue taking off as we put structure around these negotiations and get global trade into a better place.
And as I reiterated last week, the Trump economic plan is three pieces: trade, tax, and deregulation. Trade has been implemented first, and that process is occurring. We believe that the tax portion is going very well. Speaker Johnson, Leader Thune, who I am in constant contact with, believe that midsummer we will pass, as the president likes to call it, his one big beautiful bill, and we believe that that will provide substantial relief for American households. And then deregulation, a hidden and pernicious tax on American households, is regulation. We believe that the last administration added several $1,000s a year to American families' cost, and that we will be not only cutting those rolling that back, but cutting those substantially.
Thanks. I think we have time for about maybe 2 or 3 more questions. The most, sorry, ma'am, name and outlook, please.
Yeah, it's Imogen Folks, BBC. It's very heartening what you're telling us. I'm wondering whether you think it might have been a better idea to start at this point of negotiation rather than start with a big list of tariffs and all the global turmoil that caused and the fear, frankly, in some countries around the world. How about, do you think with hindsight might have been better to reach out and say we want to talk to you guys about this?
I disagree entirely. We have spent decades at the World Trade Organization in multilateral and bilateral negotiations trying to get other countries to reduce their tariffs and non-tariff barriers to be more reciprocal with the U.S. We've had one of the most open economies for decades. The promise of the WTO and the multilateral system is that everyone was going to come down. It turns out the U.S. went down significantly. There were other economies that had low tariffs as well, but retained very high non-tariff barriers. We have tried really hard to work within the system, and the net result is a $1.2 trillion deficit in goods. The net result is manufacturing went to China, East Asia, Mexico, etc. So we tried all of that. So the idea that we can just keep saying, well, why don't we just talk a little bit more and we'll have a different outcome, I think just is totally detached from reality.
And I would add a couple of things, that as our 18 important trading partners come to us, many with very good deals, as the UK, who skipped to the front of the line as our oldest ally, as Ambassador Greer and I look at their proposals, again, to lower tariffs, to lower the non-tariff trade barriers, obviously, UK does not have a currency manipulation problem. And the subsidies for labor and industry, we look at these, and I think, how did we get here? How did we get here? And I echo part of what President Trump said, that he doesn't blame the other economies for taking advantage of a fluid, taking advantage of the situation when they were allowed to do it. He blames previous U.S. leaders. So we are just trying to restore a healthy equilibrium that the U.S. economy has become very unbalanced. On one side, we have a forward-leaning, the deepest and widest financial markets in the world. We have financial innovation. We have the tech sector that is the envy in the world. On the other side, we are a natural resources economy led by energy. So it is a barbell. But in between, precision manufacturing, especially precision manufacturing, has been wiped out. And it is our intent to bring that back. So we want to rebalance. And I think that there is a big opportunity. If I think about this weekend, the Chinese, they have gone the other way. They are unbalanced in terms of overproduction in the manufacturing sector. They have stated, but have not yet rebalanced toward a more consumption-oriented economy. And there is a chance, if we can open up trade to China, have more fair trade toward the U.S., that we could rebalance together. So I reject the notion that business as usual would have worked.
Great, and I think this will be our last question as we're just about out of time. That's without the Urs Gehriger with Deborah Walsh.
Yes, I have a question in regard of the setting of these very successful talks as we hear. Switzerland has been in the center for international conferences for many decades. In recent times, we've been under tremendous pressure. The ambassador of Joe Biden to Switzerland called Switzerland the hole in the donut. My question is, how high does your administration value reliable Swiss neutrality for conferences or meetings as we just witnessed this weekend?
Well, I won't speak for the previous ambassador. My neighbor in Charleston, South Carolina, is the ambassador under President Trump, Ambassador Ed McMullen, who was highly respected here. He continues to engage with the Swiss American Foundation, and he has led this administration's effort to re-engage with Switzerland after the past 4 years. So we value the relationship. I believe Switzerland is now one of maybe the sixth largest investor in the U.S., which is incredible for an economy with 9 million people. We hope that Switzerland will bring some of its very robust trade training programs to the U.S. as we re-engage the manufacturing sector, because I believe the U.S. has a lot to learn from Switzerland. And again, the U.K. and Switzerland have moved to the front of the queue for the trade deals, whereas the EU has been much slower. So we value that also.
And I would say, with respect to the negotiating dynamics, and this may not seem important to those not involved in this, but the atmospherics provided by the Swiss government were incredibly conducive to the conclusions we had this weekend. They allowed us to use the grounds of the residence of the Swiss ambassador to the United Nations, which had a very intimate internal rooms, and importantly for us, where a lot of the key negotiations happened, were outside under a large, beautiful tree on a set of patio sofas, frankly, where we had the most important discussions on the most challenging issues. And having this setting, as opposed to, no offense to the Intercontinental, which has been great, as opposed to a sterile hotel conference situation or conference rooms, I think let us develop a personal relationship with our counterparts and lead to the successful conclusion we had.
Great. Thank you so much, everyone. I think that's it for us in time today. Thank you so much for coming out. And
Thank you.
So this is an interesting move that you're picking up with regards to where the tariffs are concerned. Clearly, US-China have agreed for a 90-day pause amid the tariff war. Both countries are to bring down the tariffs. US is to cut the tariffs on Chinese imports to 30% from a 145% for 90 days, and China to cut tariffs on US imports to 10% from 125% for 90 days. And the mechanism for continued talks with China have been established, and US will continue a strategic rebalancing in the next 5 to 6 industries, and they will be working on reliable supply from allies on those as well. Overall, they want China to be more open to US goods, and there could be a possibility of some purchase agreements as well. That's the word coming in there. And what's interesting over here is the chemical industry in terms of India. Overall, stocks, Varsha, like UPL, Deepak Nitrite, Aarti, Jubilant, the word on the street was the moment a trade deal is struck between US and China, probably it could be a deterrent with regards to Indian chemical companies as well as pharma companies. You're not seeing that kind of a negative reaction that's coming in terms of chemical companies, especially. What's the reason for that?
So basically, Hiral, if you see, the tariff which has been announced right now is 30%, which has reduced to 30%. While if you see for India, tariffs on India is still lower at 10% versus China at 30%. So one key positive to that. Now, if I were to pull out the stock, you see PI Industries, you see UPL and Jubilant Ingrevia, all three stocks are actually buzzing on that. Even I think whole chemical sector would be buzzing, but these three stocks are buzzing now because what are the key molecules this US imports are made by these three companies. So you have PI Industries, wherein pyrosulfin, which is one of the herbicide, is one of the key products for the company, and PI benefits significantly due to superior cost structure that the company has, and no other player produces 5,000 tons of a single large complex molecule that PI does. So one thing is that. On the UPL, if you see, if you can just pull out this UPL, it has come bit down, but it was up almost 3.5%, because the key molecules in the US include some of the herbicides which is produced by UPL, and with tariffs on China now, UPL will actually become more competitive versus China. One thing is that. And lastly, Jubilant Ingrevia is the only non-Chinese pyridine manufacturer globally, which is expected to gain. So these are all the three stocks which are expected on the back of this. But viewers, time for a quick break. Don't go anywhere. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Market surge as global headwinds wane. Border tensions with Pakistan ease, as well as US and China agree on a trade deal. Benchmark surge over 3%, Nifty IT gains over 5% in trade.
Defense stock stocks continue to remain strong due to heightened investor interest following the success of Operation Sindoor. Axis Cap remains bullish on BEL, says recent Indo-Pak conflict shows company's product reliability.
And moving on, pharma stocks, though are under pressure, this is after Trump vows to cut prescription drug prices by up to 80%. Sun Pharma recovers from the day's low to trade with cuts of about 2%.
Hospitality stocks make some smart moves as 32 airports shut down due to border tensions have now reopened. Some of the key airports reopened are Srinagar, Amritsar, Shimla and Jammu.
We have reached an agreement on a 90-day pause and substantially.
Landmark development, US and China agree on a trade deal. Both nations agree for a 90-day pause and substantially reduce the tariff rates on imports.
India's men's cricket team vice captain Virat Kohli has retired from the longest format of the game. Kohli took to social media to reveal the news. He hangs up his spikes as the fourth most successful test captain.
Welcome back. You're watching Profit Buzzers. Let's quickly pull up a Seagull India on the screen and see what the counter is doing in trade, because the stock company has reported numbers, 3% up move. Clearly, the gross margins have declined, and this is on the back of high cost of construction. EBITDA margins have contracted on the fall in gross profit as well as higher other expenses. And they're expecting to reduce dependence on highway projects segment gradually. The outlook in terms of forward-looking is also pretty strong from here on. But let's welcome in Ramneek Sehgal, MD at Seagull India. Welcome to the show, Ramneek, and a pleasure to speak to you as well. My first question coming to you is, overall, if you see in terms of the quarter gone by, yes, there is some bit of pressure in terms of operationally. Profits have dipped as well. What's the outlook looking like from here on if you have to look at FY26? What's the improvement that we should be watching out for?
First of all, good afternoon and thank you for having me over. So as we guided, our revenue has increased from year on year. It's more than 14%. And we bagged more than 5,000 crore of projects. We guided about 5,000. We got it around 5,500 crores. We have already quoted for projects, new projects worth 17,000 crore. And near future, we can see a lot of good projects coming in next year. And going forward, as we already have 3.2% of the order book value, which is about 10,800 crores. So revenue is not a challenge with Seagull. It's just sometimes we don't get the EDs on time. So we already have started a new project, which is Southern Ayodhya Bypass, and we are targeting to start Northern Ayodhya Bypass. Both the projects together are about 2,500 crores. And we're targeting to start 2 projects in Punjab and 2 projects in Jharkhand. So eventually, the size of 2 projects is 2,900 crores and about 1,900 crores. So revenue is not a challenge. And we always guide that we should have a revenue year-on-year growth about 10 to 15%. That is achievable. And we always target to achieve more. So last year, PAT margin, the only reason was, in Punjab, there was a lot of problem because of these, Kisans. And the land acquisition was not done on time, but now things are on track. And whereas if you talk about pond ash availability was also a challenge in Punjab. We've already done DRB and we've already won DRB awards, which is more than 150 crores. And we have claims pertaining to this, which we target to get it in a year and a half more from here. So once we get that kind of money, that money will be the straight bottom line. But you also know it very well, claims and arbitration take at least 3 to 4 years or even 5 years. So we have not taken it into our PAT or our balance sheet or our EBITDA till the time we get it in our account. So things are very good once we get these claims. As I said before, more than 150 crores GRB awards have been already in our favor. So it has gone to arbitration tribunal. So we are really expecting in the next coming 2-3 years, this money will be coming into a pat straight away. Thank you.
Hi, Mr. Sehgal. This is Anushi joining in. While you've given a clear picture on what the revenue growth for the company is for the years coming forward, a 10 to 15% growth for FY26, it's the margin picture that I want to understand. Now, if we see the fourth quarter, there has been a considerable dip that we have seen. So just want to understand what's the sustainable margin range that you're looking forward for FY26, and also if there is scope of improvement further from FY26 levels that we're looking at.
So, a good question. We are targeting a beta of 11 to 12%, which is a plain vanilla EPC beta. And above that is bonus, claims, and royalties. So, with that, of course, the beta increases, but EPC plain vanilla is 11 to 12%. We try to get better on these numbers. And revenue, as I said before, we have a guiding towards the investors that we will be having a between 10 to 15% revenue growth also.
Mr. Sehgal, now this is the margin picture you've given along with what's happening with revenues. Now, if you're talking about the order book, now that is where the main story is. If you talk about the order book that currently stands at 10,806 crore, a majority of the order book that we are seeing is from the highway project. That's about the 80%, and the company plans to diversify into other segments. So just want to get your sense on this overall order book, the kind of inflows that we are seeing from next year onwards. What is the kind of mix that you see between highways and the other segments that are there, and what are the kind of inflows that one should expect for FY26?
So, we are a young company, and I always say this, after IPO, we become 2.0. Where we have grown from Punjab to about 11 states. We are currently working in 8 states. So geography-wise, we have spread ourselves very, very well. And in terms of verticals, we have about 9 verticals, which we are planning to take it to 11 verticals in coming 2 years. So we have metro division, which is about 70% of order book value. We have 3 metro cities, which is Kanpur, Agra, and Bhubaneswar. And going forward, we were already doing a runway in Halwara, which is about to get completed. And then we have tunneling. We are now into full-fledged tunneling. We quoted for a underground tunneling metro, which is in Kolkata for about 1,400 crores. We are expecting the tender to be opened in next 2 months. And in highway also, if you see, 60% of order book value is from elevated specialized structures. We are building one of the longest 4-lane elevated in Bihar, which is about 2,000 crore. And we've already achieved 27% of the progress in that project. We are ahead of schedule. And we have completed a 6-lane elevated of more than 11 kilometers on Delhi Saharanpur. That too also in about 20 months' time.
Okay, Mr. Sehgal, if we see FY25, now you've given a clear picture in terms of what the outlook could be for orders, but if you can quantify the number for us where you see this order book standing at the end of this fiscal year, considering we are looking at around a 2 to 3 times of an order book to build ratio, if you can, because this is given the backdrop that FY25 in terms of where NHAI was ordering was particularly weak. So just want to understand the kind of tender pipeline that you have and what's the success rate that you built from this?
So, very good question. Our target was for the last year was 5,000 crore. We achieved 5,500 crores. This year, our target is 5,500 crores. And particularly on the question of NHAI ordering, we have won 3 orders last year. Worth 2,500 crores is Yodhya bypass, northern and southern, and 923 crores from the southern Ludhiana bypass. So, after all this, also we have achieved almost 3,400 crores of order from NHAI in last year.
Okay, and Mr. Sehgal, in terms of now, there's this order picture that we have. What's the kind of improvement that we are seeing in terms of where the net working capital is? And also, if you can give us outlook in terms of where the debt is going to stand at.
So, our debt equity ratio is one of the finest and best in the industry, about 0.35%. And going forward, the debt which we are taking, either is it for the short-term mobilization advances, or we take it for our HAM projects at the console level. And those console level debt is purely safe. Why? Because our first asset is already AAA rated. The money of the annuity is to come from NHAI, which is again AAA rated. So, that way, those projects, once they are sold or put in an InvIT, right now we're getting a equity IRR more than 15%. For the first project, which is AAA rated, is more than 19-20%. So overall picture and scenario of the company is very strong. Executing these HAM projects is doing a ring fencing of the company, where we have already put equity close to 400 crores. Right now, also a month back, we have put about 120 crores equity in this Yodhya bypass project.
That's an interesting take coming in there as well. The stock though has cooled off from the day's highs. But thank you so much for joining us on the show at NDTV Profit. Always a pleasure to speak to you as well. And thank you, Anushi.
Pleasure having me over. Thank you.
Always. Thank you, Anushi, as well. But moving on. Travel stocks, they have been seeing a good amount of surge in today's session. Let's quickly pull up all the names from an Indigo to a SpiceJet to even if you have to talk about the Thomas Cook, all of them have been seeing some strong moves in today's session. Plus, you have the hospitality names also that are buzzing in trade today. My colleague Mahima is standing by with the details in terms of Mahima. Strong surge in terms of travel-related stocks and hospitality stocks. Today, what are you picking up?
Right, Hiral. So all of these tourism stocks are buzzing on the back of the news. Of course, first that now the India-Pak war de-escalation has taken place and it should not further continue, hopefully. And second, the Airports Authority of India has also announced that the 32 airports that were shut for operations because of the India-Pak conflict are now open for civilian flights. In terms of what are these three airports? Well, they are major airports like Amritsar, Bathinda, Bhuj, Chandigarh, as well as Jaisalmer, Jammu, Jamnagar, Jodhpur, etc. So there are 32 airports which are now open for civilians to travel. In terms of the alert, government of course had suspended these flight operations and 25 overall air routes till 5:30 am on 15th of May, which has now been lifted. Now, tourism stocks have been in focus on the back of that. If we check the overall performance as to how this overall these stocks have fared since April 22, since the Pahalgam attack, Indian Hotels was down 8% Lemon Tree was down 7%, SpiceJet was down 6%, Indigo has remained flat, down by about 0.5%, and Thomas Cook was down 6%, and all of these stocks have recovered to those levels that did see a downtick on 22nd of April. Since then, today the Indian Hotel stock is up 7%, Lemon Tree is up 5.6%, SpiceJet up 8%, Indigo also is seeing gains of about 8% and Thomas Cook also seeing gains of about 8%. In terms of Indigo, they did come out with a statement saying that they are progressively starting operations on previously closed routes, but they've also said that May will still see few delays and last minute adjustment in terms of flights. So this is the overall view as to why tourism stocks are buzzing in trade today.
Thank you so much, Mahima, for getting us the details. Let's also welcome in Gaurav Sharma. Gaurav, apologies to make you really wait, but you had some breaking news that we had to cover as well. But if you have to look at all these tourism-related companies which are seeing a strong move in today's day of trade, any top picks where you're seeing a momentum buy?
Yes, hi, good afternoon to you. Good afternoon to all the viewers. So yes, after all these recent developments, things are settling down, and rightly mentioned, stocks like Indigo, stocks like tourism-related hotel stock, maybe EIH Hotels, Lemon Tree, ITC Hotels, they are looking pretty attractive on charts and for business as well. Now it looks that the hotel industry will have a normal summer season ahead.
Right. Even Swiggy Q4 results paint a grim picture as net losses soared to over 1,000 crore. Now the company's losses have also widened. So any view on that, on Swiggy?
I've not tracked Swiggy off late, so I won't be able to comment on their results.
Okay. So leaving aside a Swiggy, another stock that is in focus today is clearly in terms of what's happening with Tata Motors as well. Last few sessions have been really strong. A good up move today as well. The stock is up 1.5%, and it's mainly the US, UK agreement that has been signed as well. Gaurav, what are charts indicating with regards to where Tata Motors goes?
Tata Motors is looking really upbeat on charts. Good and healthy reversal signs are visible at current levels, trading somewhere around 720 I feel that this stock is all set to test 760, 770 odd levels in the near term itself. So short-term traders can consider a buying position here, keeping a tight stop below 700 and look for 760, 770 zones in a week's time.
Okay, so that's 760, 770 in a week's time on a Tata Motors. What should the stop loss be on this one, Gaurav?
I think 695 should be enough.
Okay, so that's a 695 on that one. Apart from this, you have the chemical stocks that are in focus in today's session as well. Strong up moves seen on this one. What are charts indicating, and do you think this is a time to exit or this is the time to pick up a chemical stock?
No, I think chemicals have yet not, some of the chemical stocks have not performed in the past, so no point, booking them at this juncture. It is better to hold on to it, wait for some more time. I think in a quarter or two, some more traction can be seen in this space. So for that matter, UPL is looking good, and a level close to 730, 740 is pretty much possible in a week or 2 weeks time frame. When we talk about Pidilite also, this stock is also looking good, and another up move towards 3200 odd levels is pretty much possible.
Any view on pharma sector? It was down in trade today after the executive order which was announced by Trump. So any view on that?
I'll stick to a very stock specific approach when we talk about pharma. From my side, I feel Oro Pharma is one stock which is all set for a fresh up move towards 1250, 1225 zone. So that one stock is on my radar. Yes, some minor hurdles are there which are placed around 1220, but I think the stock will comfortably surpass those, and 1275 is the immediate target that I'm looking at. Once that is taken out, the stock will head towards 1350 levels.
Okay, so that's with regards to where Aurobindo Pharma goes. Let's quickly pull up a few of the other Nifty 50 companies today as well, because if we can just get the components in terms of Nifty 50, because you have a HDFC, which is one of the biggest contributors in terms of today's gains, ICICI Bank, Infosys and Reliance. Gaurav, let's look at HDFC, ICICI, Infosys, Reliance, which are actually contributing to Nifty 50 today. Anywhere where you're seeing strength, or anywhere you're seeing a sign where it probably is a sell call today?
If we look at the two large cap banking stocks that you've talked about, HDFC Bank and ICICI Bank, if we leave apart the past two sessions, they were trading at their highest point. And now when the things have come back to normal, ceasefire is in place, things are getting back to normal gradually, they are again heading towards where they were trading earlier. So yes, they are well placed. Apart from this, I would prefer to extend the view till the other two of the larger private sector banks, namely Axis Bank and Kotak Bank. They are also very well placed, and they can, when we talk about banking space, they just cannot be left alone. So if someone is eyeing at a trading position, even Axis and Kotak can be in that kitty.
Right, so that's with regards to where banking names are concerned. But thank you so much, Gaurav, for getting us those views in terms of individual stocks, but completely out of time. With that, it's a wrap on this edition of Profit Buzzers from Varsha and myself. Thanks for watching.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-host Puneet will join in sometime. Nifty, if you look at it, it's gained more than 800 points in the day. It's crossed comfortably above the 24,800 level. This is the highest single-day jump that we have seen in the last 11 months. Now, if you look at the top sectoral gainers in trade, it's the Nifty IT, which is up 6%, Nifty Metal, which is up more than 5%. Both these sectors are really sensitive to the global news flows, and given the fact that the India-US-China trade deal settlement has happened, this is one of the biggest reasons why Nifty IT and Nifty Metal Index are up in trade. Apart from that, if you look at Nifty Real Estate Index, is also up 5% in trade. The small cap is gaining 4%. On the losing side, it's the Nifty Pharma, which is down. In fact, just flat in trade. Now, there were multiple negative news flows when it comes to the Nifty Pharma Index related to the pharma tariffs that could come in. And that was one of the major reasons why the Nifty Pharma Index, despite the positive news flows in the market, is just flat. In fact, apart from that, if you look at all the other sector indices that have been gaining in trade, right, Puneet?
Well, definitely. And we've seen some auto names, some EMS names also, which are very highly traded also trading in European. Let's pull up a Dixon Technologies first in the EMS space. That's seen a 6% move starting to trade. It's subsided a little bit to 4.6%, but largely trading in the green. And these are a lot of names which are not really backed by the news flows, as you mentioned, Swami, but up in trade today, we've seen something like an Avalon Tech as well, up almost something like a 9%. Sirma SGS is up 12%, Centum Electronics is up 8%, and PG Electroplast, which is expected to come out with results today, is up 7% as well. So largely a very positive move seen across some big names. A couple of names which I want to highlight in the auto pack as well. One is JBM Auto. Let's pull that up as well and see where it is in trade. Up almost 12% now, seeing a lot of positive moves. A couple of other names like Jupiter Wagons, Balu Forge, Force Motors, all seeing really heavy moves on the positive side as well. And let me go across to Gaurang as well first. Gaurang, we've seen a very positive up move today in the markets. Nifty is also comfortably above that 24,500, 24,700 mark. How are you seeing the market in this current context?
Well, thank you so much for having me on the show. Good afternoon to all of you all. I think it's a two-edged positive trigger in terms of the markets. And most importantly, I think the levels are very crucial. 24,840. 24,800 was seen as a huge hurdle. We have tried to cross this many times in the past, but were unable to do that. Today, given the kind of positivities, both from the border front as well as from US-China, smoking the pipe of peace for 90 days and reducing the tariffs from highest level to the bare minimum level is driving the positivity in the sentiments. I hope that we don't get any unpleasant surprise from across the border, and hope that common sense and wisdom will prevail upon those counterparts across the border, not to do any kind of further misadventure which may lead to escalations to the next level. And as far as China and US is concerned, I think the news is positive, but we need to read the fine print, which is not known to me at least, but that is driving the markets on the positive side. In case if there is again tailwind positive, maybe tomorrow, day after, I think taking over or crossing over to 25,000 would not be very difficult. And if we are able to do that, then I think we should watch out for next 25,000 plus levels on the Nifty spot.
Right, Gaurang. Just one question. Now, if you look at the overall sectoral indices, is the Nifty IT and the Nifty Metal Index, which has been gaining, in fact, the top sectoral gainers in trade. Is it because both these indices are sensitive to global news flows and trade wars, and given the fact that US-China, there has been a settlement now at around 30% tariff rate? Is that the major reason why both Nifty IT and Metal Index is outperforming the entire market?
It is one of the major and only reason.
Right. Thank you.
Otherwise, there is no news flow which will excite me to get so excited up in these, and especially metal than IT. I mean, it is not too long ago, right? 2nd of April last month when the tariff was announced, 7th of April, correct me if I'm wrong, you can look at the charts also. 7th of April, we were sub 21,800 on the Nifty spot. And it is just 1 month plus 5 days. We are at 24,800. We have crossed over 24,800. So I think it's very much commendable. It is heartening to see this kind of moves on the market. But IT and metals are purely because of the news flow from China and US.
Got the view, Gaurang, but defense stocks are continuing the strong gains today, which is of course fueled by the heightened investor interest following the success of Operation Sindoor and broader geopolitical developments, which is driving the momentum in the sector as well. Let's turn to Anushi now for some insights as well as what the market is expecting in terms of investor sentiment as well as the key behind the up move in these particular stocks. Anushi.
Right. In the previous few sessions, we have seen strong up moves for the defense index back, and this is again on the back of a lot of sentimental interest considering what this could mean for the order pipelines of some of these major players that are there. Now, if you look at the Nifty India Defense Index has been up over 15% in this last 1 month period. If you also take the year-to-date return, it's 9% of a surge that we are looking at so far. Now, what's fueling this rally, as we've mentioned about successful Operation Sindoor, that is one of the reasons why these defense stocks are in focus, but it's also about the geopolitical risk that have boosted this defense spending that we are looking at. Europe defense spending has also seen a boost this quarter, so there are a couple of other factors also. Robust order book visibility is leading to some of these strong revenue growth projections forward for some of these counters which are there. If you talk about the current valuations that are almost at the levels of 50 times as compared to a 5-year average of 37 times that we are looking at. But let's also understand what each of these companies do and how they are important for the Indian Armed Force, which are there. Firstly, let's talk about Idea Forge. Now, they are involved, they are one of the drone manufacturers involved with key products like Switch UAV, that's unmanned aerial vehicles, Netra V series, along with something like a Ninja UAV. Now, if you talk about what Switch UAV is, this is used for long-range surveillance as well as military mapping. The order book of this company stands at the range of 13.6 crore. This is as of the March 25 figure that we are looking at. A key company in focus has been Bharat Dynamics. Now they are involved in manufacturing some of these guided missiles and allied defense equipment which is there. They're also involved in unmanned aerial vehicles and have launched precision guided missiles. Some of the projects that they have been involved in includes the likes of Akash weapon system, that's a surface-to-air missile, along with something like Astra weapon system, that's air-to-air missile. So Bharat Dynamics, important player in this field. If you talk about the order book of this company, that stands at the range of 18,800 crore as of the September 24 value that we are looking at. Next, moving on to the one of the only manufacturers in the aircraft space that we are looking at for the defense capabilities is something like HAL. Now, they have joint collaborations with Russian Sukhoi, that is Su-30 MKI that we are looking at. Along with that, even light combat aircraft, Tejas, and even the helicopters like Dhruv, ALH, that's Advanced Light Helicopters, and LCH, Light Combat Helicopters that we are seeing. So that is something that they have been focused on. They have been on high alert for air interception. If you talk about the order book of this company, that has seen a significant surge, 95% of a growth at the levels of 1.84 lakh crore. This is as of FY25 that we are seeing. Moving on to BEL now, Bharat Electronics, involved in manufacturing Akash Tir, Advanced Air Defense Control and Reporting System. Now they've been involved in manufacturing of radars, co-producers of the Akash missile system as well. So BEL is one of the key players in this operation size that we are looking at. Order book of this company stands at the level of 71,650 crore. This is again as of the March figure that we are seeing. Some of the other quick companies to talk about is something like a Zentech, which offers ammunition, bulletproof vests, designing and combat training solutions for the company. Along with that, in the recent update, the company also has acquired a controlling stake in Vector Techniques, which makes drones and UAVs, which is another field of interest that is with all the current developments that is happening. Total order book of this stands at the likes of 816 crore. And finally, lastly, talking about DCX system. Now they are into cable harness, electronic parts and aerospace programs. These are some of the components which are used for radars and missile systems. So one of the important players here as well. Again, if you talk about other players, they are also an Indian offset partner for foreign OEMs that are involved in supplying defense equipment. The order size of this, they currently have an order size of 3,360 crore. This is as of the December 24 that we are looking at. So these are some of the key players in the defense space, what all that they do and how we are seeing more interest coming in. In fact, if you look back to the 99 Kargil war that had happened, initial defense budget was around the likes of 45,696 crore. But because of the war situation, that had seen about a 6% of an uptick at the levels of 48,504 crore. So the question now is, if you look at the FY20, if you look at the latest union budget, we've seen about a 6.81 lakh crore of an allocation, and for this, the defense capex was at the likes of 1.8 lakh crore. So the question is, would we see a revised higher growth number for this year, by the year and as well, because of the higher defense ordering that is being there? So defense stocks and defense sector in focus.
Well, thanks to that, Anushi, for giving us that comprehensive lowdown of some of the key defense companies in trade. Gaurang, let me come to you. We've seen stocks like, HAL largely been trading in the 4 to 4,500 zone. And while it is known of their capabilities, any outlook that you have on stocks like HAL, stocks like Zentech as well in the privately owned defense companies, and what are your top picks?
So let me give a brief idea about what our thought process is. Firstly, yes, we are positive on the defense pack, and it looks extremely, extremely robust or strong in terms of growth opportunity. My only request is don't look at defense from 1 year, 2 year. Look at defense with a time horizon of 3, 4, 5 years. If you really want to make meaningful returns out of your investment in it, and that's the reason why I say this is because these companies make very complex products, high technology, very precise. You can't afford to go wrong. Once you get the approval of a prototype, that's when you can start making mass scale production. That prototype has to go through various stringent tests at different levels. We are extremely positive about companies like Cochin Shipyard, BEL, PHEL. Having said that, these are not recommendations, but a view on which are the other companies which can benefit in the long run. Hindustan Aeronautics, Bharat Dynamics, Musgaon Docks, Garden Reach, BEML. These are also some of the companies government owned which can create wealth given the outlook of orders intake as well as execution run rate.
Right. Anushi, stay with us. I guess Axis Cap has come out with this note on Bharat Electronics where they have upgraded or hiked their target price on the stock. What is the rationale that they have given you?
Right. So as you've said, Axis Capital on Bharat Electronics have maintained an ad rating and have the hike the target price to 335. A couple of reasons that they have see firstly the potential upward revision in the India defense capex that we are looking at. Current figure, if you see, stands at the likes of 1.8 lakh crore. But considering all that is happening in terms of India, Pakistan, if there could be an uptick in ordering is something that we should be watching out for, especially in areas where Bharat Electronics have a key role to play. Proof of product effectiveness is also likely to improve the medium-term local to export growth prospects of the business. So this conflict has shown BEL's product reliability and boost to its prospects going forward. Now, in this, if we see India's surface air-to missiles have played a key role to counter these unmanned aerial systems from Pakistan. So BEL being an important player in this is something that we should be watching out for. Quickly, just going through the order inflow of what had happened, that order inflow was at the guidance was given at the likes of 25,000 crore. The BEL had clocked in about 18,000 of order inflows. The expectation for next year is for somewhat about 50,000 crore of order inflow. So interesting to watch out on how this would shape as a year for BEL, as they have planned orders for QR SAM orders, that's quick range surface to air missile, and next generation corvettes. These are some big ticket orders that we are seeing. So that is something to be watched, something that we need to take a note of. So BEL and focus on the back of this.
Well, thanks for that, Anushi. But President Donald Trump has announced that he will sign an executive order later this evening to reduce the prices of prescription drugs in the US by between 30 to 80%. Now, this could spell trouble for some Indian pharma companies who have high exposure to the United States. Let me go across to my colleague Varsha to get in more details on this. Varsha.
Yeah, thank you for that. So yes, this is one of the reasons why pharma index was under pressure since morning, wherein Trump has announced new executive order to significantly reduce the drug prices or prescription drug prices basically in US, and the plan aims for a potential reduction of 30 to 80%. Now this pricing is based on most favored nations policy principle, wherein the agenda is to link US drug costs to lowest prices paid by the other countries. Now this will provide immediate relief from high medication cost in America to ensure fairness for American citizens, according to Trump. Now the order would primarily affect drug administrator in doctor's office, and this will apply to medications covered under Medicare Part B, which involves treatments like cancer treatment, and this will save trillions of dollars for patients. Now this is according to Trump. Now this proposal is expected to face opposition from drug manufacturers, because drug manufacturers previously also blocked a similar plan, and they argue that it would undermine innovation. Now, just talking about US Medicare prices versus peer nation, if you see your blood clot drug is priced at $249 in US versus $45 in other nations, while your type 2 diabetes drug Jardiance is priced at $204 in US versus $35 in other nations, and your Stellara or your Entresto, which is a heart failure drug, is priced in US at $314 versus $64 in other nations. Now, which all stocks to be will be impacted? One is Sun Pharma, because of the specialty portfolio that the company has, and of course DVs will also be impacted, because the drug which I mentioned, Entresto, DVs make API for that drug. The other stocks which will be in focus is Aurobindo Pharma. You have Zydus Life Sciences, Lupin, which has 40 to 45% of exposure to US. Now, why these generic companies are in focus? Because the order is for executive drug or prescription drug or innovator drug. Because if your innovator drug prices are reduced, then generics, which already sells at a very lower prices, will hit more, and these are the reasons why these stocks will be impacted.
Well, thank you for that, Varsha, for giving us the lowdown of what impact these could have on a couple of stocks. Gaurang, let me come to you. We've spoken about pharma companies which have a higher exposure to the US, the stocks like Gland Pharma among others. But just on Sun Pharma and Divi's, on this particular news flow, how are you viewing the impact of this US move on reducing the price of generics, something that they've spoken about in the past, but now it looks like the action is now on the way? How are you viewing, what should investors do with these stocks if they're holding it?
I think first of all, it has happened before, like Varsha was mentioning. This is not the first time, but the lobby is very, very strong over there. When it is the gun run lobby or whether it is to do with pharmaceuticals, the lobby is very, very strong. And I think the stakes are very, very high. So while there are aspirations and thoughtful thinking from President Trump, whether it is going to go through and finally see the ray of light at the end of the tunnel, one will have to wait and watch. Today, because of the news flow, you are seeing impact on the entire pharma universe, including Divi's and Sun Pharma. But on both these companies are the disclosure, we do have a positive coverage. And we are also maintaining coverage on other pharmaceutical stocks like Cipla, Aurobindo Pharma, Natco Pharma, etc.
Thanks for that, Gaurang. But another stock that's buzzing in trade today is from the cement space, and that's Birla Corp. Now, that's after the company came out with its Q4 earnings. They did beat estimates by a mile this time. Revenue was up roughly 6% at 2,800 odd crores. There was versus estimates of 2,600 crores, but both on the EBITDA and margins as well as the profits, it's come in much higher than estimates. EBITDA has come in at 19% versus estimates of 15%, and the profits is actually up 32%, coming at 257 crores versus estimates of about 132 crores. So almost an 80 to 90% bump up from what Bloomberg estimates were, and that's largely because of the company's realizations as well as pricing in this particular quarter. Realizations are up 8% on a quarter-on-quarter basis. That's a big and major surprise for most brokerages. The premium cement share has also increased to 59% compared to 55% in the same time last year. We've also seen that while the prices had fallen by 11% the first 9 months of FY25, for the full year, it's estimated to be roughly 4 to 5% lower. And that's still a positive because in the Q4, we've seen multiple price increases from multiple players actually across India. And that has helped boost the realization in this particular quarter as well. Apart from that, the market is positive on the company's capacity expansion plan as well. They have approved increasing capacity by roughly 2.8 million ton per annum, and that will be in Gaya, Bihar, which will be in a phased manner that they mentioned over the next 4 quarters. They've also approved an additional investment of roughly 4,335 crores. That will be for setting up the production capacity and increasing it to 27.6 million ton per annum from roughly 20 now. So stock really positive on its Q4 earnings as well. Gaurang, we've seen the cement pack be largely, the first 3 quarters were nothing to talk about. But we've seen a strong reversal in Q4 for most, led by pricing as well as higher realization. Do you have any kind of strong picks in terms of the cement space and any view that you have on Birla Corp as well?
So there are multiple picks across small cap, mid cap, large cap. We at Geojit Investment are extremely bullish, and this is one sector that is not very often spoken about or recommended. But we see, very strong ground level green shoots for the cement sector. First of all, I think the input cost has come down, which will give a boost to the profit margins. Second is consumption of cement is going up. Third is we are likely to possibility to see one more price hike in cement bags by the time we end this year. And this is one sector which remains isolated or insulated from external shocks, whether it is to do with tariff or whether it is to do with cross-border geopolitical tension that we saw. Ultratech, ACC, Ambuja are the 3 top pick large cap names. Shree Cement, Dalmia Bharat and Ramco are from the mid cap universe. And from the small cap universe, we like a company called Sagar Cement.
Right. Well, Swiggy is another stock that remains in focus. The Q4 results paint a grim picture as net losses soared to over 1,000 crore rupees. And the quick commerce segment, losses have widened, forcing Swiggy to delay its break-even with the Q1 of FY27. Let's bring in Mahima with more details on what did not work for Swiggy in the Q4.
Right. So as you rightly mentioned, there are a lot of woes that investors are worried about in terms of Swiggy and its earnings. The stock also, it's been 26% down since its listing and down 50% from its 52-week high. In terms of the numbers, revenue is up 10%, but EBITDA loss widened to 962 crores versus that of 726 in the last quarter. And net loss also widened to over 1,000 crores versus that of 800 odd crores in the last quarter. Now, a lot of operational inefficiencies are taking place when it comes to Swiggy. High operating costs of Instamart are increasing losses overall in terms of the company. It expects contribution margin break even by Q1 FY27, but analysts are expecting that this will happen by FY28 only. There is aggressive dark store expansion that they have taken this particular quarter, which remains as a deterrent, but the management has now come out and said that they will now slower the kind of aggression that they've taken in terms of adding dark store. They've added around 1,021 odd dark stores in FY25. In terms of higher customer acquisition cost, that is also going up, and that versus the competition is also going up. In terms of the overall gross order value for quick commerce, that is lower as compared to that of Zomato. Now, if we compare Swiggy and Zomato in terms of the overall gross order value for segments. In terms of quick commerce, Zomato stood at 21%, where Swiggy stood at 20%. But for food delivery, Swiggy is slightly better. It stood at around 17.6% versus the other 15.6% for Zomato. In terms of the food delivery business, it's enabled by around 5.4 lakh delivery partners, but this is lesser than that of Zomato. In terms of the overall cash flow metrics, also their overall working capital days has doubled almost, has gone to 50 days, which is on the back of adding higher dark stores and adding inventory to that. And lastly, in terms of the overall shareholding also, we have seen FIs selling their stake in Swiggy. It's come down from 6.2 to around 4.9, and DI stake has also come down from 9.3 to around 7.8%. So we have seen selling in that also, and of course 83% of Swiggy lock-in ends tomorrow, so that will also see some kind of selling in stock going ahead as well. So this is the overall view as to what's happening with Swiggy, and of course how Q4 panned out for the counter.
Right, Mahima, thank you for that explanation. Gaurang, coming to you on Swiggy, obviously the numbers were not that great, even when you compare with the previous quarters, compared with analysts or compared with Zomato. But how are you looking at Swiggy at the current juncture, and are you also concerned about the fact that nearly 83% of its shareholding will be coming out of lock-in, and most of them, the FI investors, are sitting on handsome gains? So are you expecting some selling pressure to happen here?
Selling pressure will definitely happen, and this happens to all the stocks that get listed. It is not only limited to Swiggy, my friend. So as and when the lock-in period expires, all those who want to book out will come. That will lead to pressure. Yes, definitely it will lead to pressure from short to medium term, till the time we see that supply getting digested by the market. One of the main reason for the disappointment on the number was because Swiggy has been one of the biggest competitor to Zomato. As a disclosure, I think currently it is below the IPO price, if I'm not mistaken. Correct me if I'm wrong. So during the IPO time, we had come out with a subscriber recommendation for the IPO. There are large number of competition that is going to come into this quick commerce segment, and that could impact short to medium term earnings. Yes, definitely. But from a long-term point of view, if I have to keep that IPO note as a base of my recommendation, then you can stay invested for long term.
Got the view, Gaurang. Thanks so much for joining in, giving us a whole host of views across sectors and companies. We wish forward to our next conversation. But viewers, that's all the time that we have on this edition of Profit Top Trades. Stay tuned to NDTV Profit for more. India Market Close comes up next.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Hello and welcome to India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, and let's look at how the Nifty is doing. A fantastic start to this week, expectedly so, 3.5% higher. Not too many people could have called an 800-point rally on the index today. Let's look at it intraday, and we've gone from strength to strength even on the intraday index. Look at that, and continuously clocking the day's high, going from strength to strength, and very, very close to the day's high. The day's high, 24,853. We're just about 10 points away from there. 3.5%, where is that coming from? Let's pull up the contributors. 100 points from an HDFC Bank, 100 points from an Infosys, nearly an ICICI Bank and Reliance, all those four delivering nearly 350 plus points on the index. So fantastic day from that perspective. Losers far and few, but Pharma pack in focus on the back of at least within on the back of everything that's happening around the Trump announcements in the US, and of course the Pharma pack therefore sulking in trade. Let's look at the heat map. But outside of Pharma, outside of that basket, maybe and outside of Sun Pharma within the Nifty, you're largely seeing a very solid set of moves. Starting off with an Adani and an Infosys. Adani Enterprises up 7.5%, Infosys up 7.5%, Shriram Finance also up roughly 7.5% odd. And honestly, wouldn't have expected this either. The top or the bottom gainer on the Nifty 50, I need to reword that, bottom gainer is up 1.1%. Not too many times that we've seen that kind of a move. IndusInd, Sun Pharma, totally divergent of the market, and completely likely justifiable reasons why that is so. Now, I want to quickly look at also the sectoral heat map, and again, no surprises, but a few will really stand out. Nifty IT up 6.5%, Nifty Realty up 5.5%, Metals up 5.5%. So zing in all of those sectors especially. But outside of that as well, when you're looking at the PSU banking index, 3+% higher, you're seeing consumption up 3%, you're seeing auto up 3%, you're seeing the bank Nifty up 3%. So even outside of those, there's been very strong moves across sectors. In terms of the breadth, before I hand it over to Neeraj, look at the advanced decline. Extremely strong breadth that we're seeing. 2,100 advances to just about 125 declines. Certain pockets where you're seeing pressure, including Pharma, we did see that. But Neeraj, outside of that, broader markets?
In some pretty strong gains and some very good result reactions as well that have come in, right? So you look at, for example, a Birla Corporation, some extremely strong show. And since the start of the trading day, it's actually been that way, right? So up about 20% for that one, 19.99% and counting. So really strong show put up by that one. Not every result, I mean, so others which had a decent number was Borosil Renewable, Make Money Organics, etc. Not all of them have had the kind of reactions that Birla Corp has had, naturally so, but 2.5% for a Borosil Renewable. Make Money about 7% is still doing a lot better. Its strength in HFCL at 10% higher, about 81 rupees, so that is doing okay. CE Infosystems had a good quarter and up about 9%. And the IT strength is showing in the way a lot of individual stocks have done. So for example, Naukri or InfoEdge, you don't normally see this one being so active. That's up about 9% in trade. So pretty strong showing. Want us to talk about losers. There will be very few out there. It's a day that belongs to the gainers, and therefore you'd be happy with that. Okay, Vishal Malkan joins us. Vishal, how are you trading the markets currently? Are you taking any positions at the current point of time?
Yeah, hi. I think there is a strong move which we saw today, and it's sustaining those gains since the morning. So I think we are done with the war part now, and we'll look at the fresh updates coming from maybe next month would be monsoon. And overall, it's made a higher bottom. So I think it was already showing so much resilience in the last week itself when things were going around. So that shows that Nifty has a strength to go to 25,200, 300 as a next target. And maybe few days we can look at that target coming soon.
So in light of that view then, Vishal, what are the trading ideas for this afternoon?
Yeah, I'm looking at financial sector as one of the strongest sector, and you can see that Bank Nifty is showing that strength along with all the financial stocks. And the first one I would go with a PFC, which is Power Finance Corporation, with a stop of 400. I'll take a target of 435 and 445 in the next few trading sessions.
Very interesting. Vishal, curious to know with regards to the IT pack.
Harsh, I think maybe your mic has a bit of an issue, so we'll just try and get that sorted. But Vishal, the other question that I have is the kind of gains that IT is made today, right? Serious gains. I mean, sometimes you can see the index going up 5-6% as well, but it's very rare that you see stocks like InfoEdge being up 9-10%, and some very strong moves here. So one, what's the view on the IT index per se? And within that, what are the stocks that you are figuring out?
I think they were the most beaten down sector in the last few months, if you see IT sector while markets were correcting. And when we had a good bounce in the last few days, they were the least to perform. But today they have shown great strength. They are leading from the front, and all the good names are doing great. But my favorite right now would be Bsoft, because it's still coming out of that base. And with a stop of 410, we can look at targets of 450 and 475. And overall IT sector looks like a good pick for a value buy from this point of view.
Okay, Vishal, I want you to take your view on PVR as well in a moment, but let's first get in the management to try and understand how is it that they view what the year thus gone in FY25 has thrown up, and what is it that the outlook ahead could be like. Sanjeev Bijli, ED of PVR Inox, and Saurabh Pant, VP Finance and Investor Relations at PVR Inox, with us on the show. Gentlemen, good having you. Thank you so much for taking the time out and being with us. For a lot of people and a lot of businesses which are entertainment, travel focused, what's happened over the weekend is a relief as well. But Mr. Bijli, for you, maybe not so much of a concern with regards to geopolitics, but how would you summarize what's happened in the quarter and the year? And is it possible to hypothesize if FY26 can be materially different than FY25?
Yes, of course. I think we believe so very strongly, because we know exactly why the last quarter in FY25, or even for that matter, FY25, the entire year, was muted and didn't go as expected because of underperformance of a lot of Bollywood films. And that came because our major superstars like Shah Rukh Khan and Salman Khan and Amir Khan, there weren't any films from them. Plus, there was a huge drop of Hollywood releases. Our cinemas are basically spread across the country, and they are situated in demographics where a demand for English movies is very high. The metro, South India, Bangalore, Delhi, Mumbai. And because of the Hollywood strike that happened post-COVID, a large number of Hollywood movies, including Mission Impossible 8, which is now releasing on the 17th, got shifted. So since our chain is dependent a lot on Hollywood films, plus there were fewer Hindi movies, that is the reason why there were muted admissions. But this year, everything seems to be back on track, be it Hollywood, be it Hindi film, big films, and also regional films, which continue to contribute to our box office.
And Mr. Pant, let me come to you. Harsh also joining in. What is therefore the reasonable number in terms of growth that you would expect to clock for FY26?
Yeah, hi Harsh. I think in terms of while we don't give any forward-looking guidance on admissions or growth, our internal estimates are that this year should be materially better than FY25, and directionally it could be better than FY24 as well. So in FY24, we had done about 151 million admissions. In FY25, we did about 137 million admissions. Our internal estimates are that it should be directionally better than FY24. So obviously significantly better than FY25.
And Saurabh, I'll stick with you. What is the outlook with regard to debt? You've reduced debt to a certain extent, but net debt stands at roughly 950 crore, if I'm not wrong.
That's correct.
How quickly does it go to debt free?
Yeah, so I think at the start of the year, the management had decided 4 key priorities, out of which one was to deleverage the balance sheet and make it stronger. I think we have managed to, even in a year which had certain headwinds with regards to content, we have managed to reduce debt from where we were in FY24. If you look at a 2-year trajectory, we have managed to reduce our debt post-merger by almost 482 crores. And as you correctly mentioned, we currently stand at about 950 odd crores. So I think going forward, while again, we do not want to give any guidance, but the endeavor is to deleverage the balance sheet as quickly as possible. And if the content lineup is as strong as it appears to be on paper, I think that should happen pretty quickly.
Okay. Mr. Bijli, just one question around whether the nature of the business or the model changes because the nature of the viewer and the options available are much more, let's say, than maybe 10, 15 years ago. So when I look at the outlook, there's a capital light model, 101 screens signed under that model, expected to come over the next 12 to 24 months. Is this a company like yours, which is a leader in this space, trying to do things differently so they in order to manage balance sheet and cost pressures in what has become a difficult to predict business?
No, absolutely, you're right. I mean, I think, while the endeavor is to go back to the admission levels pre-COVID, we are also very conscious and have decided strategically that we must look at our cost structure, be it fixed costs or variable costs, and we're basically attacking both of them and trying to reduce them as much as possible. And as far as the capital CapEx is concerned also, towards building out new screens, we still believe we need to build out new screens. We are not stopping growth because there are many markets in the country, especially tier 2, tier 3 cities where we are getting incredible locations and incredible opportunities to open a multiplex. But we want to reduce our CapEx intensity by following these 2 models. One is the FOCO model, where, of course, the developer believes in the brand and our management capabilities and is therefore ready to invest 100% investment into the multiplex. And the other is an asset light model, where we are sharing the cost of the fit outs. We've received overwhelming response on both these models from our developer partners. And it only goes to prove that they believe, the multiplex viewing experience, cinema, is still a very integral and important part of their developments. And B, they also believe in our brand and our operating capabilities to be able to put their money and let us operate it in the most efficient manner. So we're trying to reduce our CapEx intensity, but at the same time, very committed to increasing the number of screens and in order to safeguard ourselves from this volatility, which is coming from either consumer change in behavior or the way movies are performing. We are very, very strictly looking at all other costs and reducing them.
Right. Mr. Bijli, what's the outlook with regard to new screen openings for FY26? One is, how many are you planning to close from a perspective of eliminating a bit of inefficiency? What's the chop and change going to look like?
I think this year we're looking at adding 82 new screens.
Okay.
I mean, the beginning of this year in April, we already opened 20 screens, one in Noida, one in Jabalpur and Raipur, which, also shows our commitment to open screens in smaller centers as well, where the demand is still there, and another one in Gurgaon. In addition to that, we're opening 82 more screens across the country, and some of them are in still our strategy, and our growth strategy is to look at South Indian cities where the demand remains robust for our business. Also look at smaller cities where they haven't really seen much of a retail revolution and a multiplex presence as yet. As far as number of screens that we need to close, we're still working on that. Of course, we are looking at a list of cinemas which are just not delivering anymore, either because of competition or the developments have become dilapidated and old. And we're working on that number, and we'll decide on that very soon.
Right. And Mr. Bijli, what's the logic? So you are closing down certain screens which are underperforming. How do you judge which ones to close? Just give us that perspective.
I mean, first and foremost, it's a financial performance. If those properties haven't been performing well consistently for the last 2-3 years and have been delivering a negative EBITDA, and we feel there isn't much that we can do to revive that, then that's one criteria. Second, of course, you must understand that some of these properties are very old now. They've been housed in malls or shopping centers which opened about 20 years ago. And there's always a product life cycle as far as these developments are concerned. They become dilapidated, the infrastructure becomes very poor. Some other tenants, which are anchor tenants, leave, and they all go to newer malls. There are newer malls and newer developments coming across the country every year. And other tenants also tend to find those more attractive because they are new and fresh. And therefore, the chances of success there for us or a retailer are even higher.
And out of the 82 screens that are expected to open, Saurabh, let me come to you. How many of those under the capital light model, or all of those will be capital light? How does this work?
Sure. So, Harsh, we'll open approximately 100 to 110 screens this year in all. We have already opened 20 screens in the past couple of weeks, and another 80 odd to go. Just to put this in context, about more than 50% of these screens will be under the capital light model. It will be either a management screen or an asset light screen.
And Mr. Bijli, what's the pressure like from competition? You have some of your competitors reducing prices in the food and beverage space as well. Are you seeing a bit of a shift with regard to your viewers opting for competition over you due to that? Are those trends at all playing out, or are they worrying you?
I haven't seen any major price reductions across the sector. Honestly speaking, I haven't seen anyone else dropping prices. I've checked the prices for other cinema chains as well, at least the bigger ones, that are out there and operating and doing a great job in the cities. I really haven't seen much of a price drop at all. But at the same time, we're very sort of conscious of what the consumer wants. And we have done many promotions and many strategies to actually counter any of this. We have on the pricing side also, we have 99 rupees on Tuesdays. We have a Cinema Lovers Day, which comes out every quarter. Even on F&B, we have special offers which are coming out every couple of days. So if you actually look at our website and our app, there are a lot and many more promotions that are out there, which we feel should not hurt the customer. And therefore, we are committed to making the whole experience as palatable as possible.
And Saurabh, what's the sense like with regard to Karnataka capping prices at 200? Is there a risk that other states would follow, and what would the impact of that be with regard to your numbers?
So when this announcement was made a month or so back, we made a representation to the state government and outlined the heavy investment that we have made in the state over the years because the prices were deregulated. Since then, the budget has been announced, but there has been no government order on pricing. So it is status quo. There has been no change. The pricing is still deregulated. And I think other state governments are also following suit in keeping the prices deregulated. There are only a couple of states left in India now where the prices are regulated. The likes of Tamil Nadu, Andhra Pradesh, and largely these two states are now having regulated pricing. Otherwise, it's deregulated all across.
Point taken. Okay. Thank you so much, Mr. Bijli, as well as Saurabh, for joining us. Great having perspective on consumer trends as well as, of course, the numbers for PVR Inox and breaking that down. Let me go across. Vishal still with us. Vishal, what's the sense like? PVR Inox, do you like it? How is it looking on charts? What are the levels you're looking out for?
Yes, I think PVR Inox has made a higher bottom in the last few days, around 900, after making the final low around 830 in the last month. So that's a good sign, which is showing improvement in the buying. And we can look at a target of around 1000, 1030, which is the next resistance. So it's like a short-term buy with a stop of 900 for targets of 1030 and 1075. Overall, looks like it has made an intermediate bottom, which could be we can even look at short, like a medium-term investment. Then the targets could be around 1200 plus.
I want to take a couple of top gainers as well, Vishal, and Adani Enterprise and Infosys to start off. What's the view like on a couple of those counters? 7.5% is no mean move.
Yes, I think Adani has given a sharp move, which is it's like a gap up opening from yesterday's, which is the case with most of the stocks. But I would be slightly hesitant with Adani as of now because there is a strong resistance zone around 2480, which it has not crossed since almost last 4 or 5 months. So I would not buy anything going into a resistance because a resistance is a resistance till it does not get crossed. So I will avoid Adani as of now and wait for that resistance to cross. And compared to that, Infosys, which I think has given a great move. Only thing, I would be happy to buy this, but the risk reward ratio won't be in my favor because of the long candle which we are seeing today. So there could be some dip in the next couple of trading sessions, like a retracement around 1600 or 1590. That would be a good level to get into Infosys.
Just quick disclaimer, NDTV is owned by the Adani Media Network, so something to keep in mind. But outside of that, those are independent views coming in from Vishal Malkan on a couple of those names. Vishal, what's the pocket that you feel at this point is looking most bullish? Is real estate one of those? Because the move today is extremely solid and we've seen some pressure, at least in recent weeks, on that index.
Okay. I think the strongest pocket right now, as I mentioned earlier, is the financial services. And look at financial services and even to an extent, some kind of private banks as well. And the second would be auto sector, where I think we have seen a good amount of beating, especially Tata Motors. It's coming out of that 700 level. So auto and financial services would be my top picks for this month.
Okay, and what about IT, Vishal?
IT, I would be very selective. As I said, the moves like Infosys, we need to wait for a retracement, but the stock like Bsoft looks very good at this level, which is also having a strong support around 400 since last few months. So Bsoft would be my best pick for IT.
And what about the hospitality space? Because that's where you're seeing some big moves. Let's pull up an ITC Hotels, which is up roughly 8% odd. Not sure what an IHCL is doing, but let's quickly have a look at some of those names. East India Hotels, IHCL, Lemon Tree, Chalet. There you go. That's an 8.5% move. Indian Hotels also up 6% on Lemon Tree. Vishal, any of these names on your radar?
Yes, I think Indian Hotel is one stock which I've been tracking since last couple of months, and that 700 level is very, very enticing because it's a very strong support on the charts and not broken since a while. And today, yesterday also it made a bottom around 700. It's now it's 775 approx. So I think that's a good stock for not only for short term but also for a long term investment. Looking at targets of 850 plus to 900 in the next couple of months.
Okay. Now, the other one that's in focus is Raymond. Raymond's demerger, real estate and engineering business, set for the 14th of May. Shareholders to get 1 share of Raymond Realty for every share of Raymond Limited that they own. Somit's here with the details of that demerger and what to expect. Somit.
Well, yes, Raymond will remain in focus not only on the back of the results, but also given the fact that the demerger date or the demerger record date is nearby. It's on 14th of May. Now, this demerger is related to the real estate unit and the engineering business of the company. Now, 14th May is the record date, which means that the last day to buy shares for any investor or any shareholder to participate in this demerger is May 13th. Now, if you have shares of Raymond as of May 13th, or you buy shares on May 13th, then you will get 1 share of Raymond Realty for every 1 share that they are holding in Raymond Limited. Now let's look at how analysts are valuing Raymond Limited as of now. Now Aryan Capital has given a target of close to 2,450. Antique Motilal have a target of close to 2,300 to 2,400. Incred have a target price of 2,255. Systematics has a target of close to 2,047, which means that the average target price for Raymond comes at close to 2,295. Now let's look at how both the businesses are valued. Now analyst or the street is giving nearly 76% of the value coming in to the real estate business and nearly 24% of the value to the engineering business. So at the current market price, the real estate business share price comes at close to 1,107 rupees, while that of engineering comes at 349. But at the target price, the real estate business is valued at close to 1,744 rupees and the engineering business is valued at close to 551 rupees. So clear upside of close to 50 to 55% that could come in this demerger. Now when it comes to the real estate business, let's look at the outlook. The Raymond real estate business owns around 100 acre of own land bank, which has a revenue potential of close to 25,000 crore rupees. Apart from that, they have multiple joint development and the revenue potential from these JDAs is close to 7,000 crore rupees. Now they're targeting a growth of close to 20 to 25% on the booking value, and going forward their future expansion will be asset light based on completely joint development asset is the going forward plan of the real estate business. And lastly, the real estate arm will be a net cash balance sheet as per the company that they had as per the company's guidance that they had given earlier. Now when it comes to the engineering business, now that operates in auto and EV space, aerospace, defense and various other tools and hardware. Now if you look at the 9-month financials, revenue stood at close to 1,300 crore rupees, EBITDA stood at close to 160 crore rupees. That means the margin at close to 12% odd for the engineering business. And when it comes to the opportunity, analysts believe that there's a huge opportunity when it comes to the electric vehicle and the defense segment. And apart from that, the aerospace growth is also expected to pick up with the resolution in production issues that we had seen earlier with Boeing. So all in all, a good prospect coming in for the engineering business as well.
Very interesting. Thank you so much for that, Somit. Vishal, would Raymond be on your list?
Yeah, I think Raymond has moved a good move today, but it is hitting into that 1600 levels, which is a strong resistance. So I would be only interested if it closes above 1600 on a daily and a weekly closing basis. Then we can see the upside opens up to 1800.
Okay, and what about a Raymond Lifestyle, Vishal? I know you'll have a very, very limited chart there, but do you have a view there?
I would avoid giving view on that, looking at the charts, the way it is placed right now. So I'll skip that one right now.
Point taken. So, okay. All right. Vishal, thanks so much for joining us this afternoon. What we'll do is we'll also slip into a very, very quick break. On the other side, we'll get you all the chatter behind dealing rooms, heard on the street. Somit will bring us that, and we'll talk specific stocks. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Welcome back. Thanks for staying with us. That time of the show where we go to Somit, who gets us all the chatter from dealing rooms. Somit, what are you hearing today? Definite zing, at least on the street.
Yes, a good 900 points rebound that we have seen when it comes to Nifty, but stock-specific action that we are seeing firstly is on IndusInd Bank. Dealers are indicating that large HNIs have been exiting the counter on anticipation of a higher than expected provisioning that could come in the MFI segment in the fourth quarter earnings of the company. Apart from that, there is Paytm, Jubilant Food and Apollo Tyres buzzing on the back of block deals. Now, Paytm is something that we had indicated last week as well. The latest update that is coming in is the fact that this block from Ant Financials could come in the next couple of days. Moreover, dealers are also indicating that there could be a potential block deal in Jubilant Foods and Apollo Tyres as well. In Jubilant Food, the promoter could go ahead and pair some stake is what the buzz is, and in Apollo Tyres, it could be Warburg Pincus is what the dealers are indicating. Third stock on the list is the fourth stock on the list is Ganesh Housing. Now, it's a Gujarat-based real estate company, and some large influential investor interest has been seen in this counter, and they're expecting multiple positive developments to come in for Ganesh Housing. When it comes to Indigo, dealers indicate that foreign institutional investors have been selling their shares at higher levels. The stock was up at one point of time around 8%. When it comes to Titan, dealers indicate that there has been buy flows on the DII desk in trade today. And lastly, when it comes to SRF, last week there was a strong buy buzz. When it comes to SRF, it was strong buying interest on the institutional desk. But right now what I'm picking up is that smart investors have been exiting or have been selling their shares in this counter, and hence we have seen this share price shares in fact fall from 3% high to just now flat in trade.
Thank you for that, Samit. Interglobe definitely one stock on the radar today as the markets are just firing up. Good afternoon, folks. 24,900 done and dusted, huh? So it's looking like a very, very interesting afternoon. Hemen Kapadia is joining us with DR Choksi Finsav. Hemen, it's a complete celebration. But this is clearly something more than, of course, we have a lot of reasons to celebrate. Ceasefire, military superiority as far as India goes, the US-China trade deal. But then look at the kind of moves we've seen. The Nifty IT comes to mind, about 6% up.
Very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. Like you said, I mean, we're off. We're not off. We're up almost 1,000 points from Friday. And IT is on a tear. So, okay, IT was oversold. A bounce was absolutely necessary. Almost 16,000 points of a downside in the Nifty IT index, Tamanna. So, yes, a recovery, a rebound was on the anvil. I'm not sure one can justify this. Obviously, things were beyond charts and fundamentals, and there's geopolitical tension.
In fact, on that note, Hemen, I'm just going to stop you there and we're going to cut across because we have the live briefing of the armed forces. It's a DGMO level briefing. Let's just listen in. Let's see what audio we're getting right now.
नाश मनुज पर छाता है पहले विवेक मर जाता है कि तो वचन नहीं तूने माना मैत्री का मूल्य न पहचाना बोले मैं भी अब जाता हूँ अंतिम संकल्प सुनाता हूँ
Good evening, ladies and gentlemen. Jai Hind. Welcome to this special press conference on Operation Sindoor. Like yesterday, we'll have the opening statements by the three senior officers who are here with me. You all know them well now. However, for those who were not here yesterday, let me introduce you to them. In the middle, we have Air Marshal A.K. Bharti, Director General Air Operations, who will provide insights on the air domain. To his right is Lieutenant General Rajiv Ghai, Director General Military Operations. He will cover the land aspects. And to my immediate right is Vice Admiral A.N. Pramod, the Director General Naval Operations. Following these briefings, we will be having a few question and answers. May I now request the DG Air Operations to commence the proceedings.
Good afternoon, ladies and gentlemen. Yesterday, we had a detailed brief on the successful joint operations that were carried out to destroy the terror infrastructure in Pakistan-occupied Jammu and Kashmir, as well as in Pakistan itself. We also iterated that our fight was with terrorists and their support infrastructure and not with Pakistan military. However, it is a pity that the Pakistan military chose to intervene and bat for the terrorist, which compelled us to respond in kind. दोस्तों, हमारी लड़ाई आतंकवाद और आतंकवादियों के खिलाफ थी। इसलिए 7 मई को हमने केवल आतंकवादी ठिकानों पर ही हमला किया था। पर अफसोस इस बात का है कि पाकिस्तानी सेना ने आतंकवादियों का साथ देना उचित समझा और इस लड़ाई को अपनी लड़ाई बना ली। इस परिस्थिति में हमारी जवाबी कार्यवाही अत्यंत आवश्यक थी और इसमें उनका जो भी नुकसान हुआ, वे खुद इसके लिए जिम्मेदार हैं। हमारी तरफ से हमारी एयर डिफेंस सिस्टम्स देश के लिए दीवार की तरह खड़ी थी और इसको भेदना दुश्मन के लिए नामुमकिन था। This brings me to the point, how have Indian forces managed to minimize the damage to both civilian and military infra in the country in spite of the unrelenting efforts by the Pakistani forces. Most of you and the majority populace within the country have had a lot to say about the layered and integrated air defense systems put in place by the Indian Armed Forces, which includes the assets of the Indian Army, the Indian Navy, in addition to the primary air defense assets of the Indian Air Force. As you all are well aware, this robust AD system comprises of a large variety of multi-layered AD sensors and weapon systems, from point defense weapons like the low-level air defense guns, shoulder-fired manpads, and short-range surface-to-air missiles or SAMs, to area defense weapons like the air defense fighters and longer-range surface-to-air missiles within our inventory. Additionally, the numerous waves of drones and unmanned combat aerial vehicles employed by Pakistan were also thwarted by the indigenously developed soft and hard kill counter-US systems and the well-trained Indian air defense personnel. All this was brought together as an efficient and effective AD environment by the Integrated Air Command and Control System, or the ISCCS of the Indian Air Force, which accords us the net-centric operational capability which is vital to modern days war fighting. While much has been said and written about the newer systems, I would like to place on record the performance and efficacy demonstrated by even the older battle-proven AD systems like the Pechora, the Osa AK, and the LLAD guns in countering the Pakistani threat vectors in the current operations. They were all modern generations, but these battle-proven systems stood the test of time and took them on head-on. Another highlight has been the stellar performance of the indigenous air defense weapon system like the Akash system. Here, ladies and gentlemen, I would like to mention that putting together an operationalization of this potent AD environment has been possible over the last decade due to unwavering budgetary and policy support provided by the Government of India in acquiring state-of-the-art equipment and weapon systems. Some of the results achieved in countering the enemy threat vectors over the last week are now being shown on the screen. Shown on the screen is a probable enemy PL-15 missile, which is of Chinese origin. This missile has missed its target, and you can see the pieces now which are available with us. Another weapon system or weapon which was found was the long-range rocket, the pieces of which you can now see on the screen. We have talked about the loiter munitions and the unmanned aerial systems, and here are some of the glimpses of those systems which we have brought down. To your right, with the right undercarriage or the wheel, you can see is the Yeeha system, which is of Chinese origin with Pakistan. You can see some quadcopters, and you can see one odd Sonka drone hanging by the wire. All these have been brought down by our trained crew and air defense systems. As far as our offensive actions are concerned, yesterday I had already shared some details about the targets engaged by the Indian Air Force. The composite picture of the Indian Air Force targeting so far is now shown on the screen. As you can see, we have targeted the length and breadth of the adversary. I'm sure most of you would have already seen the effect of these strikes on ground, courtesy the large number of videos and photographs being circulated in the media. A few representative examples from the open source are now being shown to you on the screen. In fact, two of them This is the strike on the Noor Khan Air Base. And you can see the effect. I'm sure most of you have seen the video. I have also picked it up from your sources only. And this is the aftermath of our strike at Raimiar Khan Air Base. You can see the massive crater that it has left on its runway. And you can see the pinpoint accuracy of our weapons. So with that, giving you an overview of how our air defense systems have thwarted the enemy drones, their fighter aircraft, their missiles, and resulted in minimal losses on our side. I would now hand over to the DGMO to cover his portion.
धन्यवाद एयर मार्शल भारती। मैं आज आप सब के साथ भारतीय सेना के एयर डिफेंस मेजर्स जो कि हमने इंडियन एयरफोर्स के साथ मिलजुल कर तालमेल में लिए, उसके बारे में कुछ बातचीत करूंगा। इस विषय में मैंने कल भी कुछ टिप्पणी करी थी, लेकिन आज मैं इस युद्ध के अहम एस्पेक्ट के बारे में आपको थोड़ा और पर्सपेक्टिव देना चाहता हूं। हमें एयर डिफेंस ऑपरेशन सिंदूर के एयर डिफेंस की कार्रवाई को एक कॉन्टेक्स्ट में समझने की आवश्यकता है। मैंने आपको कल बताया था कि पिछले कुछ सालों में आतंक की गतिविधियों का कैरेक्टर जो है उसमें कुछ बदलाव आ रहा था। अब हमारी मिलिट्री के साथ साथ मासूम सिविलियंस जो कि अपना बचाव करने में विफल थे, उन पर भी हमले हो रहे थे। 2024 में जम्मू सेक्टर में शिवखोरी मंदिर को जाते हुए यात्री और इस साल अप्रैल में पहलगाम में मासूम पर्यटक इस खतरनाक ट्रेंड के विशेष उदाहरण हैं। पहलगाम तक पाप का ये घड़ा भर चुका था। उसके बाद जो हुआ उसके बारे में हम कल विस्तार में बातचीत कर चुके हैं। क्योंकि आतंकियों पर हमारे सटीक हमले लाइन ऑफ कंट्रोल और इंटरनेशनल बाउंड्री को पार करे बिना किए गए थे, हमें पूरा अंदेशा था कि पाकिस्तान का वार भी बॉर्डर के उस पार से ही होगा। इसलिए हमने अपनी एयर डिफेंस की पूरी तैयारी पहले से ही कर ली थी। हमारी इन्वेंट्री में शामिल काउंटर मैन्ड एरियल सिस्टम्स, इलेक्ट्रॉनिक वॉरफेयर के साधन और एयर डिफेंस वेपन्स का इंडियन एयरफोर्स के इसी प्रकार के सिस्टम्स के साथ एक अनोखा मिश्रण किया गया। इसलिए आपने देखा कि जब जब पाकिस्तान एयरफोर्स ने हमारे एयरफील्ड्स और लॉजिस्टिक इंस्टॉलेशंस में 9 और 10 मई की रात को लगातार हमले किए, वो इस मजबूत एयर डिफेंस ग्रिड के सामने विफल हो गए। आपके सामने इस ग्रिड को एक तरीके से दर्शाया गया है। आप देख रहे हैं कि इंटरनेशनल बाउंड्री से कितनी लेयर्स, रेडार्स, काउंटर अनमैन्ड एरियल सिस्टम्स, उसके पीछे शोल्डर फायर्ड वेपन्स, हमारे विंटेज एयर डिफेंस वेपन्स जो कि काफ़ी सालों से हमारी सेना में हैं। एयर मार्शल भारती ने भी उसके बारे में बात करी। और लास्ट में हमारे मॉडर्न एयर डिफेंस वेपन सिस्टम्स। तो कोई मौका नहीं था कि पाकिस्तान एयरफोर्स ये मल्टी टियर डिफेंस को पार करके पीछे हमारी एयरफील्ड्स या लॉजिस्टिक इंस्टॉलेशंस को टारगेट कर पाए। ये जो डायग्राम आप अपने सामने देख रहे हैं, ये मुझे एक इंसिडेंट की याद दिला रहा है। और मैं आपको इस उदाहरण के ज़रिए से एक ये एस्पेक्ट हाईलाइट करना चाहता हूँ। और जब मैं स्कूल में था तो तकरीबन मेरे ख्याल से ये 70 का दशक था और उस समय इंग्लैंड और ऑस्ट्रेलिया के बीच में, आज शायद क्रिकेट की बात भी करनी चाहिए क्योंकि मैं देख रहा था कि विराट कोहली ने टेस्ट क्रिकेट से रिटायरमेंट ले ली। कई भारतीयों की तरह वो मेरे भी फेवरेट क्रिकेटर हैं। तो 70 के दशक में ऑस्ट्रेलिया और इंग्लैंड की फेमस एशेज सीरीज चल रही थी और उस समय ऑस्ट्रेलिया के दो बहुत तेज गेंदबाज जो कि क्रिकेट हिस्ट्री में बड़ा उनका नाम है, जेफ थॉमसन और डेनिस लिली, उन्होंने अंग्रेजी बैट्समैन और उनकी बैटिंग लाइनअप को तहस नहस कर दिया था। और ऑस्ट्रेलियंस ने उस समय एक कहावत निकाली थी, दैट फ्रॉम एशेज टू एशेज एंड फ्रॉम डस्ट टू डस्ट, इफ थॉमो डोंट गेट हियर देन लिली श्योरली मस्ट। और अगर आप इस लेयर को देखें तो आप समझ जाएंगे कि मैं आपको क्या बताने की कोशिश कर रहा हूं। तो अगर आप सारे सिस्टम्स को पार कर भी गए तो आपको फिर भी एयरफील्ड या लॉजिस्टिक इंस्टॉलेशन या जो भी चीज़ को आप टारगेट कर रहे हैं उसमें पहुंचने से पहले कोई ना कोई इस लेयर्ड ग्रिड का सिस्टम ज़रूर गिरा देगा। जो दुर्दशा कल आपने पाकिस्तान एयरफील्ड्स की देखी और शायद आज भी एयर मार्शल भारती की प्रेजेंटेशन में, हमारी एयरफील्ड्स हर प्रकार से ऑपरेशनल हैं। यही नहीं, पाकिस्तान के ड्रोन्स और वेपनाइज्ड यूएवीज से की गई हमलावर कोशिशें भी इस ग्रिड के कारण नाकाम हुई और जो बचे कुचे ड्रोन्स थे उन्हें हमारे शोल्डर फायर्ड हथियारों से मार गिराया गया। मैं यहाँ पर अपनी बॉर्डर सिक्योरिटी फोर्स की भी सराहना करना चाहता हूँ। उनके डायरेक्टर जनरल साहब से लेकर बॉर्डर पर तैनात बीओपी पर पहरा देने वाले आखिरी जवान भी हमारे इस अभियान में बढ़ चढ़कर शामिल हुए और बहुत बहादुरी से उन्होंने हमारा साथ दिया। उनके काउंटर अनार्म्ड सिस्टम्स भी हमारे इस मल्टी टियर्ड एयर डिफेंस ग्रिड का हिस्सा थे, जिसके कारण पाकिस्तान की नापाक हरकतों का विनाश किया गया। आपने सुना ही होगा, जब हौसले बुलंद हों तो मंजिलें भी कदम चूमती हैं। In the end, I would like to highlight again that in every single domain that Operation Sindoor has been prosecuted, there has been absolute synergy between the three services. Not only have we, in this endeavor, been fully supported by our government, departments, and agencies, I cannot here not mention our 140 crore countrymen that have stood behind us with their prayers and goodwill, urging and inspiring us to achieve our mission and objectives. For that, we salute you. You are indeed the best. Jai Hind.
Good afternoon, ladies and gentlemen. To talk about the air defense capability, the Indian Navy operates as a composite network force capable of simultaneously addressing threats emanating from all domains, that is
air, surface and subsurface, through amalgamation of advanced sensors synchronized on the combat management systems. In effect, the maritime force is able to ensure persistent surveillance, detection and identification for a comprehensive maritime domain awareness, including the airspace. Effectively using multiple sensors and inputs, we are maintaining continuous surveillance to degrade or neutralize threats as they emerge or manifest to ensure targeting at extended ranges. All these are conducted under the umbrella of a comprehensive and effective layered fleet air defense mechanism that caters for all threats, be it drones or high-speed missiles or aircraft, both fighters as well as surveillance aircraft. The fleet operates as a composite force maintaining a surveillance bubble at extended ranges using advanced radars. Any aerial target that attempts to penetrate this bubble is detected and identified using various techniques and technologies, affording quick and clear distinction between commercial, neutral, and hostile aircraft or flying objects at ranges in excess of the anticipated attack range. The Carrier Battle Group, with its integral air wing, provides the first layer of this layered mechanism. Adequately equipped and trained to high degree of proficiency, our pilots are able to operate both by day and night. In the current standoff, the presence of our aircraft carrier with large number of MiG-29K fighters and airborne early warning helicopters prevented any suspicious or hostile aircraft to close the Carrier Battle Group within several hundred kilometers. अगर मैं सरल शब्दों में बोलूं तो कोई भी संदिग्ध और दुश्मन के हवाई जहाज को कैरल बैटल ग्रुप के कई सौ किलोमीटर पास आने का मौका नहीं दिया. Over the past few years, and most importantly, immediately after the cowardly incident by Pakistani-sponsored terrorist attack at Pahalgam, we had validated our anti-missile and anti-aircraft defense capability in a complex threat environment using cross-platform cooperative mechanism. Our powerful carrier battle group with formidable offensive capability was able to operate with impunity and maintained an uncontested presence in the area of operations. Effectively, it compelled the Pakistani air elements to remain bottled up close to the Makran coast, denying any opportunity to be a threat in maritime space. The Indian Navy maintains a credible capability to detect, identify, and neutralize any aerial platforms that threaten our units at sea. To sum up, the Indian Navy's dominance thus ensured that, should we choose to, we can strike at will. Thank you. Shamdo Varna, Jai Hind. May I now hand over to Director General Air Operations for further proceedings. Thank you, Pramod. I think a lot has been said, and I would only end by saying and emphatically state that all our military bases, all our systems continue to remain fully operational and ready to undertake any future missions should the need so arise. और अंत में यह मैं स्पष्ट शब्दों में कह देना चाहता हूं कि हमारी सभी मिलिट्री बेसेस और सारे इक्विपमेंट और सिस्टम्स ऑपरेशनल हैं और ज़रूरत पड़ने पर अपने अगले मिशन के लिए तैयार हैं और तत्पर भी हैं. शुक्रिया दोस्तों, और यदि कोई अभी क्वेश्चंस हैं तो हम लोग तैयार हैं उसके लिए.
Ladies and gentlemen, like yesterday, I'll request you to raise your placards, which most of you are doing. Again, repeating it, anything which is confidential in nature will not be responded to. And as you are aware, the DGMOs, all three of them, have got an important assignment after this, which you also are very well aware of. So we shall not be taking too many questions today. I started with both the ends yesterday. Today I'll start from the center, 237. 237. And I'll request you to please maintain, I'll ask you, I'll come to you.
हेलो हेलो सर, मैं आवाज़ आ रही मेरी? हेलो सर, मधुरेंद्र, मैं न्यूज़ नेशन से आपकी प्रेस कॉन्फ्रेंस के शुरू होने के ठीक पहले एक वीडियो हमने स्क्रीन पर देखा जिसमें राष्ट्रकवि रामधारी सिंह दिनकर की कृष्ण की चेतावनी की प्रमुख पंक्तियों को उद्धृत किया गया और सीधे सीधे दुश्मन को ये संदेश दिया गया कि याचना नहीं, मधुरेंद्र, मैं न्यूज़ नेशन से। प्रेस कॉन्फ्रेंस शुरू होने के ठीक पहले राष्ट्रकवि रामधारी सिंह दिनकर की जो कृष्ण की चेतावनी है, उन पंक्तियों को सामने रखा गया और कहा गया कि याचना नहीं वरण होगा, जीवन जय या मरण होगा। कल शिव तांडव स्रोत के जरिए दुश्मन को संदेश दिया गया था और आज राष्ट्रकवि रामधारी सिंह दिनकर की इन प्रमुख पंक्तियों के जरिए ये किस तरह के डिटरेंट को क्रिएट किया जा रहा है, किस तरह के मैसेज को दिया जा रहा है, इसको थोड़ा इलेबोरेट करके अगर आप बताएं तो जाहिर तौर पर ये संदेश और व्यापक तौर पर जाएगा। और एक छोटा सा सवाल मेरा यह है कि ड्रोन अटैक को लेकर जो बातें सामने निकल कर आई हैं, एक बहुत हाइप क्रिएट था टर्किश ड्रोन को लेकर, TV2 और उसके तमाम ड्रोन को लेकर। ऐसा लगता है कि वो हाइप और ओवररेटेड ड्रोन जो है वो भारत में धराशायी हो गया, एक मैसेज दुनिया को चला गया कि अब हाइब्रिड वॉरफेयर में इसकी औकात नहीं बची है।
ओके, ऑल राइट, ओके, थैंक यू। आपने क्या नाम बताया अपना और किस एजेंसी से हैं? न्यूज़ नेशन से। बहुत अच्छा लगा आपकी हिंदी सुनकर और हिंदी कविता सुनकर। तो मेरे कलीग ने अभी बताया, आई थिंक आई मेंशन्ड यीहा टू बी चाइनीज origin. I would like to correct myself. The Yeha drones are of Turkish origin. So that comes to your question. All right. चूंकि आपने शुरू किया श्री रामधारी सिंह दिनकर जी की कविता से, हमारे राष्ट्र कवि रहे हैं, और क्या संदेश दिया जा रहा है, तो मैं बस आपको रामचरितमानस की एक कुछ पंक्ति याद दिलाऊंगा, आप समझ जाएंगे। तो याद कीजिए वो पंक्ति जो है, विनय न माने जलधि जड़, भय 3 दिन बीत, बोले राम सकोप तब, भय बिन होए न प्रीत। तो समझदार के लिए इशारा ही काफी है। और जहां तक ये ड्रोन, टर्किश ड्रोन्स का सवाल है, आपने देखा किस तरह के रेकेज यहाँ पे फोटोग्राफ्स हमने दिखाए हैं, चाहे वो टर्किश ड्रोन्स हो या और कहीं के भी ड्रोन्स हो। हमारे काउंटर यूएस सिस्टम्स, हमारे ट्रेंड एयर डिफेंस ऑपरेटर्स पूरी तरह सक्षम हैं, और हमारी देश की जो इंडिजिनस कैपेबिलिटी है काउंटर यूएस के लिए, उसने दिखा दिया है कि चाहे किसी भी तरह की टेक्नोलॉजी आ जाए, हम उसको काउंटर करने के लिए तैयार हैं। और मुझे बोलने की ज़्यादा ज़रूरत नहीं है, आपने खुद ही अपनी आंखों से देखा है हमने इनका क्या हश्र किया है। धन्यवाद।
ऑलराइट, 226।
Sir, Aditya Raj call from TV9 Network. Yesterday, the DG ISPR came out with a press conference, and while you have been continuously providing satellite images and proofs, undeniable proof really, of the airstrikes that happened and the damage that is caused, there's no evidence coming in from the other side. What do you think is there? Are they trying to bluff their people? Are they trying to build some kind of a propaganda for the anger that domestically is there in Pakistan? And secondly, related question, you mentioned Jaish-e-Mohammed and Lashkar-e-Toiba terrorists. The brother of Maulana Masood Azhar, Rauf Asghar, who was killed. Pakistan DG ISPR is trying to build a propaganda where he's saying that Lashkar-e-Toiba, Rauf from Lashkar-e-Toiba was at the entire funeral, but he's saying that he's alive, and they're trying to confuse the people because the two names are similar. The Jaish chief, who is the brother of Maulana Masood Azhar, and the Lashkar guy who was with the Pakistan army at the funeral. So could you clarify what has really happened? Because there is a lot of propaganda and information warfare happening from the Pakistan side. Thank you.
I think the first part of the question you have answered yourself. I need not delve more on it. Why they are doing what they are doing, information is not forthcoming from there. Obviously, that is expected, and they would do whatever it takes to assuage their people and minimize whatever information about the damage comes out. Here, I would like to clarify, as I said yesterday, our fight is with the terrorists. Our fight is not with the Pakistan military or Pakistan civilians. So that is very clear, and we are very clear in our targeting. So coming to the second part of your question as to what media or what propaganda spin the other side is trying to make out a story. Well, it is for them to answer, and it really is not a military question for us to answer here. We've done our job, we have done what we're expected to do, and that is it.
I'll come this side, 249.
सर, मैं पूनम पांडे हूँ नवभारत टाइम्स से। पाकिस्तान ने जो प्रेस कॉन्फ्रेंस की थी उसमें एक सेंटेंस उन्होंने यूज़ किया था कि दिस इज़ न्यू आर्ट ऑफ वॉर। तो हम सब ने देखा, शायद पहली बार देखा कि किस तरीके से आसमान में दोनों एयरफोर्स के एयरक्राफ्ट थे। क्या आप बता सकेंगे, क्योंकि हम जो लगातार जब कवर करते हैं हम देखते हैं 2016 में के बाद ड्रोन का जो पूरा वॉरफेयर में रोल है वो दिखा था, तो हमने भी वो दिखाया, और किस स्तर की ये वॉर थी? अगर थोड़ा आप क्लैरिटी दे सकें कि कितने एयरक्राफ्ट उनके इन्वॉल्व थे, लगभग कितने हमारे थे, क्या इसे अब तक का सबसे बड़ा जो जंग हुई है आसमान में वो कहा जा सकता है, और ड्रोन के रोल पे थोड़ा और ज़्यादा, क्योंकि 2016 के बाद जिस तरीके से बढ़ा है।
देखिए, जैसा मैंने कल कहा था कि इस लड़ाई के डिटेल्स अभी हम शेयर नहीं कर सकते हैं, क्योंकि इसमें काफ़ी कुछ ऑपरेशनल डिटेल्स होंगे। कितने जहाज थे दोनों तरफ से, किस तरह की लड़ाई हुई, these are questions of technical details which we may not be able to share firstly, and which we may not be able to share to explain to you the way it needs to be explained. Suffice to say कि yes, ये एक दूसरी तरह का वॉरफेयर था, and it is bound to happen. हम लोग पिछली लड़ाई, अगली जो कभी भी लड़ाई होगी, भगवान करे ना हो, लेकिन अभी यदि हुई तो ये पिछली लड़ाई की तरह नहीं होगी। हर एक लड़ाई जो है अलग तरीके से लड़ी जाती है, और टेक्नोलॉजिकल एडवांसमेंट्स हो रहे हैं। हम भी उस एडवांसमेंट्स के हिस्सा हैं, हमारे एडवर्सरीज भी हिस्सा हैं। सो इट इज़ अ कैट एंड माउस गेम, एंड यू हैव टू बी अहेड ऑफ द कर्व टू बीट योर एडवर्सरी. So that is what is going to happen. So if you ask, was this different? Was this engagement different? Definitely it was different. And a lot of new aspects have come out, but we were prepared for it, we were trained for it, and we were equipped for it. That is the only aspect that I can share with you at this time. Thank you.
Ladies and gentlemen, the last question, 161.
Hi, sir. Thank you, sir. Snesh Philip here from the print. So the social media, the Twitter is abuzz with the fact that we hit a site called Kirana Hills, which is supposed to be the nuclear storage facility. And there is a lot of rumors about Sargodha. There are foreign analysts who've mentioned that the Sargodha attack led to certain leaks. Is there a confirmation that we actually hit Kirana Hills, or we were careful of not to do any such thing? Thank you.
Thank you for telling us that Kirana Hill houses some nuclear installation. We did not know about it. Okay. And we've not hit Kirana Hills, whatever is there. Okay. I did not brief in my briefing yesterday. Thank you.
Ladies and gentlemen, thank you so much. As I said yesterday, as I said earlier and yesterday, it is difficult to take everybody's questions, and the DGMers have to reach somewhere right now. So thank you for coming. Please send in your questions on paper. We will definitely answer them. Thank you.
All right, so more detailing coming in from the whole armed forces establishment, and that to the extent that can be operationally communicated. So that is important to remember. But Harsh, I don't know if you saw yesterday's briefing, the one on Sunday and the one today. All three of them, the same gentleman, looking very relaxed, answering questions with a touch of humor as well, and completely unperturbed by this whole social media nonsense going on, trying to skew the balance, etc. Giving a visual reference and proof of what has been done by the Indian side, and how the missile systems have been thwarted.
Yeah, we've been confident, we've been cautious in our commentary, and we've had a very high conviction with the way we've carried out things. So I think this this little skirmish or conflict, however we want to term it, has seen a very different side of the Indian military versus earlier. Even our briefings have been high quality and again very cautious. We've been very clear as to what we want to disclose and what we don't. Even today we've seen the same thing. So a little bit more of the same is what we've seen today.
Yeah, no, but just some important points which were, I think, to my mind a little different is also focusing on the fact that a lot of indigenous systems were used, not just the S-400. We've all been talking about the S-400 as a anti-missile defense system, but they've talked about the Akash. They've said that even the so-called new generation, arms were completely repelled by the good old Indian arms which have been battle worn. So some of those points also important. Look at some of those Indian stocks also, the defense stocks which are coming in. Siddharth Khemka joining in. He's Head of Research Wealth Management at Motilal Oswal Financial Services. Siddharth, very good afternoon to you. We live in strange times where military press briefings and what we're seeing in the markets right now are dovetailing so interestingly because markets are on a complete roar. How are you looking at it?
Yeah, hi, good afternoon, Taman. I think a lot of positive developments both on the domestic front as well as on the global front. And I think the markets were getting restrained because of the cross-border escalation in the last few days. So over the weekend, we had a lot of positive developments right from the announcement of a US-China trade negotiation making a big headway. I think that is something that is also a big positive. Definitely, the de-escalation in the on the border is a kind of a big positive, and it provides some calmness at least to the jitteriness that the Indian investors were having. We were of the view that most likely it may not have that kind of impact on the economic front, but nonetheless, any skirmish on the border makes the investors jittery, and we saw first time in I think last 2 weeks FIs being net sellers. So now I think the focus is back on fundamentals. US economy now, after having done a deal with UK, they are making headways with the European Union, with India, with Japan, South Korea. And obviously the big one, China coming up where the negotiations are going on in Geneva. So that's the big positive which is elevating the global economic growth concerns. And that is also helping a lot of, if you see today, IT companies have recovered a lot, banking, financials.
Your favorites right now, Siddharth, very quickly, because I know you have to go. What would be your favorites right now?
So yeah, so if you look at in terms of results, banking, financials, I think the entire financial pack is something that we are very positive on. Results have come out very strongly. RBI has been providing the liquidity. Interest rates are coming down, NIMs are expanding, and growth will pick up. The second space is the overall consumption space, both if you see discretionary as well as staples, with monsoon expected to hit before time and be above normal. We expect both urban as well as rural consumption to pick up. A monsoon, B the government tax benefits, plus I think on a low base and the cost, raw material cost being on the lower side, that should help. So these are the two sectors where we believe for the year, full year, one should focus on.
Okay, thank you so much for that. I suppose the US-China trade deal is the difference between 24,700 and 24,900 where we are right now. And yeah, that's a beautiful screen. I dare say we have the wind to hit at 25,000. Dare say. If not today, then tomorrow. Very short break. Gurmeet Chadda joining us on the other side. Stay tuned for more.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Lots of stocks buzzing in trade. Want to quickly highlight a few. Something like a Birla Corp on the back of numbers. Plenty of infra players doing well. Look at an RVNL. Look at a Hindustan Copper within the metals basket. Even the metal stocks are doing very, very well for themselves. The Nifty metal, I dare say, is up 5% odd as we speak, and Tata Steel up 6. So yeah. We're seeing good traction there as well. But we're joined in with regard to defense because that currently is center stage. Gurmeet Chadda joining us, Managing Partner and CIO at Complete Circle. Gurmeet, good afternoon. Always good chatting with you. Of course, this is with regard to one of your tweets on the defense counters where you've suggested that the treatment given today unwarranted, and likely people, if at all selling today, will likely regret this. Give us a little more of the insight that you meant when you tweeted this out.
No, so I didn't mean regret per se. I think what happens is typically you see consensus trades getting challenged. And defense stocks on a day like this, when everybody thought will do better, is actually are largely flattish, maybe with an exception of Zen Technology and few others. So obviously, and the volumes are pretty high. For example, in solar, the volumes are probably 3 times daily average. In Bharat Electronics, it's almost touching now 40 million. So huge volumes, and I think probably, and that's when a lot of small investors tend to say, okay, maybe the ceasefire is, and you tend to take decisions. But structurally speaking, I think you will see more spending now on defense, and the nature of spending will also be more focused now because the warfare is now becoming more high tech, more loitering ammunitions, more drones, more supersonic missiles, and that's the reason you will see domestic allocation of funds going up. India would have also identified some gaps they have in terms of their air defense systems and interception, and that will be worked upon. And I think the way we have done it, and I think it tells you that I see a lot of export orders coming in, as far as our air defense system and a host of ammunition is concerned. So I think it's and we saw Germany doing a $500 billion infra and defense budget till 2030. You will see entire world getting rearmed, if I were to use that word. And I'm getting very, very constructive, on this in terms of, because the inventory levels, because of sustained conflicts in last 3-4 years, are at extremely low levels globally.
Meet, hi, good afternoon. Tamanna here. And your tweet on this really caught my eye. My question to you is, how do you sift? How do you filter from defense stocks which are sort of just joining the party and those that actually have more value to give, because valuations are over the top?
Absolutely, and I agree with you, and that's why I said the nature of warfare has changed. It's not the typical way where you enter and you're using tanks, and even look at something like a fighter aircraft. 1 or 2 Rafale or 1 or 2 F-16 has been so much of political debate last few days. Nobody cares if you lose few missiles or drones. So even from a political angle, from a soundbite perspective, some things are more high value. But from an army point of view, armed forces point of view, and that's what I said, that the nature of warfare is changing. It's more UAVs, it's more loitering ammunitions. It's extremely high tech warfare systems, and companies which are moving from products to platforms, are the one probably which will do well. So we are overweight on defense. We have been overweight on defense for a while now, and I think we continue to do that. Any corrections, when any sharp corrections, I would say 1 or 2% is not a correction. To us is an opportunity to build it. We see this as a multi-year capex theme as well as significant pickup in export theme playing out.
Opportunities is where the hunt is right now, Gurmeet. When you have this kind of a wide-ranging, bull run that we are seeing, I'm just wondering how you're feeling about autos and ITs. Let's take the trigger of the US-China deal. It's a 90-day deal. It's showing that Trump is willing to relent. There's been a deal with the UK as well. We're waiting for details of what the deal with India is. What would be the play if you're playing on the theme of the trade war ending?
Both auto and IT, Tamanna? Yeah. So, I think auto, we are seeing clear leadership emerging. Look at, for example, two-wheelers. We have seen TVS doing very well. Look at their 125cc numbers. Look at the iQube numbers, which is the EV system. Look at even the three-wheelers and scooters, they are doing very well. So it's present across different platforms, and they're gaining market share. Margin profile is improving. Debt is almost disappeared. Good capital allocation. And we've seen Hero, Bajaj struggling a little bit. Similarly, in four-wheelers and OEMs, M&M has clearly done well. I mean, quarter on quarter, they're gaining market share. I think on SUVs, they're almost at 24-25% market share. Won't be surprised if it's more than 25 by the time we finish June. Tractors, we are seeing volume growth. And farm equipment also doing pretty well. Plus exposure to global, especially US, for M&M compared to a Tata Motors and others is less. And we saw stock falling to 23,000-24,000 levels and quickly rebounding right from there. Tata Motors maybe could be a corporate action play this year with the company getting restructured, CV business getting separately listed. At some point of time, they will restructure the EV business also. And I think probably we need to study the UK trade deal, and once the US deal happens a little more closely, because UK is where they have the Range Rover shipments, which contribute to the majority of the shipments there. So there's a bit of a crisscross there, but we need to probably look at that as well. So I think you have to be selective here, and there is leadership coming, and which is getting demonstrated on month-on-month numbers. IT, I'm not sure, could be more start covering. I think there are a lot of concerns here. I think the US economy will take time. I think it will be a little soft, and I think the discretionary spending would be less. And then you have a lot of coding jobs and lower end IT services jobs, which will see slow growth or negative growth for the short period of time. So pure IT services may struggle. Companies with the right mix, somebody like an HCL, for example, which is IT services, software, and ERD, can be a better play in large cap IT, and some niche plays, where we are seeing even in this period, good quarter-on-quarter numbers, good commentary, good order to bill and conversion ratios, like Persistent, like KPIT, like Coforge. Although valuations are high, there we would probably buy if there is more valuation correction. You can't buy those stocks at 50, 60 earning multiples right now. So we are a little neutral to underweight as far as IT is concerned.
Gurmeet, just an extension of everything that's happening global and especially tariffs. What's the take on pharma?
Yeah, it could be a bit of a near-term pressure on generics, with Trump's announcement yesterday, and that's why you see in a market like this, the likes of Sun Pharma, etc., are pretty subdued. But as far as I think branded generics is concerned, I think we will continue to do well. I think you have now Ayushman Yojana for senior citizens, which include 10 lakh cover for senior citizens. We have almost 35 crore senior citizens in the country. Now, once healthcare becomes affordable, it's good for diagnostics, good for hospitals, it's good for branded pharma. So we have Mankind Pharma in the portfolio, almost 99% domestic, and they're doing some very good work on consumer health and women fertility. I think those are very high growth areas, other than obviously, the other space they operate in. We have some CDMO names which have done very well for us, the likes of Newland, Laurus, Divi's in our portfolio. We continue to believe that CDMO is where probably Indian IT companies were in 90s. You will see a big supply chain shift happening in CDMO. And a lot of our companies are 30, 40-year-old and have done significant capex in the last 2-3 years. some, almost as good as what they've done in the last 20 years. So I think pharma will be lumpy, slow, especially CDMO, but I think the opportunity size is pretty huge here.
I'm wondering if the next big sort of move to look at, Gurmeet, is in the offing would be the US-India deal. And if there are tariffs lowered, and they've been saying so far that India has offered zero tariffs on some categories, what would be the downside of that? Which are the companies or the domestic manufacturers in various aspects or sectors that could get hit? Is that some of the things that you've been thinking about right now?
It's just that our export to US and as a export to US as a percentage of GDP is just 2%. So yes, there are always winners and losers, but in a bilateral trade deal, when you are removing tariffs largely, there are efficiency gains in the sector. So individual stocks may miss out. It may happen. So for example, in the India-UK deal, one clear winner is textile, but not all textile companies will be winner. Maybe a Gokuldas, KPR Mills may outshine some of the other ones because of efficiency in terms of integration, in terms of other things. Similarly, in US, I think there could be some impact, maybe on some beverages, on some agricultural products, etc. But I think largely India would gain, and overall the system benefits. So maybe 3-4 months down the line, we will not be discussing tariffs.
No, Gurmeet, not from the point of view of those who will benefit from exports. Also from the point of view of those who will be at a disadvantage because of cheaper imports. A lot of Indian companies have been protected thus far. Let's just talk about auto, since you were talking about auto right now. If you have zero tariff imports coming in, competing with some of the high-end products of your domestic OEMs, that's also sounding trouble, isn't it?
Not with US as much. So for example, a Tesla with zero tariff also would come probably at a price point of 35-40 lakhs. We probably, that's like 2-3% of the market above 40 lakhs. So as I said, but I'm happy, had things not changed, you would have still been driving Fiats and Ambassadors of 70s, 80s. So I think some efficiency gains are good. So maybe M&M, so maybe Maruti could have some challenges, but it's just the price point at which Maruti operates at, which is ASP of, let's say, 8-9 lakhs. There isn't much imports which are going to happen there. So what I'm saying is there will be some impact selectively, maybe something in commodities, something in agricultural products, something maybe in chemicals. So there will be individual impact, but the entire sector would not get impacted. There will be winners and losers, in my point of view.
Gurmeet, it's been a while since we spoke financials, and therefore coming back to that piece. Okay.
I think your mic's gone. Yes. I can still hear you loud and clear in the studio, but
yeah, the volume is a little low today.
Something's happened with Harsh's mic. We're fixing that. But I think what he wanted to ask you about is, Gurmeet, something that we always want to know your view on is financials, the good old financials. And we saw financials lead the recovery over the last few weeks. Is that rally on pause for a bit?
I think it was a steal at 48,000 Bank Nifty. It's definitely not a steal now, but I think it will be probably in line with the market returns. You may still find some value in some banks which are still around 1.5 book value. Let's say, for example, a Federal Bank in the private banking space, maybe a couple of PSU banks. So that they may still offer you good risk reward. But in general, I think from here on at 55,000 Bank Nifty, the returns would be more market driven. I think the capital market plays are still subdued. They've seen strong correction. Look at a CDSL is down from 2,000 levels to 1,200, 1,300 levels. A CAMS has come down from 5,500 to 3,600. BSE has done well. Obviously, the results were pretty strong, but other market, the financial market participants are still probably 20-30% down. And I think once the stock market activity picks up again, SEBI is making more changes, relaxing norms a little bit as far as even F&O is concerned. And as the activity picks up, the numbers can surprise because, these guys are network plays. The fixed cost doesn't move much. Any incremental jump in market, in transactions, etc., can give you a very good operating leverage. And I think that's one space which I think is still a lot of value to offer. And maybe selectively, housing finance companies. I think if you're selective there are a couple of ones which are pretty good valuations.
Would you buy into this whole hotel tourism rebound theme for a little longer term, or let me broaden that? What would be your top favorites right now, Gurmeet?
I like airlines, I like hotels, I like the in general discretionary spend play. It's just that the valuations have been a little stretched. Did get some opportunity last week because of the border tensions. Maybe in hotel space, I think once the bad group stake in ITC hotels, it was 26%. It's come down to 15. There's a bit of an overhang because they want to exit the hotel space, which is the British Tobacco Group. I think if you see ITC hotels, it's about 35-40,000 crore market cap with about 13-14,000 keys. Now you compare that with Indian hotels, it's about 25,000 keys, and Indian hotels is 1.2-1.3 lakh crore market cap. So this is 1/3 of the value with probably 60% of the capacity. So there's a bit of a catch-up it can happen provided ITC hotels demonstrate good earnings quarter on quarter. So that's something which is in our radar, and we find value. I think we have enough exposure. We have Indigo in the portfolio, which is Interglobe. We have Indian hotels. We have ITC hotels. We added Trent when we saw a big correction from 8,500 to 4,000 levels. That's our largely discretionary spend play in the portfolio.
Awesome. Thank you so much, Gurmeet, for coming and speaking with us. As always, great clarity and great perspective. Thanks. Let's pull up where we're closing in at, where the index is concerned. We're nearly 4% higher on the Nifty 50. So closing very, very well. Let's pull up the intraday, likely closing very close to the day's highs as well. 1,000 points nearly on the Nifty 50, very, very close to the day's highs. So it's been a very strong reaction on the index, and it's not been a knee-jerk. We've gone from strength to strength as the day has progressed as well. So those are the two things that stand out in this graph. Let's also look at the contributors here, and two big ones stand out. One is an HDFC Bank, up 112 points contributed to the Nifty. ICICI nearly 100, Infi nearly 100 as well. So just those three stocks carrying the index up by 300 points, which is a third of the Nifty's gains today. Then you have a Reliance, which is the other heavyweight, which has also done fairly well for itself. Let's look at the heat map on the Nifty 50 index. And within that, of course, two stocks languishing at the bottom. We've tried to cover those, Pharma as well as IndusInd Bank in particular. It was part of Heard on the Street today. But you look at the leaders today, 7% plus on Shriram, Infosys and Adani Enterprises. All three of them doing very well for themselves. Trent as well. And all stocks which are sitting in the green on the Nifty are up 1% plus. That's the other very, very strong note that you can see on the Nifty. In terms of how the breadth was, no surprise at all. The breadth was extremely strong, nearly 2,150 advances to just about 120 declines. This has been steady state, but the gainers have just gone from strength to strength as the day has gone by, and that's what is standing out. Let's look at sectors. Pharma, which was in the red for a better part of the day, has closed in the green. IT index leading the way with everything that's happening with regard to US and China, 7% higher. The Nifty Realty Index, the strong rebound on the back of the war and the ceasefire being declared, up 6%. Metals buzzing 6% higher on the back again of the China story, which is likely to play positively for metals. Those three leading the pack. Let's look at the BSE 500 top gainers, top losers. Before I go to broader markets and carve out how the Nifty mid cap and small cap have played out, Birla Corp up 20, Cera Sanitary were up 12%, RVNL, HFCL just among some of the other buzzers. Look at Mahindra Holidays, some of the holiday stocks and hotel stocks doing extremely well in trade today, including an ITC and Indian Hotels. All of those were some of the top gainers. KPR, Jyoti Labs, some of these on the back of earnings, some of them on the back of something like a Naveen Fluorine, but something like an IndusInd on the back of some bit of skepticism coming through with regard to their microfinance portfolio. We've looked at the breadth, extremely strong. Let's look at how the mid-cap and small-cap index has done. 3.75% higher on the Nifty mid-cap index. The broader markets showing the same level of strength and resilience. Small-cap index also up 4%. So largely in line with how the Nifty has done today. But 920 points on the Nifty, that's really the headline to take away. Let's also pull up the Bank Nifty just for a bit, because just the way in which private sector banks have performed, 200 points from ICICI plus HDFC today on the Nifty, 3.34% on the Nifty Bank, and that also underlines the confidence and the rally. IT and banks doing well, clearly the index does well. Let's last off look at what to watch out for tomorrow, and far and few in terms of cues globally, but domestically, Godrej Consumer expected to go ex-dividend. You have Niva Bupa, 57% of the shares to exit lock-in. Keep your eye out on this one. And Swiggy, 85%. So both of those are chunky ones and are also well-known IPOs, where Niva Bupa has actually done well post the IPO. AB Capital, Airtel, those are two stocks on my radar out of this list. Hero is the other one. Siemens within the Capex play, Honeywell Automation as well. ITD Cementation from the infra, and you have Tata Motors as well, which will declare numbers. So some of those names to be kept in mind. GSK Pharma as well, GSK Pharma, I beg your pardon, as well in that list of stocks. But that's correct. So Tata Motors is there, and you also have a Bharti Hexa. So those two names. Anyway, I believe we're out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's dive straight into the show. The benchmark indices continue to extend their gains through the course of the day, with the Nifty and Sensex both ending over 3.5% higher. The 30-pack Sensex in fact reclaimed its 82,000 mark since December 16, 2024. The broader markets too ended on a higher note, with both the mid-cap and the small-cap recording gains of over 3% each. All sectors ended in the green, with IT, realty and metals leading the bulls. The NSE Nifty 50 IT jumped 5.91%, almost 6% to 37,860 levels, the highest level since March 26. In fact, the index jumped as US and China agreed to reduce tariffs on each other for 90 days. US Treasury Secretary Scott Bessent and US Trade Representative Jamieson said in a press briefing that both sides will reduce tariffs by 115%. This major breakthrough in US and China trade relations will ease worries over the former's economy, which contracted for the first time in 3 years. Indian IT companies conduct a substantial portion of business with the US companies. US President Donald Trump is set to sign an executive order aiming to cut prescription drug prices by 30 to 80%. This move includes implementing a most favored nation policy to ensure the US pays the lowest prices globally for pharmaceuticals. US Treasury Secretary Scott Bessent announces a 90-day tariff war pause with China. US tariffs on Chinese imports dropped to 30% from 145%, while China cuts tariffs on US goods to 10% from 125%, fostering trade stability. Trump sneezes and Indian pharma catches a cold. Pharma stocks dropped in trade today as pessimism set in over a possible trade deal between US and China. Trump's announcement about reducing the prices of prescription drugs, which in turn could push up prices of medicines in the rest of the world. Now, this gave chills to a lot of companies in the pharma sector. Defense stocks continue to climb steady and firm thanks to Operation Sindoor. Every listed defense firm which manufactures for the Government of India has been rewarded enthusiastically by the markets as they expect more orders to flow in soon. Hospitality stocks made some smart moves as 32 airports are reopened for civilian air traffic. The government had earlier suspended civil flight operations at 32 airports and 25 air routes till 5:30 a.m. on May 15th. Some of the key airports reopened are Srinagar, Amritsar, Shimla and Jammu. Tourism stocks too have shot up sharply. Pharma major Dr. Reddy's posted fourth quarter earnings that were above estimates. CEO branded markets of Dr. Reddy's M.V. Ramana told NDTV Profit that they expect their India business would grow in the high single digit in this fiscal. The company is also expected to launch vaccines to combat respiratory viruses called RSV vaccines. They have partnered with Sanofi for the vaccines. Revenue from their cancer drug Revlimid is expected to taper down from the third quarter of the current fiscal. Thermax's fourth quarter earnings were a mixed bag, with revenue in line with estimates but profit below expectations. Managing Director and CEO of Thermax, Ashish Bhandari, told NDTV Profit that the chemicals business let them down. He also said that he sees orders coming in from the month of June onwards, which could be worth 400 to 600 crore rupees. He also stated that they had lost a large 500 crore order. The overall outlook, though, he said, was positive, especially in the first 2 quarters of the current fiscal. Aarti Industries beat street estimates in the fourth quarter. CEO and Executive Director of Aarti Industries, Suyo Kotecha, told NDTV Profit that they stand to gain from overcapacity in China. The company expects double-digit growth volume in the current fiscal. Yes Bank stock rose 2% in trade today. Sumitomo Mitsui Banking Corporation has sealed a deal to acquire a 20% stake in Yes Bank, buying from SBI, Federal Bank and Bandhan Bank at 21.5 rupees per share. Current price to book value is at 1.3 times, while the purchase by Sumitomo Mitsui Corporation is at 1.4 times. This means Sumitomo has valued Yes Bank at 67,500 crore rupees. Quick commerce firm Swiggy's fourth quarter numbers paint a grim picture. Net losses soared to over 1,000 crore rupees. Quick commerce losses have widened, forcing Swiggy to delay break even to the first quarter of FY27. Axis Capital is bullish on Bharat Electronics. The brokerage house sees the stock moving up to hit 335 rupees on the back of tensions between India and Pakistan. Axis Capital also stated that BEL's product reliability has been proven during the India-Pakistan conflict. This is because BEL made SAMS played a key role in countering drones by Pakistan. The UK and the US signed a landmark agreement slashing tariffs and opening the doors for advanced tech cooperation. The deal promises lower costs and better market access for this industry and for Tata Motors too. The car maker stands to gain now that the US and China have agreed on a trade deal. This is because 22% of the volumes of Jaguar Land Rover are from China. The expectation is that the trade deal could help control the economic slowdown in China. Shares of PVR Inox rose over 5% to 969 as the company's profitability increased despite a decline in top line and bottom line. PVR Inox's consolidated EBITDA rose 2% on the year to rupees 283 crore compared to 278 crore. Net loss narrowed to 125 crore from 125 crore again. Raymond's demerger of its real estate and engineering business is set for May 14th, with shareholders getting one Raymond Realty share per Raymond share. And going on to the next story, UPL posted a strong Q4, marking a multifold jump in its net profit that came in at 896 crore versus just 40 crore rupees. Revenue grew by 10% and EBITDA surged over 67%, indicating strong operational efficiency. The board declared a dividend payout of 6 rupees per share. ABB India's net profit and revenue missed estimates. Margins remained flat. The revenue miss was mostly due to a 19% decline in the automation segment. The power and equipment manufacturers' order growth stood in line with the parent company's guidance. Order in the first quarter indicates weakness in short-cycle industrial demand. Ather Energy's loss in the fourth quarter contracted to 234 crore from 283 crore earlier. The revenue of the electric two-wheeler company increased by over 29% to 676 crore rupees. EBITDA loss also reduced to 172 crore from 239 crore in the same period last year. And in an interview to NDTV Profit, Mihir Vora of Trust Mutual Fund said he is bullish on IT stocks, adding that a potential deal with the US will make a huge impact on various sectors. While he acknowledged that high beta stocks saw a huge correction, India's growth story is back to the front lines as he hopes for credit growth to improve in the coming quarters. Commenting on the PSU space, he said that the constraints for the sector largely lies in the manufacturing department rather than demand. And speaking on America aiming to cut prices for prescription drugs, Vineet Sambre from TSP Investment Managers said that companies supplying to the US should expect a big opportunity. He reckons that domestic pharma players won't see much derailment. The impact is largely going to be sentimental due to Trump's executive order. Senior officials of the Army, Air Force and the Navy confirmed that a Mirage fighter jet of Pakistan was destroyed in Operation Sindoor. They also detailed how indigenously developed air defense systems had stopped numerous waves of drone attacks from Pakistan. Director General of Air Operations A.K. Bharti stated that the performance and efficacy of older air defense systems was also proven. The officers credited the government's budgetary support in the last 10 years as having played a key role in potent air defense systems. The armed forces officers also reiterated that India's fight was with terrorism and not the Pakistan military. They said that it was a pity that the Pakistan military chose to intervene on behalf of the terrorists. The Director General of Military Operations cautioned that Indians needed to understand Operation Sindoor in a certain context as terrorism activities by Pakistan had been changing trends over the past few years. A scheduled conversation between the Director Generals of Military Operations of India and Pakistan will take place on Monday evening. Earlier, the meeting was scheduled at 12 in the noon. The talks will be held over hotline. The reason for deferring the talks by a few hours is not immediately known. India has released the names of the top Pakistani army officials who attended the funeral of terrorists killed in Operation Sindoor, which was launched on May 7th to avenge the deadly attack in Jammu and Kashmir's Pahalgam last month. According to Indian officials, the funeral of terrorists killed in Mudrike was led by Abdul Rauf, a LET commander who is a specially designated global terrorist by the US. Exposing the nexus between the Pakistani army and terrorists, the officials released a picture which showed Lieutenant General Faiz Hussain Shah, Major General Rao Imran Sartaj and Brigadier Muhammad Furqan Shabir attending the funeral. At least 10 satellites are continuously working round the clock for the strategic purpose to ensure the safety and security of the citizens of the country. That comment was made by ISRO Chairman V. Narayanan. Chairman of ISRO, he added that ISRO surveils the 7,000 kilometer seashore areas. He explained that ISRO had monitored the entire northern part continuously. And staying with the news about the armed forces, Andhra Pradesh Deputy Chief Minister Pawan Kalyan has announced a property tax exemption for homes owned by Indian defence personnel within Gram Panchayat limits in the state. He called this his gesture of honour and gratitude. The exemption was earlier limited to retired soldiers or those posted at the borders. Kalyan has now said the property tax exemption will cover all active personnel irrespective of deployment location across the country. And the DGCA has lifted NOTAM, reopening 32 airports including Amritsar, Srinagar, Leh and Jammu. Civil flights had been suspended amid India-Pakistan tensions. All affected airports and 25 air routes are now operational as of 5:30 a.m. on May 15th. IndusInd Bank is in the spotlight as market chatter points to a significant selling by large high net worth individuals. Now, this wave of divestment comes amid expectations of higher provisioning related to microfinance institutions in the fourth quarter. SRF saw a surge of buying interest last week, driving its stock to a 52-week high. However, recent developments have prompted smart investors to exit, signaling a shift in sentiment. SEBI is all set to standardize all equity F&O expiries to Tuesdays or Thursdays, sources told NDTV Profit. Each exchange will offer one weekly index options contract aimed at ensuring uniformity and reducing expiry day volatility. This move could streamline trading and stabilize markets. Traders may need to adapt strategies as SEBI tightens derivatives oversight. And SEBI is also likely to relax its earlier proposal on index options restrictions. Sources indicate a net end-of-day limit of 1,500 crore, up from 500 crore previously, and a gross limit of 10,000 crore per side. Intraday trading may be exempt from these limits, though exchanges and SEBI will monitor positions 4 times daily. And in the first direct comparison of blockbuster obesity drugs, Eli Lilly's Zepbound helped patients lose nearly 50% more weight than Novo Nordisk's Wegovy. Over 72 weeks, Zepbound users lost an average of 50 pounds compared to 33 pounds with Wegovy, according to Lilly-funded study published in the New England Journal of Medicine. LTIMindtree has secured a multi-year deal valued at $450 million from a global agribusiness company. The agreement involves implementing an AI-powered operating model to enhance application management. This is a strategic partnership that aims to leverage advanced AI technologies to optimize and streamline the company's application processes. PG Electroplast net profit soared 109% to 145.23 crore from 69.55 crore rupees earlier. This was driven by a 77% revenue surge to 1,909 crore from 1,076 crore rupees. EBITDA rose 82% to 211 crore rupees, with margins slightly improving to 11.1% from 10.8%, reflecting strong operational performance and growth. A tragic accident on the Raipur Baloda Bazar road claimed 13 lives when a small truck carrying people returning from a Chotia Chatti event collided with a trailer near Saragaon. Several others were injured and hospitalized. Raipur SP Lal Umed Singh confirmed the incident. Baramulla police confirmed the discovery of 20 unexploded ordnances across 17 villages. Following their safe disposal, the district administration has permitted residents from 6 evacuated villages to return. And MMRDA is tackling BKC's traffic jams worsened by 6 lakh daily visitors and heavy vehicles post-sign bridge closure with a new plan approved with Mumbai Traffic Police. Key measures include converting underused cycle tracks into roads, expanding 2+2 lanes to 3+3, boosting capacity by 50%, cutting travel time by 10 minutes, and reducing carbon dioxide emissions. A one-way traffic system in busy BKC areas will further ease congestion and enhance safety, ensuring sustainable traffic management for future growth. And as Mumbai's Metro 3 corridor extends from Bandra Kurla complex to Worli, another major transit milestone is on the horizon. The Mumbai Metro Red Line 9, the first metro line in Thane district, is set to begin trial runs this week along the Dahisar to Mira Road stretch. Following the successful energization of overhead traction wires on Saturday, dynamic testing of trains will now start on the 4.97 kilometer stretch between Dahisar and Kashigaon. Donald Trump has defended a controversial plan for the US to accept a luxury Boeing 747-8 jet from Qatar at no cost, calling it a transparent transaction. The jet would temporarily replace the aging Air Force One while a delayed Boeing model is completed. Critics, including Democrats and former ethics officials, warn the move could violate the Constitution's emoluments clause, with some Trump allies also expressing unease. Qatar confirmed the jet transfer is under legal review but denied a finalized agreement. Hamas has announced it will release Eden Alexander, the last known American hostage in Gaza, as part of ongoing ceasefire talks and to aid humanitarian efforts. The move comes just ahead of President Trump's Middle East visit, with direct negotiations reportedly underway between Hamas and a US official in Qatar. And just a day after aligning with European leaders on a 30-day ceasefire demand for Ukraine, President Donald Trump shifted course by backing Russian President Putin's call for direct negotiations with Ukraine. The reversal undermines the joint stance taken by Britain, France, and Germany and Poland alongside Ukraine's President Zelensky, and raises uncertainty over the coordinated pressure campaign on Moscow. The UK will now limit skilled worker visas to graduate-level jobs, and lower skilled visas will only be issued for sectors crucial to the country's industrial strategy. Businesses must boost training for British workers. Care sectors firms will no longer be allowed to recruit overseas under the new visa system, part of PM Keir Starmer's plan to curb migration post local election pressure. Polish PM Donald Tusk has accused Russian intelligence of ordering the fire that destroyed Warsaw's shopping center last year. Some suspects are in custody while others are being pursued. Moscow has yet to respond but has previously denied similar sabotage claims. An earthquake measuring 5.7 on the Richter scale jolted Tibet at 2:41 a.m. Tremors were reportedly felt across the country, though no immediate reports of damage or injuries have surfaced. The National Center for Seismology reported that the earthquake occurred at a depth of only 10 kilometers. Shallow earthquakes tend to be more hazardous since they take place nearer the surface of the earth, so the vibrations are felt more intensely on the ground and the possibility of aftershocks is higher. An Indian batting sensation, Virat Kohli, announces retirement from Test cricket today. Kohli has played 123 matches and has scored over 9,000 runs for the team. This includes 30, 100 and 31 half-centuries. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit, as there's a lot more lined up for you right on the other side.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Nifty Sensex had their highest closing since October 2024. Nifty Sensex jumps over 3.5% for the day. All sectoral indices close in the green. Nifty FMCG and Pharma snapped their 4-day losing streak. Pharmaceutical stocks shed 1.3% even as the broader markets rise after US President Donald Trump said he would sign an executive order to cut prescription prices to the level paid by other high-income countries, an amount he put at 30 to 80% less. At the Triforce high-level press briefing, the DGMOs assure India's military prowess remains unshaken, with all bases and systems fully operational and ready for any mission
emphasizing that Pakistan's Air Force could not breach India's robust multi-layered air defense grid. The Airports Authority of India and relevant aviation authorities have issued a notice to airmen or NOTAM to open the 32 airports across northern and western parts of India, which were closed for civil flight operations amid soaring tensions between India and Pakistan. Amid its ongoing trade war, the United States and China have agreed to roll back their tariffs. This joint statement from both countries comes after a marathon of trade negotiations on Geneva and Switzerland. Sources say SEBI is likely to hold off on any moves until at least June 2025, following phase 2 of equity derivatives reforms. The regulator has already reviewed trading data from 2024 to 2025, assessing the impact of earlier restrictions. After days of speculation, Indian cricket great Virat Kohli confirms his retirement from Test cricket with immediate effect in an emotional post on Instagram. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it, shall we? And let's take a look at how the markets fared today, breathing a sigh of relief as Indo-Pak tensions have eased. Both Nifty and Sensex soared over 3.5% today, marking their highest close since October 2024. This surge represents Nifty's strongest intraday performance since February 2021. For a complete rundown of today's action on D Street, Harsh joins us with a market wrap.
Right, solid move on the Nifty today. 900 plus points gain in a single day of trade. The market has brushed off the worries and how. Two pieces that evolved. One was, of course, on the domestic front. The India-Pakistan conflict seems to have now been put to rest. And then you have US-China, where US is going to be reducing tariffs on China at least for the first 90 days. And it seems like there is some bit of keenness with regard to doing a deal. So you had the larger market doing very well on the back of the way in which the India-Pakistan conflict has taken shape and been closed to a certain extent. But really, it's the metal stocks also that really stood out, and IT that really stood out on the back of everything that's evolving between US and China. 6.5% on IT, nearly 6% higher on the Nifty metal as well. But outside of that, the market breadth was extremely strong in any case. So all of these developments just aided the way in which the market was looking at everything playing out. You had on the Nifty 50, within the banking stocks, HDFC and ICICI, which contributed 200 positive points on the Nifty. Not sure the last time I've seen that. Two stocks in particular, 100 plus on HDFC Bank and nearly 100 on ICICI Bank. Very, very strong gains. And the Nifty Bank itself was up over 1500 points. So very strong rally on the Nifty Bank. Now, in terms of outside of that universe, you also had something like an Adani Enterprises, which was up over 7%. You had certain pockets which also did fairly well. I did mention IT as a basket and I did mention metals as a basket, but realty also was up 6% within the broader markets. The breadth was extremely strong. You had 2000 plus stocks gaining in trade. And it was fairly flattish through the day in terms of the breadth. But what happened was that some of the stocks which were up just continued to gain through the day. So we saw a steady uptrend both on the Nifty 50 and also within the broader market basket. Nearly 4% up on the Nifty mid cap, nearly 4% up on the Nifty small cap. Of course, the Nifty 50 was up 3.7 odd %. So very, very strong and largely in line when you're looking at the broader markets. But that's what played out. Some specific counters which did well also, non-sectoral related, were hospitality stocks doing extremely well in trade today. And ITC hotels and East India Hotels, some of those names really doing well. So those were some in focus as well. But listen in to a slice of a conversation we had with Mihir Vora on how he believes the market ought to respond to everything that's playing out.
We must look out, and some of the positives which have come. One is, as I said, clearly credit growth in the financials is something that we need to look at, because the capital market link plays will do well in any case, because there's the high beta play in the market and the market sustains. But in the banks we need credit growth, so that's one area that I'm finding a good equation of growth versus valuations. Second event that we need to watch out, and which is very close, hopefully, is the deal with the US, because that can impact a lot of sectors. For example, if you are talking about auto, ancillaries, pharmaceuticals, some of the IPR link plays, then the deal with the US will make a lot of difference. For example, if you are saying that there'll be very low import duties on auto and auto components on both sides, then some of the Indian auto component players, maybe not so much the OEMs, but the auto component players can tend to benefit. The second is, if we are saying that pharmaceuticals will be also part of the deal, then some of our API suppliers, some of the the generic suppliers can tend to benefit. Margins I'm not sure, but volumes definitely can improve a lot going forward.
That's right. And in a major breakthrough, the US and China have in fact agreed to significantly reduce tariffs on each other's goods for an initial 90-day period, easing tensions in their ongoing trade dispute and triggering a robust rally in global markets. What we also just saw that Harsh and Mihir Vora actually referred to. Now, this deal announced after high-stakes talks in Geneva in Switzerland reflects both nations' commitment to a sustainable, mutually beneficial economic relationship. CGTN's Ken Brown joins us now from Geneva to unpack the implications of this tariff rollback for China and highlight the key outcomes from the negotiations for American farmers and Chinese manufacturers. Let's listen in.
Yes, we're standing outside the Intercontinental Hotel here in Geneva, where that press conference has just taken place, set to make global headlines. That follows a press conference from the Chinese delegation yesterday evening here in Geneva. Also, we heard from the Chinese lead and Vice Premier He Lifeng. He talked last night about how we were going to hear the details today. We've heard lots of positive statements, how there were positive talks, mutually respectful talks, how the atmosphere was very candid, and we were waiting for the details today. He Lifeng said that last night we were going to get some good news, and that's been the case. We've heard of reductions of 115% on the tariffs, effectively down to 30%, in some cases 10% for 90 days. As you mentioned, that's been stipulated in the joint statement from the both sides. Now, we heard also from He Lifeng that these discussions are going to continue over the next 90 days. Potentially they will alternate between China and the United States, or in a third party country like they held them here in Switzerland, neutral territory. He Lifeng will continue to be the lead person in those negotiations, in those discussions for China, and on the American side that will continue to be US Trade Secretary Scott Bessent.
And that was the update that we got in from Geneva, as the US and China have in fact announced a kind of thaw in the standoff that had actually taken off over tariffs. But let's come to India right now, because as tensions ease and tariffs between US and China are significantly reduced, Indian exporters are grappling with mixed sentiments about the implications. While some view this development as potentially dampening India's export prospects, others highlight promising opportunities amidst the shift. My colleague Rishabh now joining us with a detailed analysis of the impact on Indian exporters. And Rishabh, take us through the silver linings as well emerging from this global trade reset.
Right, Sanjana. What we've seen happen this morning out of Geneva is something, the fact that there is very significant easing now between of the tensions between US and China. What we're also seeing is the fact that the 90-day pause means that US tariffs on Chinese imports come down to 30%, while China will cut tariffs on US imports down to 10%. Now, this sort of brings them very close to the 10% baseline that India is operating at currently. And a 20%, only a 20% delta remains. Now, this is something that Pankaj Chadda, chairman of Engineering Exports Promotion Council, highlighted to me in a conversation a few hours back. Is what he said, that the two countries are now on near same levels, and such a delta will be very easily beaten by China given their manufacturing proficiency. What is also a point of worry is the fact that sectoral tariffs have not been touched, and the US just seems to refuse to engage on sectoral tariffs. By sectoral tariffs here, I mean the tariffs, the 26% tariffs that are still very much in action on steel, aluminium, as well as auto and auto parts. Now, those sectors remain untouched. So India continues to suffer tariffs there as well. What we're also seeing from another exporters organization is the fact that this will intensify competition in certain markets, in third markets like Southeast Asia, Africa, as well as Latin America.
Right. All right, Rishabh. Thank you so much for that update. We'll continue tracking this story, especially with regards to exports. But I'm now joined by Sean Rain, founder and managing director, China Market Research Group. Sean, it's been a bit of a heavy news cycle in India for the past few days, but things are looking hopeful with a cautious thaw in India-Pakistan deals, but a more voluntary, enthusiastic thawing with trade relations between US and China. So I'm going to get your insight on that. You've noted that US tariffs have driven Chinese innovation, but now with the US reducing tariffs from 145% to 30% and China from 125 to 10%, how do you see this rollback affecting China's push for self-reliance in key industries like technology and manufacturing?
Well, let me first by saying very clearly, China so far has won the trade war. Xi Jinping and the CPC didn't blink, they didn't fold, they didn't kneel down. Instead, Trump completely prostrated himself, destroying American prestige because he had so much pressure coming from Amazon, Walmart, iPhone, and American consumers worried about inflation that Trump had to back down. And that has shown the mainland Chinese government that they are the new global economic superpower. And the rest of the world has seen this. So this is actually going to accelerate the rise of Chinese indigenous innovation. You know, already
Sorry
you
to
see
cut
that
you off,
China
and I'm going to
has
have to come back to you, but we're getting breaking news that's coming in right now. The Prime Minister will be addressing the nation at 8 p.m. this evening. This is a big news coming in right now, an announcement coming in. The Prime Minister Narendra Modi will be addressing the nation at 8 o'clock this evening. Remember, this coming in on a day, especially after India launched Operation Sindoor and has been briefing the media, has been briefing the nation. We heard from the Indian Armed Forces a while ago talking about the latest updates with regards to Operation Sindoor. This, remember, coming in at a time where the DGMOs have continued to maintain and assure the country that India is well equipped and the military bases are fully functional. Now, the Prime Minister will in fact be addressing the nation at 8 o'clock this evening. We'll continue to track the latest developments and bring you the latest updates on this. And let me quickly bring in my colleague Tamanna now joining. But before that, I'll give you the latest update coming in right now. Just earlier today, we heard from the Indian Armed Forces in a joint press briefing just a while ago, where they did in fact brief the media. They did in fact talk to India in a very high level press briefing, where they did talk about India's actions so far in countering any kind of terrorism or in any kind of action coming in. And this is also coming in on a day where the line of control and the border areas remained largely peaceful, with the Indian Army updating us about this morning, less than 2 days after there has been an agreement to cease fire. Indian Army sources in fact telling NDTV that the night remained largely peaceful across Jammu and Kashmir and other areas across the international border. Now, the Prime Minister will be addressing the media and addressing the nation at 8 o'clock this evening. This is after India and Pakistan had reached an understanding to stop all firing and military actions on land, air and sea. My colleague Tamanna now joining us on the phone line with more. Tamanna, a significant update coming in as the Prime Minister will be addressing the nation at 8 o'clock this evening.
You know, this was the address that everyone was waiting for, Sanjana. It becomes very, very important because thus far, Prime Minister Modi has not publicly addressed via social media or any speech what has happened in the last 3 days. We have heard from the Foreign Ministry, of course we've heard from the Foreign Secretary, we've been hearing from the heads of representatives of the armed forces, but we have not yet heard from Prime Minister Modi, which is why this address becomes so crucial. You know, what we'll also hear possibly at 8 p.m. today is a very clear setting of agenda and narrative. So far, this war in that sense has had two aspects. One is the military operation, in which we have been superior, and there's no doubt about it. But the way war is waged in this modern day, I suppose, is in two fronts. There is a military operation and then there's an information war. And on the information war, in the world of social media, AI, fake news and false narratives, there has been an attempt to present a very different picture which is devoid of facts completely in terms of what has really happened and what the outcome is. This is where it will be very, very important to hear from Prime Minister Modi and set the record straight. What exactly did we gain? Under what terms and conditions did we opt for a ceasefire? What was the role, if any, of the United States? All of these things hopefully will see some clarity coming in. Of course, expect this to be a laudatory and congratulatory address for the courage, determination and superiority that the Indian Armed Forces have shown. No doubt about that. But I would also expect a very stern warning that it's not ended yet. This is a ceasefire. But Operation Sindoor is very much on. Remember, Sanjana, this is also important because India has redrawn the line. The red line has been redrawn completely. Now, any terror attack on Indian soil will be treated as an act of war. What does that exactly mean? What does that look like? What does that entail? That is also something hopefully we'll learn from the Prime Minister's address this evening.
Tamanna, thank you so much for that update, and also imperative to note that this is coming in at a time where there has also been a concerted effort, Tamanna, that we're seeing by the Indian government, you know, not just to protect and assure India, but also battling a lot of misinformation, whether it is emerging, you know, across the border, but a very concerted effort to set the record straight. And I think that will be further reiterated by the Prime Minister in his address this evening. We seem to have lost the line there, but this is a very significant development coming in. Let's remember, this is right after India did in fact launch Operation Sindoor. This is in reaction to the gruesome terror attack that killed 26 people on April 22nd in Pahalgam. Now we're learning that the Prime Minister will be addressing the nation at 8 o'clock this evening. And we'll continue tracking all of those developments and bring you the latest. And moving on, in a significant update in the drug industry, US President Donald Trump has proclaimed to cut the price of prescription drugs and pharmaceuticals in the US by 30 to 80%. Now, this could spell trouble for Indian pharma companies, especially those that have substantial exposure to the US. And moreover, this could also compel manufacturers to raise prices in other countries. To help us decode the implications of this announcement, let me quickly go over to my colleague Varsha. Varsha, over to you.
Trump has announced a new executive order to significantly reduce prescription drug prices in US. Now the plan aims for a potential reduction of prescription drug prices to 30 to 80%. Now the pricing is based on most favored nations policy principle. Now Trump will link US drug costs to lowest prices paid by other countries. Now this will provide immediate relief from high medication cost in US according to Trump, which will ensure a fairness for American citizens. And now the order would primarily affect drug administered in doctor's office, and this will apply to medications covered under Medicare Part B, which includes your expensive treatments like cancer medications. And he claims to save trillions of dollars, and this could force pharma companies to raise prices in other countries. Now this proposal is expected to face opposition from drug manufacturers because drug manufacturers previously blocked a similar plan, and they argue that it would undermine innovation, and this could give foreign government cost control over US drug costs. Just for example, if you see US Medicare prices versus peer nations, your blood clot medicine in US cost $249 versus $45 to other nations. If you see the type 2 diabetes drug called Jardiance, the cost of that drug in US is $204 versus $35 in other nations, and the Entresto drug, which is a heart failure drug, cost $314 in US versus $64 in other countries, and the Stelara drug costs $5,158 in US versus $1,502 in other countries. So this is the executive order that has been announced by Trump.
Meanwhile, the Airports Authority of India has announced the reopening of 32 airports in the northern and northwestern regions previously shut due to airspace restrictions triggered by escalated tensions with Pakistan. My colleague Sessa now joins us with further details on this development.
The government has decided to reopen the 32 airports across the country for commercial purposes after a brief closure, during the military conflict with Pakistan. This essentially means that all the airports, including those of Chandigarh, Jammu, Srinagar, Amritsar, Shimla, Jaisalmer, among others, are now operational. However, passengers can expect to face slight delays and last-minute adjustments as services gradually return to normal. Airlines including Indigo and SpiceJet have issued travel advisories informing passengers about the situation. Now, remember, the airspace and airport restrictions were put in place on May 7th, and since then there has been nearly 1,000 flight cancellations with an average of 170 to 180 cancellations per day. Now, this is just under 5% of the total number of departures, considering India's average daily scheduled departures have been between 3,800 to 3,900 since the beginning of May. Now, the fairly low rate of cancellations is because most of these closed airports, including those based in Ambala, Hindon and Jaisalmer, are also Indian Air Force stations. They don't see very high passenger traffic as many of the tier 2 airports. As far as the airline losses are concerned, analysts at HSBC have estimated a revenue loss of 17 crore for Indigo, roughly 11 crore for Air India and about 2 crore for SpiceJet on a per day basis. Now, notably, both India and Pakistan still have their airspace closed to each other, so neither can fly over the other's territory. Now, this means that Indian carriers will continue to reroute their international flights for now.
And complementing this progress, a high-level press briefing in New Delhi provided a detailed update on Operation Sindoor. Senior commanders from the Indian Army, Air Force and Navy confirmed the successful downing of a Pakistani Mirage fighter jet during the operation. The Indian Army released video evidence showcasing the wreckage, underscoring the precision of the mission. The armed forces also emphasized that all military bases, systems and equipment remain fully operational with readiness for any future contingencies. NDTV's Vishnu Som joins us now with key takeaways from the Director General of Military Operations press briefing.
An important press conference today by the Army, Air Force and Navy, making it clear in a sense that this was part 2 of what we saw yesterday. What did we see yesterday? We saw direct evidence through satellite imagery of the success of India's strikes on Pakistani air bases and military installations. Today they decided to speak about another important aspect, and that is the successful air defense of incoming Pakistani rockets, missiles and drones, which was carried out by the Indian Air Force and the Indian Army. Had this air defense operation not been successful, then there would have been considerably more damage on the ground, both at military bases and in civilian areas, which is why this was a particularly important briefing. Remember, there were concerted efforts by Pakistani forces to hit Indian military installations and to hit Indian air bases. Those have by and large been entirely unsuccessful. At a very special briefing which I was at, I was also told that very high-speed weapons, including weapons which flew at near hypersonic speeds had also been used by the Pakistanis in trying to hit Indian air bases. In this particular case of that near hypersonic speed weapon, it failed to reach its target, it fell a few kilometers short, and it failed in its mission.
And we'll continue tracking that story and bring you all of the latest developments, including the Prime Minister's address at 8 o'clock this evening. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome to this show, Know Your Company. What we're going to try to get to today is Swiggy. The numbers of Q4 were out, but more than anything, believe that a deep down analysis of this company is much warranted. November 2024, the company listed at 390 rupees per share being the IPO price. I have Mahima with me, by the way. So Mahima Vachajani who will be helping us with this. But point being, 390 being the price at which the IPO price was for Swiggy, listed at around a 5% premium to that. Thereafter, the stock is down and currently sitting at 320 rupees a piece, despite it up being 2%. today itself. Now, whether it's on the back of numbers or whether it's on the back of positivity, which in any case is reflecting in markets, is the question. But more than that, it's about understanding what Swiggy is about. Let me first start off by raising the questions which I want answered. Is competition the key risk to cash flow where Swiggy is concerned? Is this the one key piece? The second one is with regard to cash burn. How long and how much? This is the other key piece, because there is very little visibility or clarity with regard to how much of the cash burn will happen and for how long it will happen. And thereafter begs the question that if cash burn were to continue, would further fundraising actually be required? Is it worth investing in some of the new age tech companies is one of the other parameters that I'd want to understand. And competition definitely has better cash balances than a Swiggy has. And therefore, if cash is the only piece that's going to move the needle with regard to where Swiggy's business model is concerned, there is a risk. There is a larger risk compared to how competition is placed. It's also a fast evolving business environment. As the business environment changes nearly every other quarter, you are seeing Swiggy also adapt or change its business model. When you do that, there's just very little predictability as to what will come next. Forget about FY26. We are not sure about how maybe the next quarter or two will go. And if I were to value therefore Swiggy on the basis of some numbers put out in FY27 or FY28, how am I supposed to do that? Because there is just lack of visibility on what's going to play out in FY26 itself. And that's, I'm not blaming Swiggy for that. I'm just breaking it up and trying to say that if the competition has the ability to pivot its business models quickly and has the cash, then Swiggy will also have to do so. And if Swiggy has to do so, then is there a risk where Swiggy is concerned? I'm not too concerned with regard to how competition is going to survive. I'm more concerned with how Swiggy is going to play everything that's panning out in this space. And therefore, if a further fundraise is required, whether they'll prefer debt, because right now they've just eliminated all debt from their balance sheet, and two, if a further fundraise is required, are they going to further dilute equity? In which case, if you're a shareholder, likely EPS will just get pushed in terms of both growth as well as visibility. So try and understand all of these. And before that, let's try and understand what Swiggy actually does and some background with regard to Swiggy. It's obviously one of the new age tech companies. I don't think it requires much introduction, but there will be some nuances which may be new. So let's try and get straight to it. Now, when I'm talking about just about the company purely, it was founded in 2014. It listed on exchanges in November of 2024. It's pioneered on-demand convenience platform. That's what it currently plays at, but it started off as a food delivery app, or rather it was one of the competitors or one of the first players within food delivery. Zomato actually entered after it with regard to food delivery. So what you want to see is that Swiggy does have the ability to be the first mover in terms of disruptive business models. There's no doubt about that. They did that with quick commerce as well. They did that with food delivery as well. But what about sustainability? Because on both of those, they were the number one player, and now they've slid to number 3 in quick commerce and number 2 in food delivery. And it's a duopoly. They continue to give up some amount of market share in food delivery as well. I mean, different reports will quantify it differently, but Zomato does have the lead in food delivery, and that's the bottom line with regard to market share. So something, again, something to know, and along with it, some concerns that I am voicing if you're an investor, shareholder, or a possible prospective investor. So something to look at. The other thing is they're going into events and services. Now they started off saying that we're going to build this comprehensive app, which is Swiggy. But what they've started to do is now they've started to also look at building out platforms from Swiggy. So they're not only sticking to that one single app agenda, which they started off saying that they will do. They are also pivoting from what they were saying maybe 2-3 quarters ago, which is why there could be uncertainty. But that's the other piece which they've started doing, events and services. Now everyone's going into events. Zomato has picked up Paytm's events business. They're trying to drive events through that. Other services also has plenty of competition. So in each of its businesses, there's a lot of individual and bunched up competition. Individual competition may be in delivery, where you have a Zomato alone, but bunched up competition in things like events, in things like quick commerce. There's just too much competition on all the fronts that they are competing in. So something again to keep in mind. The other piece is there's some bit of inefficiency. There's higher operating costs where Instamart is concerned. This increases losses, gives a drag to cash flow as well. Company is expecting contribution margin break-even at Q1 FY27. Earlier, the goal was Q3 FY26. There's an aggressive dark store expansion drive. This could well keep a lid with regard to how cash flows is concerned. And they've added around 1,021 odd dark stores in FY25. They continue to do this dark store expansion at a fairly healthy clip. What they are now planning to do is around 60 dark stores per quarter is what they are targeting, which roughly translates to around 250 odd dark stores every year. That's broadly the guidance that's coming through. And that's with regard to, again, quick commerce. Now, in terms of Swiggy versus Zomato, look at quick commerce in terms of the growth. This is Q4 growth that you are seeing. This is purely Q4. Kind of gives you a summary that neither are taking a very large lead in either of these. You're seeing Zomato slightly behind in food delivery on the YOY basis number, but nothing material. Even on quick commerce, they're largely even Steven. They're largely there. This is again Q4. We'll look at the larger numbers as well, try and break those down, but this is how it's playing out. Mahima, you want to kind of take over and try to give us a breakdown of how Swiggy is playing out.
Right, so in terms of cash burn also, like you rightly mentioned, the Swiggy discount has gone up to almost 24% this quarter, which is in fact even higher as compared to something like a DMart, which has been a disruptor in terms of giving a higher discount when it comes to sales of your FMCG products. In terms of the overall discount last quarter, that stood at around 20% versus that of around 22% for DMart. And this has almost doubled YOY basis, because Q4 FY24 the discount stood at around 12%, which has now gone to 24%. So the previous question as to how cash burn has been already taking place. Right now Swiggy is sitting on a cash flow of around 3,300 odd basis. Will they be able to sustain going forward considering the kind of competition that is already hitting them? And will they be able to roll back the kind of discounts that they've already been giving and then be able to retain the customers or not is the likely question. In terms of the overall income statement, the overall
Mahima,
revenues also...
Apologies, before we go to income statement, I want to quickly highlight some
key competitors.
Key competitors in every space, because that's important. Let's look at firstly the food delivery space. 43% market share Swiggy, around 57 odd % market share Zomato. Then you have Magic Pay and Eatshop. Those are some of the smaller names, but broadly it's a duopoly where food delivery, core food delivery is concerned, and that's their core business. Let's now talk about Instamart. That is where competition is quite high. And let's pull out the competitors on that one. It's the quick commerce platform, operates currently in 120 cities. Those are just some of the competitors that are there. There is a Myntra now, which is starting to come through. A JioMart is coming in. Big Basket is coming in. Blinkit already has a substantial presence and a strong backing and a strong parentage with a strong backing. So all of those Blinkit has. Zepto is unlisted and therefore no pressure from public shareholders. And there's Flipkart Minutes. It's a highly competitive environment where competition, at least in the quick commerce segment, is concerned. Last off, let's talk about events. and their events as well as other services, there you have something like an so that's the ticket booking app, and there too they have competition where ticket booking is concerned from a district, from a Book My Show, and from a Paytm Insider. All of those compete for the same share and the same pie. And last off, then there are other services which also Swiggy is doing at this point. So there you go through Swiggy Ping, which does professional services. Now in the professional services space, you have an urban company, which is again large, and it only does this, and therefore it can afford to sustain some amount of burn more than others. Then you have Swiggy Snack. Swiggy Snack is the 10-minute food delivery, competes with Zepto Cafe and Bistro. All of these have a decently large-sized competition, some of them overlapping, but nonetheless, they do have quite a bit of competition. Let's list down the parameters we'll look at before I go to Mahima. Income statement will be the first parameter, balance sheet, cash flow, shareholding. We'll thereafter look at street cred, street coverage. We'll look at valuations. It's an interesting one. And last off, we'll look at outlook as well, what to expect. And for that, we're looking at the business strategy at this point. What in terms of business strategy can we expect going forward, and what has played out as of now? Going forward is going to be tough to do. So more so, what has played out till now is what we'll focus on. But Mahima, start off with the income statement.
Right. So in terms of the income statement, the overall trajectory in terms of the all four metrics that we see, that is revenue, your EBITDA, your margins, as well as your profit or loss, the overall trend has been a little disappointing. Revenue, of course, on an increasing trend from around 2,400 odd crores, it's gone to 15,200 odd crores. But at the same time, when we see, when we look at the overall EBITDA metric, the overall losses in terms of EBITDA that has gone up from around 1,300 odd crores to almost 2,700 odd crores in FY25. Now, in terms of the management guidance, they did say earlier that they will achieve contribution EBITDA level break-even by December 2025, but that guidance has now been pushed to Q1 FY27. And in fact, a lot of brokerages and analysts have come out and said that they do not expect Swiggy to come in and give a break-even in terms of contribution at EBITDA levels by FY28. So that's with regards to where EBITDA stands. In terms of the overall net loss, they've widened significantly from FY21 around 1,600 odd crores to 3,100 odd crores in FY25. This is on account of the higher losses is also on account of higher dark store addition that they've given this particular quarter. Even in terms of the overall discounting because the competition is rising has gone significantly up, which is overall impacting the losses of the company. Even in terms of the overall margins, the margins have slightly come down from 50% to 34%, but it's still far away from turning into a positive EBITDA margin. So that's with regards to where the overall income statement stands, Harsh.
Okay, so that's where the income statement stands. Let's look at the balance sheet as well. And you want to start to see improvement where the income statement is concerned. You want to see improvement where margins is concerned. But the margin improvement hasn't been solid, especially on the food delivery side. I want to quickly highlight that the margin number came in at just 2.9%, which is lower than what Zomato has done at peak, obviously. But also, you want to wait and watch as to how much this can go up by, and it's gone up by just about 40 bips on a sequential basis. You want to wait and watch how quickly can this go up. Well, currently we're not seeing a very strong inch up, so you want to wait and watch. They're continuing to incur costs on customer acquisition, which is the other key issue at this point. That's how the balance sheet stacks up. The debt is near zero and at this point, and therefore fairly okay from that perspective. But what you again want to see is how much of the cash bank balance in the balance sheet can cushion the business. That will hold the key. If cash reserves start to dry up or start to come under pressure, They will have to do a fundraise, whether they do it through a debt raise, whether they do it through an equity raise, and again, dilute equity will again start to be a problem. But Mahima, so we've done balance sheet, we've done income statement, cash flow.
Right. So in terms of cash flow from operations, it's still time where Swiggy will convert that into a positive metric. Overall, the cash flow from operations stands at a negative 2,100 odd crores as FY25 stands. The overall net cash flow is a positive number, which stands at around 360 odd crores. But the interesting part in terms of cash flow is that their working capital days overall has gone up quite significantly. It's gone up to almost 15 days versus that of negative 20 odd days in FY24. Again, this is because they have increased their dark store addition quite significantly, and for them the overall inventory also goes up along with dark store additions. So that is kind of having an overall impact when it comes to cash flow from operations in terms of Swiggy. But the management has said that going forward in Q1 FY26 they will reduce the kind of aggression that they have taken in terms of dark store addition. So overall in terms of cash flow improvement from Q1 FY26, if these dark stores, the overall average per store per order goes up, the overall cash flow from operations will also go up, considering that they will be going lesser in terms of dark store addition. So that's with regards to where the overall cash flow metric stands. How does the shareholding look, Harsh?
Yeah, that's again another big concern. On the 13th of May, you'll have 80% of Swiggy's shareholding lock-in, which is currently under lock-in expire. So you'll see some amount, I'm not saying too much, but you'll see some amount of more liquidity flow through in terms of stock. Some supply get released, which could keep the stock under pressure. Mind you, it's already been under quite a bit of pressure, but you want to see as to how that plays out on the stock price, and you'll start seeing it maybe in a day or two. So FIIs currently hold around 4.9 odd percent, just shy of 5. From the 7.8%, the DI holding is up to 9.3%. Kotak Emerging Opportunities Fund is one of those which holds and which has some stake where the DIs are concerned. And then you have around 86% public holding, but some of that is also chunky. So within that public shareholding, you have some amount of chunky holdings. I'll quickly try and elaborate. You have SVF LI, which is SoftBank, which holds around 7.5 odd percent. So you have some big investors also holding chunky quantums, which is sitting in the public shareholding. Something to keep your eye out on. But let's quickly look at street cred as well. And let me try and cover that, Mahima. In terms of how this has played out, stock is down around 25 odd percent since listing. It's down 50% from its all-time high of 617, and it's around 20 odd percent lower from its 390 rupees IPO price as well. So not looking good from an investor standpoint. Of course, that doesn't always mean it's bad, because from the listing price, while there was not much money seemingly left on the table, it was still at a sharp discount to Zomato's valuation, already listed valuation as well. I'm not talking about the IPO valuation. I'm talking about the at that point what was Zomato's valuation, and therefore we've given this a bit of a neutral, because while street cred in the near term has been extremely volatile, you still currently are sitting on just about a 20% odd of a loss if you are an IPO investor. Mahima.
Right. So in terms of the overall outlook also, there has been, an indecisive business strategy that Swiggy has overall adopted. In terms of the business diversification also, right now we're seeing that they're trying to sail into too many boats. They're and these are costly but ambitious targets that they're aiming at. In terms of over diversification in different businesses, we're seeing that they're entering into Swiggy Scenes. They have also bought in Ping, which is a professional services app. Snack is a 10-minute food delivery app. And of course, they're also moving in from their overall integrated app strategy to now building different apps for different businesses. So this is something to keep an eye on. In terms of valuations, as Harsh rightly mentioned, of course, because we are EBITDA negative right now, we have the price to sales to compare both of these counters. Slightly cheaper than where Zomato stands, of course, but Zomato right now overall on a net basis is EBITDA positive. Last quarter it did see losses, but overall slightly better in terms of where Swiggy is performing. And lastly, in terms of the overall analyst recommendations also, there are around 13 odd buys, 3 odd holds and 4 odd sells. So this is with respect to where valuations and what the analysts are expecting stands.
And why we're giving it a thumbs up also, Mahima, is that there is a 29% upside to the current market price of Swiggy. So when you're looking at what the average analyst is saying in terms of target price, the 12-month target price average as per Bloomberg estimates is 414 rupees per share. So you have some amount of upside from here is what analysts seem to be building in. But let's quickly move on. Listen in to a conversation we had with an analyst earlier. We had Shobhit Singhal, who's the research analyst at Anand Rathi Institutional Equities, who tracks Swiggy closely. And we spoke about some of the risks, especially the mounting losses, and what exactly investors should do with the counter at this point and how he's looking at valuations. Listening to that conversation.
If you see the results, so it's so FD business remains stable, but if you see the execution gap is widening between the two QC platform, right? So Instamart continues to lag Blinkit in terms of growth and incremental unit economics. So if you see the current Q4 quarter numbers as well for Blinkit, so Blinkit reported around minus 1.9% kind of adjusted EBITDA margin. Even they have expanded around 300 dark stores in this quarter, similar to what Instamart did. But if you see the adjusted EBITDA margin of Instamart, it has widened from 14% last quarter to minus 18% now. And company has also now saying that the contribution break even for QC segment will be next 3 to 5 quarters. So we are factoring in our numbers from FY28 only, not from 27, the profitability of QC segment. So there is a risk remains in this QC segment because the competition intensity is also high.
Point taken. So you are saying that likely you're being conservative and you've pushed maybe, or you've given an additional year to Swiggy to actually deliver on that number. Is that understanding correct?
All right.
Okay. And is there a high level of uncertainty of Swiggy achieving that as well, just because of how quickly the business model is evolving? I want to close this point, and that's why I try to reiterate this.
We don't believe that there is a risk remains on that front because it's already it's been now. So they are also a third player in QC segment, right? And if you see their monthly transacting users and everything, even in their dark store, so they have now reached around 1,000. So we believe that they will be a number 3 player in this segment, and they can easily achieve profitability in this segment from second half of FY27 or from FY28 onwards.
Got it. Shobhit,
so that, yeah.
So, sorry, go ahead with your point.
Yeah, so that downside risk remains low.
Okay. Shobhit, just wanted to drive home this entire point because couple of things that the management has said in their shareholders letter as well. They've said that now they will be burning less of cash. Their dark store guidance also, they've said that they'll be doing lesser dark stores Q1 FY26 onwards. All this pointing towards, a more margin accretive model. But right now, competition is hitting hard. Zepto is burning cash. Zomato as well is burning cash, and both of them are sitting on higher cash as compared to where Swiggy is sitting in. Just wanted to understand that considering the guidance that the management has given, do you think that market share loss will take place Q1 FY26 onwards?
So if you see on the competitive intensity front, so Zepto was very aggressive till last quarter, but from Q4 onwards, they have also reduced their cash burn. So earlier they used to do around 15 crores of cash burn per quarter, but that has been reduced to around 1,000 to 1,200 because even they are they are also coming out with an IPO in next 6 to 8 months. So they need to show some improvement in their operating metrics as well before IPO. For Instamart, so Q4 was the peak of their investment in terms of dark stores, etc. But from Q1 onwards, we believe that the losses should taper down, because what they are doing is that now they will concentrate on their existing cities, because they have reached around 100 plus cities. And unlike food delivery, in which they are present in 700, 800 cities, in QC, they are not planning to enter beyond 100 currently. So they will go deep down into their existing markets.
But just to
So
understand,
yeah.
yeah, just to understand, because overall, even in terms of monthly transacting users, they've not been able to cross that Blinkit mark. So do you think that this market share loss will continue for Swiggy Instamart?
So we are not saying that in QC they will gain any market share, but we are saying that they will continue to be the number 3 players. So first one obviously will be the Blinkit, second Zepto, and then Instamart, and then fifth player can be Flipkart Minutes or Amazon or Reliance Retail, etc. But the company will continue to be the number 3 player in the QC segment.
Okay, so that was a slice of the conversation we had with regard to Swiggy, and Shobit's views coming through on that one. Let's look at how our KYC ratings stack up where Swiggy is concerned. The income statement, while growth is there, what you're not seeing is the consequence of that on profitability. Balance sheet, while it's okay, if cash burn were to continue, that's the key risk on the cash flow side as well. For the moment, we're not seeing an improving trajectory as substantial as the top line growth in the income statement. We're not seeing that on cash flow. Shareholding is a neutral, because of course there's some amount of risk from the lock-in expiry that's about to come through, but you have some chunky shareholders as well within the company. Street cred is a neutral, largely on the back of the fact that your listing gains haven't come through, of course, but the stock has been extremely volatile, and therefore it's difficult to determine as to how that move has spooked the street. Street coverage is a thumbs up, because there's very, very strong coverage, and the target price upside average is around 30%. Valuations are a neutral, given that Zomato is definitely trading at a premium to Swiggy, and the business strategy at this point is just difficult to determine, because everything is moving on a quarter-on-quarter basis in terms of how the business is evolving. So lots of uncertainty. That's the best we've been able to do with regard to Swiggy, 3.5 on 5. But with that, completely out of time on this edition of KYC. Stay tuned. More action on the other side. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. We were just chuckling about something a couple of minutes back with my guests today, and I'll introduce you to them in just a minute. But if your SIP date was either on the 5th of this month or on the 10th of this month, then you will be quite happy looking at the way that the markets are starting out this week. If, however, your SIP date is on the 15th or later, then, well, you've missed out on the advantage that you could have had if it wasn't. Now, the thing about it is that seemingly, based on the AMFI data, that is the Association of Mutual Funds in India, and the data that they put out for the month of March and April, a lot of people are gravitating towards ETFs. In fact, last month, you had net inflows of over 19,000 crore rupees in other ETFs, which is primarily equity ETFs. And that told me that a lot of people are looking to buy the dip. And there is a considerable amount of money sitting on the sidelines for people to buy the dip. If you are going that route, what should you bear in mind? That's what I'd like to focus on at the start. And we'll also talk about a few other ETFs, including gold and silver. Joining me today is Prableen Bajpai, founder of Finfix Research and Analytics, as well as in studio, Santosh Joseph, the founder of Germinate Investor Services. Thank you to the both of you. And well, I know that a lot of your clients will be happy if you've told them, and I'm pretty sure you did, to stay invested over the course of the last couple of weeks. Prableen, since you're not here, I want to start with you. What did you make of this data? I'm sure that you looked at it, 19,000 crore rupees. If you pair that with the index funds, then you're very close to the net inflow in active equity schemes.
Absolutely, Alex. Amazing figures, I think. If you look at the overall data for passives in India, it is still at 17% of the overall AUM that we have. And within the 17%, Alex, roughly 75% is your ETFs and the remaining are index funds, because ETFs, get a huge backing from the EPFO money as well. So we are at 17%, but very interestingly, on the month of April, I think brilliant start to the new financial year, where we saw that the passives actually, with the ETFs leading the way, actually got huge inflows. And I think the reasons why we saw this is definitely the volatility that we saw in the month of April, because sophisticated investors who are putting in big money have, sort of gotten to understand the merit of ETFs. And I think they are the ones who definitely have taken the advantage of the volatility that we saw in the month of April, especially the dip that we saw on the 7th of April. And, second is that we have many new offerings in the ETF space as well. The overall other ETFs was about 189 schemes, inclusive, of everything in the other ETF space as on in April 2024. And it is now at 233. There is a substantial increase in the number of schemes, offerings, awareness, DMATs. And I think all of this, Alex, together has definitely, led to this rise in the month of April, which is also because there is a chance to buy during the day. So the INAV, when you're buying during the day, you can actually pick your ETF at the day's low as well. So I think sophisticated investors who are putting big money are definitely going in for the ETF option. I won't say that it is, anything to do with the huge inflow coming in from the retail segment. I think they are the ones who are actually helping to keep the SIP book, which again was really huge, the highest till now, more than 26,000 crores. That has been robust. And that is where I think the retail investors have played their part. And I think the ETFs has been broadly because of the high net worth individuals and institutions like trusts and companies as well who are putting in.
Point. Yeah, okay. And I'm pretty sure that you have that insight because you have people that you advise as well, retail investors. But Santosh, I want to come to you on another aspect, and we'll circle back to ETFs in just a bit. But another data point that I looked at is that you had net inflows to the extent of 2,000 crore rupees in sectoral and thematic. But if I looked at the breakup of gross inflows and redemptions, then it's something like a 10,000 crore rupees of gross inflows and redemptions of about 8,000 crore rupees. So seemingly there's a lot of churn in that sectoral and thematic category. One, what are you advising your clients to do to stay away from certain sectors? Because a little bit of volatility, to put things lightly.
Yes.
Right? And the IT index, for example, is up 6% today. How do you deal with that?
So the whole thematic story had a great run 2023, 2024. And when we saw the data for the number of NFOs in the year 2024, you had 70% of the NFOs coming in only from thematics.
Yeah.
Now, this is not a surprise because the market was building up for thematic expansion, because a new NFO could largely be done only in a thematic space, and there were broad themes that were doing well. Could be defense, could be manufacturing, and at some level people were also looking at a mix of 2-3 big sectors to create a theme. Come September, October, when the market started the first level of consolidation to where we are, and the consolidation turned a little bit violent in Feb and March, people realized, hey, there's no easy way to play the market, and thematics is certainly not one of them. And people paused first, and then they started consolidating.
Yeah.
So what they did was they moved away from thematic and said, if I wanted to play a theme, I rather play it in a broad-based story than just be in a theme and just worry about, will my theme play out or not? A classic example here was defense. Today, as we sit in the studios, defense is now back, and for all its difficult days it went through, it's just wiped away all its bad days. But people were spooked to see where defense unwound in just a few weeks. So then they decided, why do I have to play a thematic story? Let me play it in the diversified fund like a flexi cap or a multi-cap. And they saw the capital preservation also was better played out in a flexi cap and a multi-cap story. So thematic needed that bit of nudge to get consolidated. It could not be that thematic was going to become so big, and great way to bring about this change.
So now at this juncture, knowing what we know right now and not knowing what we know right now, what would you say you should stay away from? Or do you say that thematic as a category, considering where things are, the uncertainty about earnings going forward, all of these things that we're talking about and keep talking about, should you avoid?
See, I'll give the answer in a slightly different perspective, that thematics are great and the products are there for a certain discerning investor. Now, for the larger investor, the thematics are actually being played out in diversified equity schemes. Could be flexi cap, mid cap, why not? Mid and small cap also, it's played out there. Us jumping into products and solutions directly without paying heed to the portfolio construct is where the problem arises. And investors have learned that pretty quickly.
Sure.
So my sense is, don't chase the theme or the sector. You be invested, and the fund manager or the scheme will dynamically manage. See, the economy is changing, the sectors are changing, and the valuations that these sectors are getting are changing. If you go after one sector or one theme, you're more or less going to be left out at some point of time.
Sure. Okay, that's a good answer. Prablim, I'm circling back to the ETF chat, because I think a lot of people are buying into this idea of going passive, at least for a portion of their portfolio. And you and I have discussed this in the past in the mid-cap actively managed space. In particular, if you look at over the last 3 years or over the last 5 years, in quite a few time periods, the actively managed schemes have failed to beat the benchmark. And so therefore passive is better, particularly post-cost. But between ETF and index fund, how do you choose which to invest in?
Absolutely, Alex. I think the decision involves analysis at 2 levels. So the number one being that you have to choose between the ETF and the index fund. And then you also have to choose, let's say you decided that I have to go in for an ETF, then how do you choose between the 2 different ETFs from the same theme, amongst the different fund houses that we have. So I think four primary filters here. The number one is what is the price difference between the indicative net asset value, the INAV, and the market price. That's really important. So if an investor is going out and, you can check that on the NSE portal, that what is the market price, what is the INAV, and, what is the difference between the two. And the lesser, the better. So that is the first criteria of choosing a ETF. Second, the traded volume. Alex, that you don't want to be caught up in an ETF where there is really no volume, because when you're going to buy and sell later, let's say you buy something and then you're looking to sell it, maybe you don't get the price that you're really looking at. And again, the volume numbers are given on for example, if the ETF is listed on the NSE, it will be given. And for today, I'll just give you an example that, how it varies. So I saw 3 big Nifty 50 ETFs, and it was around noon, 12:15 in the afternoon today. That scheme A had a volume of 47 lakhs, scheme B had a volume of 3.99 lakhs, and scheme C had a volume of about 14.09 lakhs. So that's the kind of difference within the same Nifty 50 ETF that we saw. So again, this becomes really important because it guides how much liquidity is there in the ETF. And then the liquidity actually creates the problem of the hidden cost, which is there, which we call the impact cost. That will your transaction go through at the price that you're wanting? So that's the cost of execution, of a ETF. So again, for scheme A, because the volume was higher, it was 0.02. For scheme B, it was 0.07. For scheme C, it was 0.05. So these three, in these orders, I think you should go down. And the fourth one is then the expense ratio. And what happens, Alex, generally whenever we are talking about an ETF and an index, the first answer is that ETF is cheaper. So I think ETF is better. It's really not the case. For retail investors, I think, do they already have a demat? Okay, then probably they are okay with the brokerage. Do they want the automated SIP? Then probably an index fund is better. Are you able to, really choose the right ETF for yourself? That is really important. So difference between, deciding between the ETF and the index will really depend on your own psyche or what sort of convenience you're looking for. Do you want it to be totally automated? And then when you're choosing within these ETFs, then I think these four criteria are very, very important for you to be able to actually gain from buying an ETF, because there are cases in which, and I'll discuss that later, when we discuss gold, where the expense ratio of the highest ETF, the fund which has the highest expense ratio actually has the maximum volume. So, it'll be wrong to say that, you jump onto the fourth factor of expense ratio right away and then decide. But of course, the decision between ETF and index would really be a personal choice. I would say for retail investors, for SIPs, index is better. For lump sum, definitely you can look at ETFs as well.
Interesting. And ultimately, it boils down, that impact cost, as you were talking about, Prableen, boils down to the bid and ask spread. Whenever you go into a market, ultimately, if you are the seller, you will ask. If you are a buyer, you will bid, and you will get essentially a certain value. You will have to come to a common ground. And if there are less buyers and sellers, then usually the gap between the bid and ask will be larger, which I guess is the impact cost that you were talking about. But Santosh, the question then arises, if you're talking about a bit of complication when you're talking, it's pretty simple, of course, when you're going onto an application, you're buying, but then you're not factoring all of these things in. In your experience, is there a material benefit to be had to using an ETF versus an index fund? Purely from the perspective of being able to say at 12.22, I feel that the index is at the lowest point of the day and it's 3.5% lower. I will deploy at this point.
So I think Prableen did a great job in explaining those difference between index and ETF. This question that you asked is the precise reason why ETFs offer a solution to client, that during the course of the day, he feels that he wants to put money in the market, doesn't want to worry about the NAV at the end of the day, doesn't want to worry about what can happen overnight, he wants to buy it today. And the liquidity plays a big part, and especially for a large investor, the investor who's got access to the screen directly, these things are beneficial to you. So essentially, it's not about the cost, it's not even about whether it's ETF or index, because there are index on ETF and ETF on index. These things are all easily possible. But I think the benefit is that the investors got something to choose from right now, especially like today, or maybe earlier in the day, you thought the markets opened green and you wanted to buy into it. You have to wait till end of the day, see the NAV and the whole story, right? Here you bought in, and maybe you would go home before 3:30 today, seeing that some gains were already made. That is the luxury, advantage, and convenience that ETFs give to an investor, and some people are happy about it. They take great joy in getting the price right or getting at the price.
Does it even out?
Of course it evens out. In fact, if it didn't even out, then ETFs would be bigger than maybe funds and index, because the initial feeling that you get is you've done something right and you got the price right or the timing right. But eventually it gets evened out, and you'll be surprised to know that expense ratio pales in all of these comparisons, because there is no data to prove that high expense ratio or low expense ratio is contributed to higher return or lower return. I'm yet to find across a credible piece of evidence that tells me low expense ratio gave me higher return or high expense ratio gave me a lower return.
Passive?
The choice between passive, index and ETF, the category is very different, but even in passive, it's, Prableen explained, even the volumes that play out, there is that minor advantage you get. It's basically economies of scale. Now that is there for the investor depending on how you placed your order, but I think they pale in comparison.
Okay, I will get your opinion on this next part as well, but I want to start with Prableen on this. Prableen, that other ETF category you pointed out, there are several options within this, and the smart beta options have caught the fancy of a lot of investors. I just want to explain this point very simply in case you are unaware of what smart beta is. Essentially, it's a strategy in the passive space which obviously does not involve active choosing of securities from within an index. And there are filters that are applied. For example, a momentum filter is applied, or an alpha filter is applied, or a low volatility filter is applied. And there is a reset every few months, usually 6 months, and you will invest in that ETF. So hopefully I've explained it. Probably if you want to explain more, you please go ahead and do so. But in your opinion, have these strategies worked? We've gone through a micro cycle, if we can call it that, between the run-up till September of last year, the drop, and then the bounce back. How have they done?
Okay, so I think I've shared some data with you, Alex, and I'll just pick, two strategies here, just to make it easy. So number one, let's discuss the equal weight strategy. So Nifty 50 is the parent index. So bigger the company, bigger the market cap basis, you have a bigger share. Now, a simple strategy index here is Nifty 50 equal weight index, where all the top 50 companies are getting the 2% allocation. So it's like the Reliance Industries or Nestle, any large cap will get the same of the top 50 companies. So if we look at the dip from September 26th till April 7th, Nifty 50 fell by 15.5% and equal weight fell by about 17.75%. Of course, the rally now, Nifty 50 has gone up by 8.33 and equal weight has gone up by 7.44. So that's how the two indices have moved. But if you're looking at the 7-year SIP returns here, Nifty 50 has given us 13.82% returns and equal weight has given us 17.05. So that's quite a decent difference, Alex, between the two for a little variation in the strategy that has been deployed. Likewise, if you look at the Nifty 150, the mid-cap index, again, fell almost 19.5%, 20%, has moved up by close to 9%. Like today's closing, of course, it will be much higher. And the 7-year SIP has been roughly about 21.5%. And Nifty 150 momentum 50, because here the momentum filter is applied, fell much more. It fell by about 23.5%, but has been up by close to 10% as till last Friday. And SIP returns have been at 26.18%. So again, there has been, it has been more than the parent 150 index. So we have different variations. We have the alpha index, we have the quality, we have the low volatility. Not all of them have beaten the parent index, but there is a good scope to add, I think, a smart beta strategy or a strategy index, but not in addition to the core. In the sense that if you're having a Nifty 50, then you don't have to add Nifty equal weight. Or if you're having a 150, or if you're having a actively managed mid-cap fund, then you don't need this momentum. Then you have to look for the gaps that maybe you can take a beta strategy in the large mid-cap space. So you have to find where there is a gap in your portfolio and accordingly deploy. But I think one or two strategies, which are these strategy indices, definitely I think they can be there with the rise of passives and the addition of this, little alpha that they are actually giving. I think it can be a good idea, but based on the suitability of the overall portfolio.
To that, I want to get Santosh's opinion as well. Santosh, so Prableen has taken a 7-year SIP, and that also tells me that there is a longevity associated with this. We've used a pretty decent time frame to talk about this, and I know that over the last several years we've had this challenge where some of these strategies just didn't have the data. They were introduced, and so you couldn't, of course you could back test it, but you didn't have actual data. So when you're choosing between a Nifty 50, Nifty Next 50, with a lot of people gravitate towards, then you go to the mid-cap index and you go to the NSE 500 or the Nifty 500 index, and then you throw these smart betas into the mix as well. There is paradox of choice here as well. How do you choose?
Well, I think Prableen again explained it really well. Now, when you come to this, why did this come about? Because investors wanted a shortcut to success, a shortcut to getting a successful fund. And I agree again with what Prableen said, that over a period of long term and over a period of a slightly larger cycle, especially in a bullish scenario, these will play out way better than just the regular index, because there's active selection, there are rule-based filters that work in your favor. A classic example is momentum, and most people would like the name, maybe would even like the outcome of what momentum has done, but you don't know it cuts both ways. For example, the same momentum that outperformed the index, outperformed diversified funds, up until September was even doing so well that everybody thought, okay, this is my way to do better than anybody else. In the last 7-8 months, we've seen that went through a couple of cycles, and it cut both ways, where people realized, hey, I cannot blindly buy into a momentum strategy just because the past performance is good, because it happened in a bullish cycle. Two things were happening there. Number one, the momentum was in your favor in terms of the traded value. Number two, the alpha generation was happening. You know, when you mix these two, the momentum 50 or momentum 30 or 40 stocks that you did, they played really well because there was active selection and active deselection of the non-performers. That helped you do well. And when the market started falling, the guys had done well, their volumes also started falling and the performance fell. You realized that you were hit, and you didn't realize what hit you because it was the same factors going against you. So then I'll go back to the answer over here. There's no shortcut. Either you stay long enough or you understand the risk these things entail, and you to figure out, why am I buying this? So traditional diversified multi sector strategies still score over these strategies. Yes, they have an edge, especially for a discerning investor, whether you're doing a SIP or STP or you want to stagger out, they do give you an edge. But remember, it's not a shortcut.
Okay, but so then to answer the question, would you say that therefore Nifty 500 is a great place to start?
I'm glad you asked, because my favorite passive and index strategy is actually the Nifty 500, because one, I'm not a big fan of passives generally as in my personal disposition, but I like the Nifty 500. Now let me tell you why. It is the top 500 stocks in the country. Now when you talk about profit pools, I think guess would be anywhere more than 95% of the corporate listed India's profits are represented over here. By and large, the most widest institutional activity in India happens in the top 500 stocks. And when you buy the Nifty 500 from a large cap is fully covered, mid cap is fully covered, small cap is very well covered, no stress, and this is a de facto buy India strategy playing out for you. You can be an FII and it will work well for you. You can be a retail investor and it will work for you. So I'm glad you asked that question. Nifty 500 is my great strategy, especially if someone who's watching this show for the first time or someone wants to start investing in the Indian equity market, because there's a dilemma. Should I go aggressive in mid and small cap, or should I go conservative in large cap, flexi cap, multi cap? Nifty 500 is the best that you can get out there. Stay put.
Okay, Prableen, do you agree with that? Would you say that that is the best option, or do you say that diversification here as well makes sense?
No, I think Nifty 500 can be a great start, Alex, but not for somebody who's already planning to buy, let's say, a large cap index or and a mid cap index separately, because then it'll lead to a lot of duplication. But I think for those who have active funds, let's say in the large cap and the mid cap space, for them, I think Nifty 50 can be a great inclusion from the passives. So then it would complement the active strategies. So that is definitely, I would agree.
Okay, so we're running out of time, but I do want to cover this very quickly. We have a couple of minutes. Santosh, would you say that investing in gold and silver ETFs at this juncture makes sense, particularly because of the kind of changes we've seen in the recent past? The data from the last couple of months points to people pulling money off because net flows are negative in gold ETFs.
I'm happy that the last 1 or 2 months net flows are negative, because usually investors chase return. The last few months have been phenomenal for both gold and silver. The last 1 year and 2 years is staggering. People taking off money, I think at some level is a sign of maturity, that people are not buying the high but selling the high. We seldom see it. On the other hand, I don't say you shouldn't buy. I think you should buy for the right size and for the right reason and for the right time frame. If you're going to buy gold today because it's going to be a part of your portfolio and you want to keep it for strategic reasons with your portfolio, you buy, but don't chase the return. Data is out there saying that investors are selling, actually taking profits off the table, because gold never usually gives this kind of returns. 20-year, 10-year averages are at 6% and 5%, and now we're sitting at some high double-digit numbers. Very good.
Okay. Prableen, would you say that SIP is the way to go on gold, considering that you should have it in your portfolio?
Absolutely. I think, Alex, for retail investors now with the taxation becoming favorable at 12